Hey, hi guys, this is Arpita Tulsyan here. So here I am with the full-fledged revision of small chapters under GST. So before starting the lecture, I just wanted to tell you what we are going to cover in this revision video. So in your GST, this is just the index of our book. So in our GST, we know the main chapters, okay, the chapters which were there till your intermediate also, till your CA, Inter, CA, IPCC also, that was there till returns, right? Now many of the students told me that, ma'am, by the time we reach here, after that, we generally tend to, we don't pay much attention to the later theory chapters because, ma'am, we are tired. By the time we finish exemptions, ITC and all these big chapters, we are very tired. So can we leave these chapters, or ma'am, how do we go about it? So my advice is, please don't leave these chapters. Okay, these are the bonus chapters. If you get questions from these chapters, it is going to be direct question. For sure, it is going to be direct question. Yes, so I will try that in the next few hours, maybe 4-5 hours, 5.5 hours, we will try to do revision of 10 important small chapters. Okay, this index is corresponding with your ICAI study material, so you will not face any confusion. And if you're having my 4th edition revised book, then you can simply open the book and you can, start with the revision video. So starting from your job work, assessment and audit, advanced ruling, inspection, demand, liability, whatever you can see till here. Can you see from my book, chapter number 15 to chapter number 24, these are the small chapters in the book and which are important. Please don't leave these chapters. These are very important. If at all the paper is tough, these chapters are going to save you. Yes, so we will try to do maximum revision in minimum time. If you have studied this before, maybe you can listen to this revision video at 1.25 speed or 1.5 speed, or if comfortable even at 2x speed, but please do make it a point that you revise these chapters before going to the exams. Yes, so without wasting any time, let's get started with the first chapter. Yes. Hey, hi guys, let's start with a super quick revision of small chapters under GST. These are very small chapters from content point of view, but having good weightage, and the questions that you're going to get from these small chapters are going to be your direct questions. Let's start with it. Okay, the first chapter that we are starting is job work. Let's have a quick overview of this chapter. Yes, now in case of job work, there are mainly two persons. One is the principal and another person is the job worker. Okay, so principal is going to send some inputs, or principal is going to send some capital goods to the job worker, and job worker is going to do the processing on the same. When the principal is sending it to the job worker, okay, when the principal is sending it to the job worker, at that time, he can send it without any payment of tax, because this is simply sending of goods or capital goods and not selling. Okay, this is simply sending. So he can use the e-way bill and he can use the delivery challan and he can send the goods to the job worker. Job worker will do the processing on it. After doing the processing, he will send the goods back to the principal. When job worker is sending the goods back to the principal, that is considered as a supply because he has supplied the job work services. So only on the value of job work, the GST will be applicable. We have already studied in schedule number 2 of our supply chapter that job work services is considered as supply of services. So even if the job worker is returning the entire goods after doing the processing, GST at that time will not apply on the entire value of goods. GST will be applicable only on the value of job work services, because that is what the service that he has provided. Okay, another thing, the job worker is not required to get himself compulsorily registered. No, we did not study this anywhere in our registration chapter. So job worker will be eligible to get himself registered only when the threshold limit for registration gets exceeded. Yes, now the value for job work services, obviously that will be determined by the job worker. Job worker is going to raise an invoice on the principal. He will do the valuation as per section number 15 of the CGST Act. He will do the valuation. First of all, he has provided one of the service of job work, and while providing that service, he must have used some materials, etc. also. Doesn't matter. It will still be considered as supply of service only, and by using the principles of section number 15, he will do the valuation. He will raise an invoice on the principal for that. Okay, now listen, when the principal was sending it to the job worker, Yes, the principal will purchase it from someone. Principal will also purchase the raw materials and the inputs and the capital goods from someone, right? And then he will send it to the job worker. So principal can take the credit of the same. Principal can take the ITC. Principal has purchased now. So principal can take the ITC of that and then he can send it to the job worker, right? Alternatively, another method is, let's say principal is going to purchase this from a third party, and then after purchasing it from the third party, he is going to give it to the job worker. So instead of, I purchasing it from my supplier and giving it to the job worker, instead what I can do is I can tell my supplier, sir, you bill it to me. Okay, what is the principal going to say? Principal is going to tell us to his supplier, sir, you bill this inputs, capital goods in my name, but you directly ship it to my job worker so that my job worker can start the processing on it. In that case also, I hope you can recollect this and reconnect this with bill to ship to also. So here the supplier is going to bill it to the principal because the raw materials belong to the principal, raw materials or the capital goods, but the shipping is going to be done to the job worker. So in this case, can the principal take the ITC of the same? So answer is yes, the principal can take, even if the principal has not actually received those goods or services, those goods basically, then too he can take the ITC as soon as the job worker receives that inputs or the capital goods. Yes, so either the principal will purchase it and then he will give it to the job worker, or alternatively the principal will tell to his supplier to directly send it to the job worker. In both the cases, principal will be eligible to take the input tax credit of the same. Okay, even if, do you recollect we had studied one of the condition in section number 16 of the ITC chapter that ITC can be taken. ITC can be taken only when, ITC can be taken only if you have actually received those goods or services. Okay, but here even if the supplier is directly sending the inputs of the capital goods to the job worker, still the principal can take the input tax credit of the same. Okay, another point, when the principal was sending the goods to the job worker, there was no invoice required because this was not considered as a supply. We are simply sending our goods so that he can do the processing and return us back the same. So here we will not raise an invoice on the job worker of supply because this is not a supply. So ma'am, how will the goods move from principal to the job worker? So the goods will move with the help of a delivery challan. Okay, delivery challan will be issued by the principal to the job worker. We have already studied the provisions of delivery challan, and e-way bill will also be required if the conditions of e-way bill is fulfilled. One point which I want you to recollect from here is, we had studied one of the pointers in e-way bill chapter, that if the principal and job worker are situated in two different states, okay, then irrespective of the value, when the principal was sending some goods to the job worker, irrespective of the value of the goods sent, still e-way bill will be required. That was compulsorily e-way bill was required in case of interstate transfer from principal to the job worker. Yes, now there can also be a possibility that principal is sending the goods to the job worker, he will do some processing, then that job worker can send it to another job worker for further processing, that job worker can send it to a third job worker. All these things are possible in any particular business, right? So if principal is sending it to the job worker can either return it back to the principal, or that job worker can further send it to another job worker for further processing, and all these movements is going to be supported by way of a delivery challan. I hope I am very clear till here, everyone. Yes, okay. Now another point here is there is one small procedural requirement, as you can see here on the board. Can you see this? Every principal is required to file an intimation to the jurisdictional GST officer, which is going to be in form GST ITC 04. Okay, this is just an intimation which the principal is required to file with the GST department electronically about how much goods were sent to the job worker for processing, how much you have received it within the time specified. All the details about job worker is required to be submitted in this GST ITC 04, and this is generally done in two periodicity. Small people can do it once a year, that is annually, and big people can do it 6 monthly. Okay, so if your aggregate turnover of the preceding financial year, if it was up to 5 crore, less than or equal to 5 crore, then you can file it on annual basis. Like for the entire year, you can file one single intimation, and that will be after the year end, the 25th of the next month. That is 25th of the April for the last preceding year. That will be the due date for filing this. But if your last year's aggregate turnover has exceeded rupees 5 crore, then you can file it on 6 monthly basis. That is for the first half year, that is from 1st of April to 30th of September. You can file it by 25th October, that is 25th of the next month. And for the second half year, that is from 1st of October to 31st of March, you can file it till 25th of April. Okay, so this is one of the details which the principal is required to file to the GST department, intimating about how much we have sent it to our job worker, how much we have received it within the time specified, and all those things. Okay, now when the principal is sending the goods to the job worker, is the principal required to call the goods back from the job worker after processing? Definitely yes, because we are not selling it to the job worker, we were just sending it to the job worker for processing. So whenever the principal is sending it to the job worker, one job worker, two job worker, three job worker, whatever, doesn't matter, the goods or the capital goods should return back to the principal within a specified time. Okay, if we had sent inputs to the job worker, then we should receive it back within a time period of 1 year, which can be further extended by 1 more year after taking up the permission from the commissioner. Okay, normally we should get it back within a time period of 1 year, which can be further extended by 1 more year. Okay, and in case of capital goods, it should be returned back to us within a time period of 3 years, which can be further extended by another 2 years. In both the cases, for extension, we have to seek the extension from the commissioner of GST. Okay, so inputs should come back to us within 1 plus 1 year. Capital goods should come back to us within a time period of 3 years plus 2 years. Okay, ma'am, what is the benefit? Like, what if it comes within this much time? Then it is not considered as a supply between principal to the job worker, right? Because we were just sending it so that the job worker can do the processing on it. Acha, ma'am, what if we do not receive it within this much time? If we do not receive it within this much time, then it will be considered as if principal has sold those goods, as if principal has sold those inputs or the capital goods to the job worker, and it will be considered as a supply done by the principal to the job worker, and on that the principal will now be required to pay the GST. Are you understanding this? So this time period is very, very important from your exam point of view, also from your MCQ point, etc. Also, acha, now this time limit is not applicable to molds, dies, jigs, fixtures, tools. Okay, these small spare parts, etc., which were supplied by the principal to the job worker. These are petty things. Even if the job worker does not return it back to the principal, it is absolutely all right. Yes, okay, so when the principal, to conclude it, when the principal is sending the goods to the job worker, either the job worker is going to return it back to the principal within the specified time period. One more possibility there is, the principal had sent the goods to the job worker for processing. The principal can sell it further to its customer from the job worker's premises itself. Okay, means instead of calling the goods back to the principal's premises, principal can even supply to his customer from the job worker's premises. Even that is allowed. Okay, now whenever I am supplying the goods from the job worker's premises to my customer, that is not a transaction between principal and the job worker. That will be a transaction between principal and his customer. Okay, so the time of supply, place of supply, value of supply, everything will be determined as if this is a transaction between the principal, and his customer. Yes, but if you want to supply the goods, directly from the job worker's premises, then first of all, either the job worker should be a registered person. Okay, if he is not a registered person, then you will have to declare, the principal will have to declare the job worker's premises as his additional place of business. Because you cannot simply supply the goods from anyone's premises, right? So either that person should be a registered person, or you have to show the job worker's premises as your additional place of business, or if both of these cases you have not fulfilled, but you are supplying some notified goods. Okay, notified means notified by the government. In such cases, the goods can be sold from the job worker's premises to the customer directly. Yes. Okay. Now listen. Let's say I have sent some goods to the job worker. Job worker is going to do the processing on it, and then from the job worker's premises, I am directly selling it to my customer. So this is whose turnover? This will be considered as whose supply? This will be considered as a principal supply. This will not be considered as a job worker's supply. Okay. Job worker supply will be only of that job work charges, but the final goods which I am selling to my customer from his premises, that will be included in whose turnover? That will be included in the principal's turnover. Yes, please be very, very careful for it with it. Okay, and accordingly, the time of supply, place of supply, value of supply, everything will be determined by the principal as if he is directly selling the goods to his customer. Okay, now what if we are not able to receive the goods back from the job worker within that 1 + 1 year or within that 3 years plus 2 years? Then what will happen? Then it will be considered as a supply, as if the supply was done by the principal to the job worker, But ma'am, when will this be considered as a supply? What will be the date of supply? When should the principal show this in his GSTR1? So as soon as the time period expires, okay, as soon as the time period expires and we know that we were not able to get the goods from the job worker in that particular month, okay, or in that particular period, it will be considered as a supply, and in that period GSTR1 you have to show that particular transaction as a supply. Okay, but what will be the date of supply? So now here they are telling that if the inputs or the capital goods were given by the principal to the job worker, then the date when it was sent to the job worker, that date will be considered as the date of supply. Means they are going retrospective. Okay, that date when we had sent it to the job worker, that date will be considered as the date of supply. Just that you are going to show in your GSTR1 and GSTR3B now when your time period of 1 year plus 1 year or 3 year plus 2 year gets expired. Okay, and when I had told my supplier to directly send the raw materials to the job worker's premises, in such case also we should have received the goods back within a time period of 1 year plus 1 year or 3 year plus 2 year. But in that case, if we did not receive it, then in that case, the day when the job worker had received those inputs or capital goods, okay, the day when the job worker had received those inputs or capital goods, that day will be considered as the date of supply. So when I was sending it to the job worker, it will be the date when I had sent it to the job worker, that will be the date of supply. But when my supplier had sent it to the job worker, the day when the job worker had received those inputs or capital goods for processing, that date will be considered as a supply. Okay, that date will be considered as a supply. It will be assumed as if the goods were sold by the principal to the job worker on that day itself. Okay, but when are you declaring it in your GSTR1? When this 1 year plus 1 year or 3 year plus 2 year time period gets expired. Okay, so now it will be considered as if the principal has sold it to the job worker, and on that the principal will be liable to pay the GST. Okay, ma'am, what if later the job worker returns it back to the principal? Later, if the job worker returns it back to the principal, then it will be again considered as a new supply, as if the job worker has sold the goods to the principal. Yes, I hope I am very, very clear. And last one is, let's say for example, when I had given some inputs or when I had given some capital goods for processing to the job worker, there was some scrap or there was some waste that was generated from it. Okay, now there are multiple options. Let's say if there is some waste or scrap generated during processing, can we say this is a waste or scrap whose ownership belongs to the principal? Because the waste or scrap is from the inputs or the capital goods. Okay, so now if the job worker is registered and he is selling that waste or scrap, then the job worker will be required to pay the tax on that sale of waste or scrap. But if the job worker is unregistered, and if he has sold the waste or scrap, then if he is an unregistered person, he will not be liable to pay the GST on it, but then the principal will be liable to pay the GST on it. I hope I am very, very clear with this. Yes, so this was all about your job work provisions. Yes, hardly in 15 minutes we have revised the entire job work provisions. Please don't leave these small chapters. It is going to give you big marks. Yes. Okay, let's go to the next chapter now, everyone. Okay, so let's start with the next chapter, that is assessment and audit under GST. Yes, very simple chapter, very high chances that you get at least one question from this particular chapter. Again, I am telling you that is going to be a direct question if at all you get a question from here. Yes. So in this chapter, we are going to study two things. As from the heading, you can see first part is going to be about the different types of assessment, and second part is going to be about two types of audit under GST. Yes. Before we start with this chapter, okay, at the end of our chapter in our textbook, you will find a hierarchy which I have mentioned just for the purpose of your understanding. Okay, just see it from from bottom to top. Lowest level is some other officers and the superintendent. Okay, he is the lowest level authority. Above that, you have got your deputy commissioner or the assistant commissioner. Above that, you have got the additional commissioner or the joint commissioner. Above that, you have got the commissioner or the principal commissioner. Then you have the chief, that is chief commissioner or principal chief commissioner. And above that, you have got your CBIC, then the Department of Finance, and then the Ministry of Finance. This is the hierarchy. Okay, so lowest level superintendent, then the deputy or the assistant commissioner, then the joint commissioner or the additional commissioner, then commissioner, then chief commissioner. Right, this is going to be the hierarchy. Ma'am, why are we studying this? Because here, when we will do the different types of assessment, different types of authorities have got the powers to do the same. Okay, now see, first of all, whatever section numbers we are going to do in this particular chapter, that is again from your CGST Act only. We are going to start from section number 59 and we are going to go till section number 66. Okay, 59 to 66. It is very simple. Okay, let's try to understand this. Now, first of all, under GST, just like your income tax, in your GST also, we follow the concept of self-assessment. Okay, means the assessee, means the registered person will self-calculate his tax liability. He will calculate his output tax payable. He will calculate his ITC. He will set it off. He will do whatever allowances, whatever disallowances is there, and then he will arrive at his GST liability. This is called as what? This is called as self-assessment. Okay, just like in income tax also you have got your self-assessment. Similarly, in case of your GST also we have got the self-assessment. So normally, because you are filing the GST returns on your own, means you are doing a self-assessment of your liability. Okay, once this is done, this type of assessment is called as what? Means your work is done now, means your self-assessment is done. Now the ball is in the court of the department. Now the department can do different types of assessment. Okay, so this was your basic self-assessment which was given under section number 59. Now going on to the next type of assessment which is very important from your exam point of view, and that is your provisional assessment which is given under section number 60. Okay, provisional is kind of a temporary thing, right? It is not a very final thing, but it is kind of a temporary thing. Now please try to understand when will this provision apply. So whenever there is any taxable person, okay, either he is a registered person or he is a person who is liable to get registered. Whenever there is a taxable person and that taxable person is not very sure about how to do the valuation of the goods or services, whatever he has supplied or whatever he is going to supply in the future, he does not know how to do the valuation of the same, or he does not know what is the rate of tax applicable on the goods or services that will be supplied to him. In that case, he is not sure about it. So what he can do is he can fill a form, he can fill an application form, and he can submit this electronically on the GST portal or through the GST facilitation center. And in that form, he is basically making an application to the department, to the proper officer, that sir, I am not able to determine the value of goods or services, or I am not able to determine the rate of tax that will be applicable. And instead of doing a wrong valuation, or instead of calculating the tax at a wrong rate, I request you to do the valuation of this, or I request you to tell me what is the rate of tax applicable on this. So my application was submitted on the GST common portal. It was taken by a proper officer. The proper officer, what will he do? The proper officer, after receiving my application, he may ask for some extra information. He may ask me to submit some additional documents, additional books of accounts, additional information, etc. Or he can even call me to his office to ask some things about that particular valuation or the rate of tax. And then whenever my application was received by that proper officer, from that day, within a time period of 90 days, okay, within a time period of 90 days, the proper officer has to allow me to pay the tax on provisional basis. Okay, means he will tell me that please do the valuation in so and so manner, or he will tell me that provisionally please pay the taxes at so and so rate on your goods or services. So he will take, proper officer is taking a time period of 90 days to ascertain, to determine how to do the valuation and what will be the rate applicable. Okay, so he will tell me, Arpita, please start paying the tax as per so and so method or as per so and so rate. And then if the proper officer is of the opinion that this was a provisional assessment, what if when the proper officer does some final assessment, more tax becomes payable? So the proper officer, just to safeguard the interest of the department, just to safeguard the interest of the revenue, it can also tell me to execute a bond or to give a security in form of a bank guarantee. Okay, so it will first of all allow me to pay the tax on provisional basis, and it can also tell me to execute a bond or to give a bank guarantee just in case more tax will be payable in the future. Right? Acha, till now only what is completed? Till now only provisional assessment is completed. Okay, now can we say provisional assessment also needs to be finalized? Final assessment is also required to be done. So after that, now after like within a period of 90 days, his work was to do provisional assessment. He completed the provisional assessment. Everything is over. Now after that, after doing that, he will take a further time period. Okay, from the date of communication of the provisional assessment order, from that day he will take another time period of 6 months and he will complete the final assessment. Okay, he will complete the final assessment, means he has to give me a final conclusion that in future for so and so transaction, this is the way of doing the valuation, this is the rate of tax that will be applicable. Okay, so another time period of 6 months will be available to the proper officer to complete the provisional assessment, that is to do the final assessment. This original period of 6 months can be extended by another 6 months by joint commissioner or additional commissioner. So if the PO, proper officer, was not able to finish it within the first 6 months, then he can go to the JC or the additional commissioner and seek an extension. They can extend it by 6 months. If that is also not possible, then he can go to the commissioner and commissioner can extend it for a maximum period of 4 years. So 6 year plus 6 year plus 4 year. This is the total time period available to the proper officer with extensions to complete the assessments, right? And then once the final assessment is done, after that, during the final assessment also he can issue some notices on me, he can call for some information, he can call me to his office, he can ask some questions, etc. Done. Okay, and then after that, once the final assessment is done, there can be two possibilities. Either more tax will be payable as compared to the provisional assessment. See, till now I was paying the taxes on the basis of provisional assessment. Now more tax can be payable as per final assessment for the earlier transactions also. Or opposite, there can be a possibility that I have already paid tax at a very high rate. Now the tax becomes refundable. Okay, so now if the tax is payable, that is final assessment is more than the provisional assessment, then I will have to pay the differential taxes, plus I will have to pay the interest under section 50 at the rate of 18% from the date when the tax was originally payable. Okay, from the day when the tax was originally payable, means retrospectively from that day I have to start paying the interest till the actual date of payment. I will have to pay the interest at the rate of 18% on the differential tax. Okay, and if there is some tax refundable, then I will have to first apply for a refund. Okay, in final assessment order they will write that so and so tax is refundable. Then I will take that order and I will apply for refund. Okay, once I apply for refund, they will give me the refund within a time period of 60 days. If they do not give me the refund within a time period of 60 days, then they are liable to pay interest to me from the 61st day at the rate of 6% on the refund amount. Okay, that is the case in case of refund. And once all these things are settled, that whatever is the differential tax amount, if I have paid it, or whatever is the refund that I have got it, then whatever bond or security I had given, that will be released. Okay, this was the entire concept of provisional assessment. Please do try at least one question on provisional assessment from your question bank. We have it in our compiler also, but please give it a try. Okay, provisional assessment is really important from your exam point of view. Then going on to the next section, that is section number 61, very simple section which talks about scrutiny of returns. Now we already know that we would have already filed the GST returns. Yes, we would have filed our annual returns, we would have filed our GSTR 3B, etc. So now once we file the return, it goes to our proper officer. The proper officer will select certain returns and it can do the scrutiny of those returns to verify the correctness, that whatever is mentioned in the return, that is correct or not. Okay, if it is correct, no problem. If it is not correct, means if there is some discrepancy found, etc., then the proper officer will issue a notice to me and it will tell me to submit a reply to it within a time period of 30 days. Okay, either they will tell me please give an explanation to this, or they will tell if there is any differential tax, please pay the differential tax. But I have got a time period of how many days? I have got a time period of 30 days to do a reply. Now, if I do not do the reply, see, if I accept the discrepancy, then no issue. Okay, but if I do not reply, or if I do not pay the differential tax, okay, and I am not cooperating with the proper officer, then in such cases, the proper officer will take the corrective measures. Ma'am, what corrective measures can the proper officer take? So there are 4 options. Okay, there are 4 things that the proper officer can do. Either it can proceed for departmental audit under section 65, or it can proceed for special audit under section 66, or it can start with the inspection, search and seizure under section 67, or it can determine my tax, interest and penalty under section 73, 74 or 74. Yes, these are the options available with the proper officer if he does not get a proper reply for me after doing the scrutiny of the returns under section number 61. Yes, okay. Then after that, going to the next section, that is section number 62. Section number 62 talks about non-filers of return. Okay, means these people are already a registered people, but they are not filing the returns. Okay, whatever returns we have studied in the returns chapter, they are not furnishing these returns. Okay, maybe they are not furnishing the return on monthly basis, quarterly basis, or their registration have been cancelled, they have not furnished the final return, etc. Then in such cases, the first step which is taken by the proper officer is, proper officer will simply issue them a notice to furnish the return within the next 15 days. Okay, proper officer will wait for me to file the return. If I am not still filing the return, then it will issue me a notice to file the return within a time period of 15 days. Okay, if I file the return within 15 days, no problem. If I do not file this return within the next 15 days also, then the proper officer have the powers to do the best judgment assessment on it. Okay, best judgment means whatever is the information available, whatever is the data available with the proper officer, on that basis it will determine my tax liability. Yes, okay, but obviously this happened after giving an opportunity, right? So after giving an opportunity, if I am not responding to it, they can do the best judgment assessment. Okay, now what is the time limit for passing the best judgment assessment order? So for whichever financial year they are doing this best judgment, for that financial year, can we say there will be a due date for filing the annual return? For that financial year, whatever is the due date, not the actual date, whatever is the due date for filing the annual return, from that due date, within a period of 5 years, okay, means till the end of 5 years from the due date, the proper officer has the powers to pass the best judgment assessment order for that respective financial year. Okay, if the due date was extended by the department, then 5 years calculation will start from the extended due date. Okay, so whatever is the due date or whatever is the extended due date, from that day, within a period of 5 years, the best judgment assessment order can be passed by the proper officer. Okay, now see, in best judgment, what happens is proper officer gave you an opportunity, but you are not listening. Okay, you're not obeying. So whatever information he has available with himself, he will use it and he will pass the order, he will determine your tax liability, etc. First he gave an opportunity, you did not do, so he will proceed. So he will inform to the assessee that boss, you are not replying, so I am going to do the best judgment assessment. Okay, now listen, if suppose the best judgment assessment order was served on you because you did not reply to the proper officer, so the best judgment assessment order was served on you. Now once you received the best judgment assessment order, then you thought, oh god, we should have replied, we should not get into all these jhamelas, all these issues, etc. So in such cases, if the registered person, he furnishes the return within 60 days, okay, means I received the best judgment assessment order. After receiving, within a time period of 60 days, if I decide to file the returns, then the proper officer says, okay, I will withdraw the best judgment assessment order. You will have to pay the tax liability, you will have to pay the interest, you will have to pay the late fees, but I will not implement the best judgment assessment on you. Okay, provided I am doing it within the 60 days from the date of serving the best judgment assessment order. Okay, now if I do not do this within the first 60 days, but I do it within the next 60 days, Okay, but if I file the returns within the next 60 days, then also the proper officer says, no problem, pay the taxes, pay the interest, pay the late fees, pay additional late fee of 100 rupees per day from the 61st day. From the 61st day, pay the additional late fee at the rate of 100 rupees per day, and we will withdraw your best judgment assessment order. So first 60 days they gave you an opportunity. Next 60 days again they give you an opportunity. Now if till here if you are filing your return, no problem, they are ready to withdraw the best judgment assessment order. But if you do not file it even within a total 120 days time period from the date of serving the best judgment assessment order, then Goa gone. Then in such cases the best judgment assessment will be done on you by the proper officer. Yes, I hope I am very clear till here, everyone. This was the provision of section number 62, that is assessment in case of non-filer or even the best judgment assessment for non-filing the returns. Yes, then going on to the next section, last two sections left under assessment, that is section number 63 and section number 64. What does section number 63 talks about? 63 talks about assessment of unregistered person. Okay, now let's say if there is a person who is liable to get registered, okay, liable to get registered but has not got himself registered, okay, or if there is a person whose registration was cancelled, means earlier he was a registered person, now his registration has been cancelled. For what reasons? Maybe because he has contravened any provisions of the law, maybe because he was a composition person, he did not file the returns for three months beyond the due date, or he was filing the return on monthly basis or quarterly basis, but he did not file it for few tax periods, or there was a person who had taken voluntary registration but he did not start his business for a period of 6 months, or any person who had obtained the registration by willful means, etc., fraudulent means, by giving a willful mistake, by doing willful misstatement, etc. Because of these reasons, his registration got cancelled. So if his registration got cancelled, then today he is an unregistered person. But if these people, if they continue to do the taxable supply, see, now they are unregistered person, they can do the supplies, but they cannot collect the tax, right? They cannot collect anything in the name of GST. But if they are still continuing to do that, then in such cases, best judgment assessment can be done on such persons. Yes, acha. Now here, ma'am, till what time the best judgment assessment can be done? So same time period for a particular financial year, the best judgment assessment order can be passed within a time period of 5 years from the due date of filing the annual return for that financial year. Acha, ma'am, without any opportunity will best judgment be done? No. So here, whenever the proper officer comes to know that you are doing even if you are an unregistered person, but you are still doing some taxable supply, then the proper officer will issue a notice on you. To that notice, you are required to do a reply within a time period of 15 days. If you do not reply within a time period of 15 days, then the best judgment assessment will be done on you. And here there is no concept of withdrawal possible. Do you recollect in the last section, best judgment assessment order was withdrawn if you are doing it, if you are filing the return within 60 days plus next 60 days, right? But here, if you do not reply, then again Goa gone, then the best judgment assessment will be done on you. Yes, so this is applicable on registered persons or unregistered persons. Unregistered persons who are still doing the taxable supply. So their tax liability will now be determined by the proper officer by using the best judgment assessment method. Yes, then going to the next section, last section of assessment, that is section number 64, which talks about summary assessment. Okay, now summary assessment is kind of a quick assessment which is done by the department, quick assessment. Okay, now whenever the proper officer is of the opinion and he has got some evidence available with himself that there is a taxable person and he has incurred some liability to pay the tax, and we need to immediately pass an order on him. Okay, we immediately need to pass an assessment order on him without giving him an opportunity, without passing the orders under section 74A, etc. Because it is in the interest of the revenue, to safeguard the interest of the revenue, we cannot delay it further, we cannot give him opportunities, we cannot pass the 74A penalty order, etc. on him. So here the proper officer will first go to the commissioner, to the additional commissioner or to the joint commissioner. It will tell to the AC or the JC that, sir, this particular taxable person, maybe for example he can abscond the country, or he can abscond, or he can sell off his assets, etc., just to evade the tax liability. Sir, we do not have time available with himself to give him opportunities to pass a 74A show cause notice, etc. So here if the AC or JC is satisfied that yes, proper officer is correct and we cannot delay it further in passing the assessment order, so in this case, the proper officer, after taking the prior permission from the AC or the JC, it will directly pass a summary assessment order and it will upload on the GST common portal, and that will be reflected in the taxable person's portal also. That is, directly we will pass an order that so and so amount is payable for you, and if you do not pay this, then we will proceed for the recovery proceeding. Okay, but this is generally done in which cases? Where we cannot wait, okay, where the department thinks that it is in the interest of the revenue not to wait, okay, not to give, like, not to waste some time in issuing the show cause notice, because by the time we issue the show cause notice, etc., maybe that person can abscond the country, and because of that the tax department is going to suffer. So in such cases, directly the summary assessment order can be passed by the proper officer electronically, and that will be uploaded on the common portal. Okay, but in two cases this order can be withdrawn. Okay, if the AC or the JC, the additional commissioner or joint commissioner, if he is of the opinion, later he is realizing, the order which was passed by the proper officer was passed in a hurried manner and there was no need to pass a summary assessment order, then the AC or the JC suo moto, on its own motion, it can withdraw the summary assessment order, and instead it tell the proper officer to go by the route of section number 74A, that is, withdraw the summary assessment order and go by the normal procedures. That is one way when the AC or the JC realizes that it was incorrect. Or alternatively, when that taxable person comes and requests to the AC or the JC, sir, what? Only this much trust you had on me that I will run the country without paying the taxes. If the taxable person is coming to the AC and JC and requesting, sir, please withdraw the summary assessment order, I am ready to pay all the taxes, there was no need to pass any summary assessment order, then in that case, if the AC or JC is satisfied that yes, he is a genuine person, he will pay the tax and there is no need of summary assessment order, then they can withdraw this and they can go by the normal mode of recovery of taxes. That is not by selling the assets, but by issuing the show cause notices under various sections which are there. Yes, so normally summary assessment is used whenever the department thinks that there is a risk of recovery. Okay, but when the AC or JC is satisfied that no, this order which was passed by the proper officer, that was incorrect, then the order can be withdrawn. Yes, I hope I am very, very clear with this, everyone. Whatever we did here from section number 59 to section number 64, all these things talked about different types of assessment. Right, now going on to the last two types, the last part, that is the audit part, where we are going to study about two types of audit. One is departmental audit under section 65 and next is your special audit under section number 66. So let's do one by one. Section number 65. First of all, this section number 65 audit is not a surprise audit. Okay, this is a planned audit, normal planned audit which is done by the tax authorities. Okay, so who will give the permission for doing this departmental audit? The commissioner. Okay, the commissioner or any officer authorized by him can direct the proper officer that we should do audit of so and so person, either by going at its registered office or by calling that person in our department. Okay, the departmental audit is required to be done. Okay, once the commissioner has decided that audit is required to be done, either for a financial year, for a part thereof, or for multiple financial years, we can do the audit together. Once they have decided, then they will inform to that registered person also that we are going to do a departmental audit in your case, and at least 15 days in advance, at least 15 working days in advance, we have to inform to that particular person that we are going to do your audit. Okay, then after that, once we have informed him, then even the registered person will start preparing, he will start arranging for all the books of accounts, documents, etc., because he will also have to show those things to the proper officer who comes for the audit. Okay, now departmental audit, either it can be done at the registered person's premises or it can be done at the department also. Okay, anyone, whatever they will decide. right? Within how much time this audit is to be completed? So audit has to be completed within a time period of 3 months from the date of commencement. Ma'am, what do you mean by date of commencement? So either when the department has called for the books of accounts and documents and it was made available to the department. When it was made available to the department, from that day within 3 months it should be completed, or when we are doing the audit at the place of the registered person, whenever we actually went to his place and when we started with the audit that day. So either when the books of accounts were made available to the officer or when we actually started that audit, that date will be considered as what? That date will be considered as commencement of audit, and from that day within 3 months the audit should be completed. This 3 months can be extended by another period of 6 months by the commissioner if it is required. If it was not possible to complete the audit within 3 months, then the department can go and seek an extension from the commissioner, and commissioner can extend it by another period of 6 months. Okay, so now in this audit, basically they will check everything. They will check your books of accounts, they will check the documents, they will check the returns that you have submitted. Okay, they will check whether the turnover that you have disclosed is correct or not, whether you have claimed correct exemptions or not, whether the rate of tax that you have applied that is correct or not. All these things will be checked in this departmental audit. Now when they come for departmental audit or when they are doing the departmental audit, it is our responsibility that we should allow them to conduct, we should allow them to come to our premises, we should allow them to check our books of accounts and all those things. Okay, once he has completed with the audit, once the proper officer has completed with the audit, then he will prepare the conclusions of the audit, he will prepare the audit report, etc. And once the audit is completed, then within 30 days, after completion of audit, within 30 days, he will inform, he will give the copy of the audit report to the commissioner also and to the registered person also. And later, if during audit it was found that there was some tax payable, etc., then he can proceed for your section number 74A. That is, he will proceed for issuing the show cause notice for recovery of taxes, interest, penalty, etc., as per section number 74A. Yes, this was about the departmental audit that we discussed under section number 65. Please remember here, this part is very, very important. The time limit for completion of audit is 3 months from the date of commencement. What do you mean by commencement? If audit is done at the registered person premises, so whenever we started with that audit. If audit was done at the department, then whenever the books were made available to the officer, from that day it should be completed within 3 months, which can be further extended by another 6 months. I hope I am very, very clear till here. Yes, and then going on to the last section, that is section number 66, which talks about special audit. What is told in this special audit? So in this special audit, they are telling that now the nature and the complexity of the case is such. Okay, the nature of the case is such, or the case is a little complex, where the department thinks that we should take the help of a professional. Ma'am, which professional? We should take the help of a chartered accountant, or we should take help of a cost accountant, and we should appoint them to do the audit of a particular person. Then in such cases, the commissioner will appoint a chartered accountant, or the commissioner will appoint a cost accountant to do the audit of the books of accounts of that registered persons. Okay, but this is applicable only when the nature and complexity of the case is such that we need the help of the chartered accountant or a cost accountant. Maybe where they are of the opinion that whatever value is declared in the books or whatever value of goods or services is declared in the returns, that is incorrect, or maybe the ITC that he has taken, the credit that person has availed, that is incorrect. Then in such cases, they can the proper officer. Ma'am, which proper officer? At least of the rank of assistant commissioner, that is at least of the rank of deputy commissioner or assistant commissioner. They will go to the commissioner. Okay, they will take the prior approval from the commissioner that, sir, this is not within the control of the department, this case is beyond the control of the department, so we should take a professional help. So the commissioner will appoint a chartered accountant or a cost accountant for doing this special audit. Okay, now this special audit or the above departmental audit, this is irrespective of this is like, even if any normal audit was already done in your case, that is different. Okay, let's say if you have already done some income tax audit, etc., that is okay, that is different, and these audits are separate. Okay, so the commissioner will appoint the chartered accountant, the cost accountant to do the audit. Acha, the expenses of this audit, the remuneration of the chartered accountant, everything will be paid by the commissioner itself. Okay, that will not be taken by from the registered person. And these people, whenever they are appointed, they have to complete the audit within a time period of 90 days, which can be extended by a further period of another 90 days. Once the audit is completed, after that, this chartered accountant or the cost accountant, whoever is doing this audit, they will furnish the report. Okay, they will furnish the report on the basis of the report, again section number 74A can be started. That is, if there is any tax payable, then we will start issuing the show cause notice under section number 74A. I hope I am clear till here, everyone. Yes, so this was your special audit under section number 66. I hope the things are simple for you. I hope the things are manageable for you. Yes, please don't leave these simple chapters. Even if you have done it once from this revision video, it is sufficient from you. You will be able to write the answers in the exam. Don't worry about it. Yes, okay. So, can we quickly revise this advanced ruling chapter 1? Okay, entirely. Let's revise the advanced ruling chapter. Okay, then we'll go to the question answer. Yes, let's start with the revision. Now, first of all, advanced ruling authority. Okay, there are two people in this particular chapter. One is your authority for advanced ruling and second one is appellate authority for advanced ruling. Both of these authorities are formed under the SGST Act, and same authorities are taken under the CGST Act also for the purpose of advanced ruling. Okay, now here, whatever section numbers are going to come in the chapter, that is going to be from the CGST Act only. Yes, now what is the purpose of this advanced ruling? So if there is a registered person or if there is an unregistered person, if there is any such applicant who wants to understand that what will be the effect of this transaction, what will be the taxability of this transaction, etc., then either during the transaction or before entering into the transaction, it can go and make an application to the authority for advanced ruling and it can seek the advanced ruling. Yes, that is the purpose of advanced ruling. Now, which are the questions on which we can take the advanced ruling? So, there are 7 matters on which we can take the advanced ruling. One is relating to classification, like what will be the classification. Second one, this notification which was issued, is this applicable to me or not applicable to me? Then about the value of supply, then about the time of supply, value of supply and time of supply, then whether this ITC is eligible, applicable to me or admissible for me or not admissible for me, what will be the liability of me to pay the tax on the supply of goods or services, whether I am required to obtain the registration in the state or I am not required, and last one, whether this transaction will result in supply of goods or not. For these matters I can go to the advanced ruling and I can seek the ruling, but because AAR and AAR are state authorities, then in that case you cannot go for the matters relating to place of supply, right? Because we had already studied in the first chapter, place of supply can be decided solely by the central government, but because these are state authorities, place of supply matters cannot be raised before that. So if you have any issues with the place of supply matters, you can come to the consultants like chartered accountants. Okay, and similarly, which matters cannot be taken up by the advanced ruling authority? Any matter which is pending in any proceeding before the department or any matter on which order has been passed by the department, that will not be taken up by the advanced ruling authority at all. It will not interfere in between. Yes, and because these are state authorities, can we say the decision given by AAR and AAR will be applicable, will be valid within that same state only. Okay, it will be applicable to that same applicant and that too within the same state only, and they cannot give the decision on place of supply matters. Rest everything they can decide. Right, then what was the procedure if you want to go and apply for the advanced ruling? Then the applicant can go and make an application in form ARA 1 to the authority after paying the fees of 5,000 rupees each. Application goes to the authority. Authority will call for the records from your concerned officer or the jurisdictional officer and return it back once the work is done. Then the AR will examine, it will give the ROBH and then it will decide whether it should accept it or it should reject it. If it rejects it, rejection can be done only after giving ROBH, and if it accepts it, then after that it is required to pronounce a ruling within a time period of 90 days from the date of receipt of application on the basis of whatever facts is available with the authority for advanced ruling. Yes, it will give a decision within a time period of 90 days. Now, if there is a dispute between the members of AAR, then they cannot take the decision by majority. They will further give the matter to whom? They will further give the matter to the AAR, Appellate Authority for Advanced Ruling. There, if they are able to give the decision, well and good. If they are not able to give the decision, means if there is a dispute between the members of AAR also, then it will be assumed as if no ruling has been pronounced. Yes, and the case gets closed. Means advanced ruling work is done. And once the final order is passed by the AAR, then the copy of the order will be sent to the applicant and it will be sent to the concerned officer or the jurisdictional officer. Now, the applicant and the department will receive the copy of order of the authority of advance ruling. There can be a possibility that the department or the applicant, they are not happy with the order of authority for advance ruling. So in that case, they can go and file an appeal before the AAR. When they are going and filing an appeal, they can file it within a time period of 30 days from the date of receipt of the AAR's order. And this time period can be further extended by AAR by a period of 30 days, further 30 days in case of any sufficient cause for the delay. Now here we have to file the appeal form. We have to pay the fees of 10,000 each, and no fees is applicable when the appeal is filed by the department. Your appeal form goes to the appellate authority. It will check your appeal form. It will check all the signed documents that you have submitted, etc. And then it will give a decision. AAR will take a final decision. Okay, AAR will give a final decision within a time period of 90 days from the date of filing the appeal. And again, if there is a dispute between the members of AAR, then in that case, no ruling will be given because your majority does not work at all. Now, what decision the AAR can give? The AAR can confirm the AAR's order, or it can modify the AAR's order, or it can reject the AAR's and give a fresh decision. No issues in that. Yes, and whatever decision is given, whatever order is passed by the AAR, copy of that will be given to everyone. It will be given to the applicant, it will be given to the department, plus it will be given to the AAR also. Yes, now later if AAR or AAR discovers that in the order which was passed by them, if there is any mistake which is apparent from record, then that can be rectified within a time period of 6 months if it was known suo moto, or if it was brought on record by the department or by the applicant. But if because of this rectification, if the liability of the applicant is increasing, then just before doing the rectification, please give him a reasonable opportunity of being heard. Yes, and the ruling which is given by the AAR or the ruling which is given by the AAR will be applicable only on that applicant who had seeked that ruling and only within that state. Okay, this is not a case law that it can be referred widely by all. Okay, even if the case is same, even if it is ditto copy paste case, still this advance ruling cannot be used by any other person. And then what about the applicability? This ruling is going to be valid for life. Okay, till the time law, facts and circumstance. If there is no changes in law, facts and circumstance of the case, till that time this advance ruling is going to be valid to that particular applicant in that particular state. Yes, acha, later if the AAR or AAR realizes that there is that this ruling was obtained by suppressing any important facts or by some misstatements, etc., then in that case the AAR or AAR may at any point of time, it can declare that the ruling is void ab initio, right? That is, right from the beginning it is considered as void, and as soon as it is void, the department will become activated and now it will try to start the proceedings. It will issue a show cause notice on you under section 73, 74, 74A, and if by that time the time limit for issuing the show cause notice is already expired or the notice has become time barred, then they are telling that the period from when the ruling was given till now, that is the time when the ruling was declared as void, this time period will be excluded while calculating the time limit for issuing the show cause notice. And the last point was what will be the powers and procedures of the AAR and AAR. Okay, the time limit for that, the powers and procedure for that will be as if it is a civil court. Okay, all the powers of a civil court will be there with the AAR and AAR. So civil court powers will be there. Any proceedings going on before them will be considered as judicial proceedings. Plus they also have the powers to regulate their own procedure. How they are supposed to do the procedure, they can also regulate themselves. I hope I am very, very clear with this. This was all about your advance ruling. Manageable till here? Okay, so let's start with the next chapter, that is inspection, search, seizure and arrest. Yes, very, very simple chapter. Sometimes you get a direct theory question, 4-mark question from this particular chapter. So let's make it a point that if we get a question from this chapter, we will be easily able to write it. Yes, very simple provisions, very little provisions. Let's do it. Okay, so now starting with section number 67 from this particular chapter. the chapter talks about three things mainly. First one is inspection. Inspection is done of the books of accounts, documents, etc. Next thing that we are going to discuss in the chapter is going to be about search and seizure. That is where the officer can come, they can search your premises, they can see some goods, books of accounts, etc. And last one is, if you have done some grave offences, then in that case it can lead to arrest. Okay, so those provisions we are going to study here. So now let's start with the first one, that is about inspection and search and seizure. Yes, so now does the proper officer, does the GST officer have the powers to do inspection of your books of accounts, documents, etc.? Yes, why not? So the proper officers, GST law gives the powers to the proper officers that they can access any place of business, they can come and access any place of business of any taxable person, and also the place of business of the warehouse operator, or also the place of business of the transporter who is helping to transport your goods or who is helping to store your goods. They can do the inspection in their premises also. Okay, but now who will do this inspection, when will this be done, etc. So this inspection will be done by a proper officer, but that proper officer will need a authorization. Okay, he will need a written authorization from the joint commissioner or above. Okay, from the joint commissioner or above, he will need a written permission, written authorization. Only then a proper officer can come and he can do the inspection. Okay, now in which cases will the JC will give the authorization? So JC will give the authorization only when these circumstances are met. That is, if that taxable person has tried to suppress any transaction, suppress any supply of goods or services, or suppress the stock in hand, or if they have claimed ITC which is more than what they are eligible for, or if they have contravened any provisions of the act and their main intention was to evade the tax. And next cases, if it can also do, we have already studied, they can also do the inspection of the place of business of the transporter or the warehouse operator who is keeping or who is transporting my goods. So their premises can also be inspected, like their books of accounts, documents, etc. can also be inspected if we have got the reasons to believe that those goods have escaped the payment of tax, and because of this tax evasion, it is necessary to do the inspection. So if any of these five circumstances are met, then the JC and above, okay, JC and above have the powers, to give what? JC and above have the powers to give the return authorization. What will they do? They will give the return authorization, and by giving the return authorization, they are basically giving the powers to the proper officer to conduct the inspection. Okay, now inspection means what? Means they will come to my premises, they will check my books of accounts, they will check my documents, they will check all my files, etc. They have got all those powers, they will do this. Now, while doing this inspection or after the inspection is over, if they are of the opinion that we have secreted, okay, we have hidden some books of accounts, some documents, any papers, any books, goods, etc., we have secreted. Okay, why have we secreted? We have secreted because maybe that will lead to evasion of tax. So if they have got the reasons that we can, we have secreted all these things and that is leading to evasion of tax, then the department has also got the powers to do search and seizure. Till now they were only coming to our premises and they were checking our books of accounts, etc. That is, inspection was done. But now if they have got any hint that we have secreted these, then they can do the search and seizure. Now this search and seizure, again, this can be done only after taking the authorization from the joint commissioner. Okay, so inspection was also authorized by the joint commissioner or above, and this can also, search and seizure can also be authorized only by JC and above. So if they have got the reasons to believe that there are certain goods which are liable to confiscation, or we have secreted some books of accounts, documents, and even those are liable for seizure or for confiscation, then they will give the authorization and the proper officer can go and now start with the search and seizure. Yes, okay. Then about this confiscation of goods, I am not doing it here because we will be covering it separately in the offences and penalties chapter. So this section number 130, you can leave it here. I have taken it separately along with its penalty, etc. separately in offences and penalties chapter. Okay, now whenever they are coming for this search and seizure, Okay, whenever they are coming for the search and seizure, what is the powers that the officers have got? So the officer who is doing the search and seizure, they have got the powers that first of all they can enter into some premises. Okay, they can enter into such premises and they can start the search. Okay, they can start searching my premises, every nook and corner, etc. They can search for whatever documents, books of accounts, files, etc., which for which they have got reasons to believe that I have hidden it. Okay, and if it is kept in some cupboard, or if it is kept in some box, etc., and that cupboard or that box, etc., is locked, it is locked, okay, and I am not even allowing the proper officer to open it, or I am not even providing the key to the proper officer for that box or for that almirah or the wardrobe, etc., then in such cases they have got the powers that they can break open the locks. Okay, if they are of the opinion that the files are kept in so and so office or in so and so room of that particular building, then, and if that room is locked, then they have got the powers that they can break open the locks, they can enter the premises and they can search it. Yes, acha. Now, after they have got something, let's say they have conducted the search and seizure and now they have got something, so they can seize. Okay, they can seize such books of accounts, they can seize some such goods, etc. Yes, acha. Sometimes it can even so happen that whatever the proper officer wants to seize, let's say that is very bulky, that is very heavy, there are certain goods, etc., which is very heavy or it is very big in size and it is practically not possible to seize it. Okay, it is practically not possible. Let's say there are certain chemicals, certain goods, etc., which needs to be kept under a certain temperature and it is not possible to seize it. Then in that case they will detain those goods. Detain means they will tell to the owner that please do not sell these goods without our permission. Okay, means the possession is going to be with the owner itself, but the power on those goods is with the department. Okay, so these are the powers available with whom? These are the powers available with the proper officer whenever he is doing the search and seizure. And whenever we are doing the search and seizure of any goods, of any books of accounts or any documents, etc., let's say when we are taking the documents, books of accounts with ourselves, proper officer is going to take it with himself. At that time the owner can ask for, or that taxable person from whose premises it has been seized, that person can keep the copies. He can take the Xerox copy of the books of accounts, etc., with him, because now for some time he is not going to have the access. Okay, right, he is not going to have the access to the books of accounts. Now see the next one, that is what can be done with the seized goods, what will happen to the seized books of accounts and documents. So now whatever the books of accounts, documents, etc., were seized by the proper officer, so they will retain it. Once the search and seizure is physically completed, after that they will retain the books of accounts, documents with themselves till the time the inquiry, case, proceedings goes on. Till that time they will keep it with themselves, and once the work is done, once the proper officer realizes that now we no longer require these books, documents, etc., then they can return it. Okay, see, generally what happens is, first we will conduct the search and seizure. After that they will do the proceedings, etc. Then they will issue the show cause notice on the assessee. Once this show cause notice is issued, then within a time period of 30 days. Okay, after the show cause notice is issued means the work of books of accounts and documents is done. So within a time period of next 30 days, it should be returned back to that particular assessee. This is for the books of accounts, documents, etc. Okay, but what about the goods? Okay, now whatever goods were seized, that will be taken with whom? That will be taken by the proper officer. Okay, that will be taken by the proper officer. Now, if the owner says that no sir, I know you have seized these goods, but I need these goods urgently, then the proper officer will say no problem, you pay the provisional tax on this, you pay the tax on these goods on provisional basis along with the interest, penalty, etc., whatever. Once you pay the tax on these on provisional basis, we will release these goods. Yes, acha. Now, if that person does not pay the provisional tax and he does not get the goods released, then what will happen to those goods? So, then in such case, what they are telling that whenever the search and seizure is done, after the search and seizure is done, within a time period of 6 months, the notice should be issued. The show cause notice should be issued on that assessee, where we will be demanding the interest, penalty, tax, etc. The show cause notice should be issued within a time period of 6 months from the date of seizure. If show cause notice is not issued within a time period of 6 months, then all the goods needs to be returned, because now this is a mistake of the department that it could not issue the show cause notice within 6 months. So now return all the goods. Okay, and if the show cause notice was issued, if this show cause notice was issued within a time period of 6 months, then depending upon the whether the tax is paid by the assessee or not, depending upon that they will release the goods. Okay, if he is not paying the tax, then the department will sell those goods and realize the amount from that. Yes, and the time period for issuing the show cause notice can be 6 months, plus it can be extended by another period of 6 months. Yes, acha, what if the government has seized some goods, but those goods are perishable goods or those goods are hazardous goods, etc. Then in such cases, it is not necessary for us to keep the goods with us for a very long time. So what the department can do, what the government can do is, whenever they have seized any perishable goods or any hazardous goods, they can sell it immediately. Okay, they will just simply notify to the to that particular person that we are selling these goods, and the money that will be realized, money that is realized after selling these goods, that will be kept with the government as of now till the time the proceedings are not completed. Yes, so this is what we have studied for seized goods. What will happen to the seized goods and what will happen to the seized documents. Okay, now going ahead, whenever the search is to be done, okay, whenever the proper officer is doing the search, do you recollect search authorization was required to be taken? From whom were we going and taking the authorization? We were going and taking the authorization from the joint commissioner and above, right, from the joint commissioner. So generally the written authority, okay, the written permission that is given by the joint commissioner, that is nothing but a form of search warrant. Okay, a permission given by the joint commissioner to the assessee that now you can to the proper officer that now you can conduct the search. Okay, what all things should be written in the search warrant? That what violation was done by that registered person, or which premise is required to be searched, who is the name and designation of the proper officer who is going to do the search, name of the officer, name of the joint commissioner and above who has authorized this particular search. Okay, what, where and when the search warrant was issued, what is the serial number of the search warrant, what is the validity of the search warrant, all those things will be mentioned in the search warrant, and then it will be issued by the JC or above. It will be issued by the JC or above. To whom? JC or above, to the proper officer for conducting the search. Okay, then going ahead to the next provision. So basically till here what did we study was inspection was started. Okay, inspection can be done in any of these 5 circumstances as we had seen here. Inspection will be done by the proper officer in respect of the books of accounts, documents, etc. after taking the written authorization from the joint commissioner. If during the inspection or after the inspection, if they are of the opinion that search and seizure is required, so again the proper officer will go and take a search warrant from the joint commissioner and above, and they can start with the search and seizure. They can enter the premises, they can search the premises, they can seize the goods, they can seize the documents, etc. When to return it, etc. Those provisions we have already studied. Okay, then there is a theory answer. Everyone here, I'll just show it to you what is important here from exam point of view. Can you see this answer on the board? Safeguard in respect of power of search and seizure. This is basically a conclusion of all the search and seizure. So many a times you get a direct question, please write down the safeguards in respect of powers of search and seizure. So your first thing that they are telling is seized documents, goods, things, etc. should not be retained beyond the period necessary for examination. Photocopy can be taken by the person from whose custody the documents are seized. Okay, in case of seized goods, notice is required to be issued within 6 months plus 6 months. If it is not issued within 6 months plus 6 months, then we will have to return back the goods to that particular person. Okay, inventory of the seized goods is required to be made. That is, please make a list of the goods which have been seized. Then what about the perishable hazardous goods, etc.? These can be immediately sold even after the seizure. And yes, important point, different point here, that search and seizure will be conducted as per the provisions of Code of Criminal Procedure. That is, as if Code of Criminal Procedure is applicable to the search and seizure, similarly the search and seizure will be done under the GST law. And just that whenever search and seizure is done under any other law, the findings of the search and seizure is generally sent to the nearest magistrate. But here under GST, instead of sending the findings of the search and seizure to the nearest magistrate, we are going to send it to the principal commissioner or commissioner of GST. Yes, so you can get a direct question here that what are the safeguards in respect of power of search and seizure. So in that you will have to write these particular pointers by which you will get a full marks there. Yes, then after that, basic requirements to be observed during search operation. Again, this is a one-time read. I'm just telling it to you. So whenever the search is going on, okay, whenever the search is going on, first of all, valid search warrant is mandatory. Okay, without search warrant, search and seizure cannot be done. Okay, next, whenever you are going and searching some residential premises, a lady police officer is mandatory. Okay, because female can be there whenever you're going and searching a particular residence. So a lady officer, a female ladies officer should be there compulsorily. Okay, another thing is whenever we are showing the search warrant, whenever we will enter the premises, we will have to show the search warrant. So we will have to take the signature of that person whose premises is going to be searched. Okay, let's say there is a taxable person and we are searching his premises. So take the signature of that person plus take the signature of at least 2 witnesses, basically showing that yes, proper search was done in the premises. Okay, then the Panchnama of the proceedings should be prepared on the spot. Panchnama of the proceedings is nothing but the findings. What all things did we search? What all things did we find in the premises? A list of that should be prepared properly. And once the search is over, the original search warrant plus the search report will be issued to the issuing officer. Okay, it will be submitted to the issuing officer. Issuing officer means who issued the search warrant, that is JC and above. To that person we will go and submit the search report. Yes, this was not a very important provision, just you need to understand it once. Okay, then the next one, that is section number 68, which talks about inspection of goods in movement. Okay, this section we have already studied in e-way bill chapter also. So here we know that whenever there is a movement of goods happening from one place to another, okay, movement of goods happening from one place to another, and if the consignment value exceeds the particular limit, that is 50,000 rupees if you recollect, then e-way bill was required to be presented compulsorily. If e-way bill is not present, okay, if that person is not carrying the e-way bill along with him, then in that case we have the right that we can stop the vehicle in between and we can conduct the inspection during transit. Okay, and whenever the goods are getting transported from one place to another, at that time inspection can be done without a written authorization. Because here the goods are in transit. So during transit, if you want to do the inspection, obviously you cannot go and take the authorization from the JC and above. So if the inspection is being done during transit, okay, and if inspection is done during transit, then we do not require any return authority. Ma'am, during transit, if the inspection is done and if we find that these goods have evaded the tax, etc., then ma'am, what about the penalty, etc.? So that we will study separately in the offences and penalties chapter. Yes, then the next provision talks about power to arrest. Okay, power to arrest I am not doing here specifically because the power to arrest again we are going to do in prosecution chapter. Again, offences and penalties chapter, there we will do the power to arrest. So I'll just give you an overview here. So under GST also arrests are possible. Okay, under GST also arrest is possible, but whenever an officer wants to do an arrest, that arrest can be done only after taking an authorization from the commissioner, and arrest is possible only when the amount involved, okay, when the tax evasion amount involved is more than rupees 2 crore. So only when the amount involved exceeds rupees 2 crore, only in such cases arrest can be done. Okay, there is just one exception that we will study later in that chapter, that whenever we are issuing any bogus invoices, means the invoice has been issued without doing any supply, at that time even when the amount involved exceeds rupees 1 crore, arrest can be done. But in all the other cases, arrest can be done only when the amount involved exceeds rupees 2 crore. Yes, so these are the provisions, these are the major provisions, and yes, not for all the offences the arrest can be done. Okay, arrest will be done only when you have done any offence of section number 132(1) A, B, C, D. Okay, 132(1) A, B, C, D, or section number 132(2). 132(2) basically talks about subsequent repeated offences. Okay, in such cases the arrest will be done provided the amount involved exceeds rupees 2 crore. Manageable till here? Yes. Then similar answer, safeguards for a person who is placed under arrest. So whenever arrest is done, again which provisions will be applicable there? The code of criminal procedure will be applicable. Okay, now if the amount is more than rupees 2 crore, amount involved tax evasion, if that is more than rupees 2 crore but up to rupees 5 crore, then arrest will be done, but that offense will be considered as non-cognizable and bailable. Non-cognizable means arrest warrant is mandatorily required to arrest that particular person, and bailable offense means that person can be released on bail by the deputy or the assistant commissioner. But if the amount involved is more than rupees 5 crore, more than rupees 5 crore means a big offense. Okay, arrest will be done, that is the separate part, and such offenses will be called as cognizable and non-bailable. Cognizable means arrest warrant is not required. You can directly go and arrest that particular person, and non-bailable means that person cannot be normally released on bail, and but in some cases the bail can be considered by whom? Bail can be considered by a judicial magistrate. In the above point, who was granting the bail? The GST commissioner itself. But here if you want to release that, normally that person cannot be released on bail, but in some special circumstances, if we are releasing that person on bail, bail can be considered by the judicial magistrate. Okay, and here for arresting the person, arrest warrant is not required, means you can directly go to his premises, you can tell him that we are going to arrest you for so and so reasons without showing him the arrest warrant. Arrest warrant, even if you don't show him, that is absolutely all right. Yes, and once he is arrested, then he will be presented before the court. Okay, he will be presented before the magistrate. He should be produced before the magistrate within 24 hours of arrest. Manageable? Yes, so these were your arrest provisions. We will do the arrest provisions specifically in detail when we do offences and penalties chapter. Okay, next section here. Next section is talking about section number 70, which talks about, section number 70 talks about summon. Okay, summon. Now, summon is kind of a last resort. Okay, now whenever there is any inquiry, any proceedings, etc. going on, okay, and the proper officer is of the opinion that we called for the documents, we called for the books of accounts, etc., but we are not able to get a proper answer for some transactions. So the proper officer has got the powers. Okay, it has got the powers that it can summon someone. It can summon means it can call someone to its office. Okay, from that particular company, it can call someone to its office. Yes. Now, ma'am, why is this summon so special? Because this summon is generally done. This summon is generally done not to the, not to the chartered accountant, not to the representative of that person, but it is done to someone from the owner of the company or someone from the management of the company. So this is a very crucial thing where we are going to call that particular person, and after calling that person, we will tell him to produce certain books of accounts, certain documents, or we will question that particular person. All those things are going to happen in summon. Okay, acha, now who can attend this summon? So the summon can be attended either by that person or by his authorized representative also. Okay, the summon will be sent for that person. Okay, if he is not able to attend, then his authorized representative can attend that in person. Yes, acha, what if he does not attend? Then it will be considered as if he is prosecuted under the Indian Penal Code, means it will be considered as an offense. Okay, now whenever any particular person has been summoned, means the officer will issue him a summons notice where he will write that on so and so date at so and so time, please be present in my office. Okay, either you be present or you can appoint your representative also to be present along with so and so documents, books of accounts, etc. Okay, now listen, summon can be issued not repeatedly. Okay, it cannot be issued repeatedly. So it is such a tool which should be used very carefully, and whenever someone has been summoned, he should go and attend that particular summon mandatory. Yes. Acha, then I told you summon cannot be issued, should not be issued repeatedly, means when you have reached such a last resort where you are not able to gather any information from such a person, then in such cases you issue the summon. Okay, otherwise please don't use this power of issuing the summon. Then whatever time was written in that summons notice, that please be present in my office at 11 a.m. for example, if he has written that way, then we should respect the time of the other person. We should not make him wait unless it is a part of strategy. Okay, so normally you should not make any person wait, but if you feel that by making him wait, maybe he will get stressed out or maybe he will get angry and he will spit out some information, then in that case you can make him wait, but otherwise please respect the other person's time. And during this summon, you can also record the statements. Okay, you can also record the statements. Whatever that person is saying, those things can be recorded. Manageable till here? Yes, this was mainly talking about the summons. Then after that, going to the next two sections, section number 71 and section number 72. Section number 71 is very general, which talks about access to business premises. So any particular officer, whenever he wants to do any audit, whenever he wants to do any inspection, whenever he wants to do any search and seizure, etc., he has got the powers that he can take the authorization from JC and above, and he can visit your premises. While visiting your premises, he will have the access to your computers, documents, books of accounts, files, papers, etc. Whatever is there in your premises, he has got the access to the same. And after he has visited your office, he can ask for some additional information also from you, which you are required to furnish within a time period of 15 days. Manageable till here? Yes. Acha. Now, what is the duty of the persons who are present in the office? Imagine GST officer is coming and visiting. Then what is the responsibility of the other employees in your company? So responsibility of other persons in your company is to cooperate with him. Okay, produce whatever documents he has asked, whatever books of accounts he is asking, please produce that before that particular person. Okay, what all documents are required to be produced, or what all documents are we required to submit within those 15 days? So any records, documents, etc. that you are maintaining, trial balance, annual financial accounts, cost audit report, income tax report, and any other relevant record. Okay, these can be asked, these can be checked from your premises also, or later they can even ask you to submit all these information to the department. Right? And the last one is a very general section, again section number 72, that so and so officers have been told compulsorily under the GST law to assist the GST officers. Okay, that is police officer is there, railway officers are there, customs authority is there, state or union territory or central government officers are there. Okay, who are engaged in collection of GST, who are engaged in collection of land revenue, all the village officers and any other class of officers as notified by the central government or the state government. These people have to do what? They have to compulsorily support the GST officer. So whenever the GST officer is doing any search and seizure, or whenever they are searching someone's premises, doing the inspection, then the GST officers can take help of any of these people, and these people are bound to provide the help to the GST officer. Manageable till here? Yes. So these were the major provisions. In respect of inspection, search and seizure. So hardly in 25 to 30 minutes we have revised the chapter almost thoroughly. Yes. So just read it once if required and you will be done. Yes. Okay. It's done everyone. Okay, so then let's start with the next chapter, that is demands and recovery. Yes, very simple chapter. It has got one or two important, very important section also. Let's start with it. Two parts in the chapter. First one is demands and the next one is recovery. Let's start with the first one. Now, earlier we used to have section number 73 and 74 for the purpose of levying the penalty, etc. But now from the financial year 24-25 onwards, 73-74 has been removed, and now from financial year 24-25 onwards, if at all we want to levy any penalty in certain cases, then we have to follow section number 74A. Right? So now, ma'am, when is section number 74A applicable? Acha, now listen, for the earlier years, that is up to financial year 23-24, the provisions of 73 and 74 is still applicable, but that is applicable only till financial year 23-24. From after that onwards, section number 74A is applicable, but your ICAI is telling us that we don't need to study the provisions of 73 and 74, we just need to study the provisions of section number 74A. Okay, now when is section number 74A applicable? First of all, 74A is applicable whenever there is tax not paid or tax short paid, or we have taken some erroneous refund, or whenever ITC has been wrongly availed or ITC has been wrongly utilized. In such cases, the penalty will be applicable, and that too the penalty will be determined under section number 74A. Okay, but there is a particular method in which the penalty will be levied under section 74A. Let's try to understand that. So basically there was a supply of goods or services done by a particular person, but on that supply either the tax was not paid, or the tax was short paid, or some refund was taken from the department erroneously, or we have wrongly availed or wrongly utilized some amount of ITC. Then in such a case, the first thing that the proper officer will do is the proper officer will issue a show cause notice on that particular person, asking him why we should not levy the penalty under section 74A. Okay, and in the show cause notice has to be a detailed show cause notice where the tax payable, okay, whatever is the differential tax payable, that will be mentioned there, whatever is the interest payable, that will be mentioned, how much is the penalty amount leviable under the GST law, that will be mentioned in the show cause notice. Okay, and this show cause notice of section number 74A cannot be issued if the tax amount is less than 1000. Okay, if the due amount is less than rupees 1000, then for that please don't go for section number 74A. Okay, now this tax not paid, tax short paid, etc., this can be due to two reasons. Either this is a mistake, okay, by mistakenly there was some erroneous refund taken, or it can be some fraud cases also. Both the type, fraud cases as well as non-fraud cases, both are covered under section number 74A. Yes, okay, now listen. Now the proper officer, as per section number 74A, they will issue a show cause notice in which all the details will be mentioned specifically. Okay, but the proper officer may, okay, it is not compulsory, but the proper officer may also issue, okay, before the show cause notice, it can also issue an intimation. It can give an intimation to that particular person that, boss, so and so amount of tax is due, so and so amount of interest is due, so and so amount of penalty is due, why don't you pay it? Okay, why don't you pay it? This we will write where, this we will mention in that pre-show cause notice intimation, and we will give it to that particular person. Okay, and now if that person wishes, then he can pay the tax dues. If he pays the tax due, then we will not further go for the show cause notice, etc. Okay, so the proper officer may issue a pre-show cause notice intimation where he will mention about the amount due, and if the person pays the amount due, well and good, we will not at all get into section number 74A. Okay, but he does not pay the amount, but he pays the amount, or if he pays the amount partially, then in that case, now the proper officer will proceed ahead and the proper officer will issue the show cause notice for the balance payable amount. Okay, now what is the time limit for issuing the show cause notice? In case of tax not paid, in case of tax short paid, or in case of ITC wrongly availed or utilized, the time period is 42 months from the due date of filing annual return for that financial year. Okay, so let's say we are talking for a particular financial year, whatever is the due date for filing the annual return for that financial year, from this date we can issue the show cause notice within a time period of 42 months. Okay, 42 months is 3.5 years, right? 3.5 years, 36 months and more 6 months. Yes, 3.5 years. Within 3.5 years from the due date, the show cause notice for this financial year can be issued. And in case of erroneous refund, whenever the erroneous refund was granted to us, from that day within 42 months, we can issue a show cause notice. That is the time period for issuing the show cause notice. If the officer has missed the timeline for issuing the show cause notice, then the show cause notice will become time bar. That is, we cannot issue the show cause notice for that financial year. Okay, now if they have issued a show cause notice for a particular financial year, then for the subsequent financial years, the proper officer may not issue a show cause notice, but it can simply serve a statement for the subsequent financial years, and it will mention in that statement that how much amount of tax is not paid, short paid, etc. provided the dues was on the same grounds. Okay, that is, for the first financial year for which you issued the show cause notice under section 74A, because of the same reason, some tax is due for the subsequent financial years also. So we can issue what? We can issue the statements. Means no need to issue the show cause notice for the subsequent financial years. For the subsequent financial years, you can simply issue a statement. Okay, acha, ma'am, what will be written in the show cause notice? How much amount of tax is due, how much amount of interest is due, how much amount of penalty is due. Okay, now once the show cause notice is issued on that particular person, now what can happen? So now he will have to reply to that show cause notice within a time period of 12 months. Okay, maximum within a time period of 12 months, you please reply to the show cause notice, or if you are agreeing to the demand mentioned in the show cause notice, then at least pay it. Okay, so whatever he wants to do, whatever the assessee wants to do, that should be done within a time period of 12 months. Why, ma'am? Why 12 months? Because whenever the show cause notice was issued, from that day within 12 months, the proper officer will be passing a final order. Okay, he will be passing a final order within a time period of 12 months from the date of issue of show cause notice, and this 12 months can be extended by a further period of 6 months. So within this time, the proper officer will be passing the final order, means the proper officer will be determining the final liability. Yes, I hope I am very clear. So first the show cause notice was issued. Then in some cases, before issuing the show cause notice, they can give you the intimation. If you want to pay as per the intimation, please pay. Okay, once the show cause notice is issued, after that, the proper officer is required to pass the final order within a time period of 12 months plus 6 months. Now, the most important thing, that is how much is the amount of penalty. See, tax due, the department will be already knowing. Interest calculation can be done as per section number 50. Next thing that we need to find out is how much amount of penalty will be applicable under section 74A in case of non-fraud cases and in case of fraud cases. Okay, so if the tax and interest paid before show cause notice, that is before the show cause notice, that is as per that pre-show cause notice intimation, if some tax or interest was already paid, okay, it was voluntarily paid by that particular assessee, then in case of non-fraud cases, there will be no penalty applicable. But in case of fraud cases, still 15% of the tax due. Okay, 15% of the tax due, this is the amount of penalty applicable if you are paying it before issue of show cause notice. Okay, acha, what if show cause notice was issued but you paid it within 60 days? Okay, within 60 days of issuing of show cause notice, then again in case of non-fraud cases, no penalties payable, but in case of fraud cases, 25% of tax due is the amount of penalty payable. Okay, now what if you don't pay it within 60 days of the show cause notice? Then you can, if you go and pay it within 60 days of the communication of the order, means when the order was passed, remember within 12 months plus 6 months the final order was passed, from that day within 60 days you go and pay it. Then check what is the amount of penalty applicable. Then the amount of penalty applicable is 10% of the tax due or rupees 10,000, whichever is higher. Okay, or in case of IGST, it will be 10% of the tax due or rupees 20,000, whichever is higher. This will be the amount of penalty payable if you are making the payment of tax, interest, etc. within 60 days of the date of passing the order. And in case of fraud cases, can you see here, it will be 50% of the tax due. First it was 15%, then 25%, and then 50% of the tax due. And in all the other cases, which is not fitting here, see what is the amount of penalty applicable. It will be 10%, same 10% of the tax due or rupees 10,000, whichever is higher, or 20,000 in case of IGST, and in case of fraud cases, it will be 100% of the tax due. Yes, this is the quantum of penalty applicable under section 74A. I hope see, obviously if you're watching these lectures, means you have studied the provisions once and now you're revising it. So I hope you are able to recollect the provisions now while revising it. Okay, so the first step at which you paid the tax was before issuing the show cause notice. Okay, next step was after issue of show cause notice, but within 60 days you paid it. Next one, after the order was passed, but within 60 days you paid it. And in all the other cases, this is the amount of penalty that is applicable on you. Manageable till here? Yes. Okay, now see, another thing is here they are simply just telling you what will be the amount of tax, interest and penalty before issuance of show cause notice. So this we have already studied. Before issuance of show cause notice, in case of non-fraud cases, there will be no penalty applicable, but in case of fraud cases, 15% of the tax was paid as penalty. Right? Achha, and if you have paid some amount before issuance of show cause notice, okay, then later when they will issue you the show cause notice, that will be only for the balance amount. Okay, that will be only for the balance amount. Okay, then after that, once you have paid this penalty, okay, whatever is the tax, interest, late fee, penalty, etc., whatever is there, once you have paid it, please inform to the proper officer so that he will drop all the further proceedings. Yes, acha, 74A 11, I am keeping it pending. Before that, let's complete this point. Now, here, at this point, you will study again when you do offences and penalties chapter. This was the amendment that who is the proper officer to issue the show cause notice under section 74A. Okay, who is the proper officer to issue? Means who will issue the show cause notice. So, it depends how much amount of tax is due or how much amount of dues is pending. So under CGST, if the amount does not exceed rupees 10 lakh, then the show cause notice can be issued by superintendent of the central tax. If it exceeds 10 lakh but it does not exceed rupees 1 crore, then the show cause notice can be issued by deputy or the assistant commissioner. But if it exceeds rupees 1 crore, then it can be issued by the additional commissioner or the joint commissioner. Similarly, for IGST, the limits will be doubled, and accordingly you can find out who is the proper officer. Okay, but if there is CGST also, SGST also and IGST also due, then in that case, please check the limits of CGST and IGST. That is equivalent to this column, this last two columns are same. Okay, so when you are within these limits, then accordingly so and so person will be acting as your proper officer. Okay, so these are the proper officers who have got the right, to issue the show cause notice. Manageable till here? Yes, and then going on to the last one, that is section number 74A11. What does 74A11 talks about? 74A11 talks about a totally different case. It is a totally different case. Let's say if you have collected something from the customers. Okay, if you have collecting some amount from the customers in the name of tax. Okay, if you have collected something in the name of tax, then you have to go and deposit it with the government. If you have not deposited it with the government within a time period of 30 days from the due date. Okay, 30 days from the due date, if you have not deposited it with the government, then you will be liable for a penalty equal to 10% of the tax due or 10,000, whichever is higher. In case of IGST, it will be 10% of the tax due or 20,000, whichever is higher. Okay, for this case, that is self-assessed tax. Suppose if there is non-payment of self-assessed tax. Now, ma'am, what do you mean by self-assessed tax? Self-assessed tax is that tax which you have agreed it in GSTR 1. Okay, in GSTR 1, you have shown that amount as tax. Okay, you have shown that amount as sale, but you have not paid it. Okay, but you have not paid it while filing your GSTR 3B. That is your self-assessed tax. So if you have not paid that self-assessed tax, or if you have collected something in the name of tax but you have not paid it to the government within how many days? Within 30 days from the due date, then a special penalty, overriding penalty of section number 74A11 is going to become applicable. The amount of penalty will be 10% of the tax due or rupees 20,000, whichever is higher, but this is applicable only in case of non-fraud cases. Okay, if it is going under fraud cases, then please go and apply the normal penalty under section 74A, that is other cases. Okay, but if it is a non-fraud case, then please go and apply only section number 74A11. Yes, so whenever you are not paying the self-assessed tax, or whenever you are collecting something in the name of tax but you are not paying it within 30 days from the due date of the payment, okay, whatever is the due date for that particular month or that particular for that period, if you are not paying it within 30 days, then you will be straightaway liable for penalty under section 74A11. Okay, here that provision of paying within 60 days of the show cause notice, paying within 60 days of the order, that provisions are not applicable because 74A11 is the overriding provision. So in these two cases, that is non-payment of self-assessed tax or non-payment of tax collected, in these two cases, you have to specifically apply the provisions of section number 74A11. Manageable till here? Yes, okay. Then going on to the next section, that is section number 75. Okay, in 75, just they have spoken about some general provisions relating to determination of tax. Okay, now listen, whenever the show cause notice was required to be issued within 42 months under section 74A, or whenever the final order was required to be passed within 12 months plus 6 months, during that time, if there was any stay order by any court or tribunal, then whatever was the period of stay, that much extension you are going to get. That is one of the pointers here. Acha, suppose 74A order was passed on a particular person and that person has now gone for an appeal. Okay, and it was decided in the earlier order that it is a fraud case. So you do not agree that it is a fraud case. So you go and file the appeal, and in the appeal the decision is changed in your favor. That is, they have decided that yes, tax, interest, etc. is due from you, but this is a non-fraud case. So can we say because of appeal, if your answer is changing from fraud case to non-fraud case, can we say the amount of penalty is also going to change? So whatever is the revised amount of penalty, now you are required to pay the same. Okay, and whenever during appeal if the decision has been changed, then the proper officer is required to issue a revised order, revised demand order within a time period of 2 years from the date of communication of this direction. That is, whenever the appeal was disposed of. Okay, after that the proper officer will issue a revised demand order within a time period of 2 years. Yes, acha. Then another thing, suppose if in appeal, if the decision is reversed, okay, or if the decision is going against me, then first an opportunity of being heard will be given if any adverse decision is taken against the taxable person. Yes, acha, whatever is the order which is being passed, okay, whatever is the adjudication order or whatever is the demand order that is being passed against that particular person, against that assessee, that should be a speaking order, that is, it should be a detailed order. Okay, and whatever is written in this final order, that should not differ from the show cause notice. Okay, whatever tax was demanded from you under the show cause notice, nothing more than that can be demanded in the final order. Okay, similarly, interest amount also, in whatever manner the calculation was done in the earlier or in the show cause notice, similarly, that much amount of interest should be due from you now. Acha, suppose if it happens that by going into appeal, the tax amount itself changes. If the tax amount changes, then interest amount will also change and then the penalty amount will also change. So accordingly, the revised demand order will be required to be passed there. Yes, and another very, very important thing here is whenever you are imposing the penalty under section 73, 74 or 74A, which is applicable now, no other penalty for the same offense should be imposed again. Okay, no other penalty. So if 74A is applicable, penalty under any other section for that offense cannot be levied. Yes, then going on to the next section. Now all the sections are very, 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 very small from here. Section number 76 talks about tax collected but not deposited. We just now studied about it. So if the assessee is collecting something in the name of tax, then you have to deposit it with the government. Okay, if you are not depositing it with the government, then the proper officer, if he comes to know about it, he will issue a show cause notice on you. And for issuing this show cause notice, there is no time limit applicable. If for section 74A there was a time limit applicable, na 42 months. But when you are issuing the show cause notice for tax collected but not deposited, for this purpose, they can issue the show cause notice on you and there is no time limit for that. Acha, now if you have collected something in the name of tax and you have not deposited it with the government, now you are required to deposit it. Plus on that you are required to pay the interest also. Interest will be calculated at the rate of 18% from the date when it was collected till the date when it is paid to the government. For this period you will have to pay the interest also. Are you clear with this? Yes, and whenever the show cause notice was issued, from that day within 1 year, the final demand order or the final adjudication order will be issued by the proper officer. And in this case, what is the penalty applicable? In this case, the penalty applicable will be of section number 74A 11, that is 10% of the tax due or rupees 20,000, whichever is higher. Do you recollect? Tax collected but not deposited. Penalty will be applicable when? Penalty will be applicable if the amount is not paid within 30 days from the due date of such payment. Yes, and now whatever amount the government is collecting, okay, whatever amount the government is collecting from you, that will be credited to the consumer welfare fund or it will be refunded back to the person, to the customer who had borne the incidence of this tax. So if you are able to trace the customers from whom this tax was wrongly collected, if you are able to trace, please return this amount back to them. If you are not able to trace, then such amount will be credited to the consumer welfare fund. Yes, next section number 77 is very, very simple. Here they are telling that if you have considered you are a normal person, you are not a defaulter person, but there was a mistake that has happened from your end, that is, instead of showing some transaction as interstate supply, you have shown it as intrastate supply or vice versa. Means you have collected the taxes properly, you have collected the taxes but under the wrong head. Okay, let's say I have collected CGST and SGST, means I have considered the supply as an intrastate supply. So can I say I would have paid it by showing it as CGST and SGST? But later it is determined that this was not a intrastate supply, but this is the interstate supply. Then can we say IGST should have been collected and IGST should have been paid? So here the government is telling, okay, so it is not a very grave mistake. So what is the government telling? That no problem, please now deposit the tax under the correct head. Okay, whatever is the correct head, that is under IGST, please deposit the tax under this correct head, and after depositing the tax under this correct head, then you can go and take the refund of the tax which was wrongly deposited. Did you understand? And in this case, there will be no interest applicable. Why there will be no interest applicable? Because did we do any tax evasion here? No. The only mistake that we did was tax was deposited under the wrong head. So government says no problem. If you have deposited the tax under the wrong head, go and pay the tax under the correct head and take the refund of the wrongly deposited tax. Manageable till here? Yes. Okay, then the next section talks about recovery proceedings. Okay, section number 78 and 79, that talks about the recovery proceedings. Okay, recovery proceedings is very crucial. Okay, it is very crucial. Why? Because see, generally what happens is the department will first issue the show cause notice. Okay, then if you are able to reply to the show cause notice satisfactorily, then it is over. But if you are not replying to the show cause notice, or still there is some tax due, then it will pass the adjudication order on you. If you are not paying the tax as per the adjudication order also, then in that case, now the department is going to start with the recovery proceedings. Okay, so whenever the final demand order was issued on you, after that the department will wait for a time period of 3 months. Okay, it will wait for a time period of 3 months. If you are not paying it within the first 3 months, then it can start with the recovery proceedings. But sometimes it can so happen that they will even start for the recovery before 3 months. If they are of the opinion that maybe this person will abscond, leave the country, etc., then they can start the recovery before 3 months also. But normally they will start with the recovery procedures only after a period of 3 months. Okay, and your dues amount can be recovered from your distinct persons also. Okay, who are situated in same state or who are situated in other states, they can recover the amount from them also. And otherwise, what are the other methods of doing the recovery? They will sell your, whatever is the refund due to you, they can deduct from that. Okay, or they will sell the goods, or they will apply the garnishee proceedings. Garnishee proceedings means the department will go and recover it from my debtors. Can I say my debtors means the person from whom I am required to receive the money? So the department will directly go to my debtor and recover the amount from that. Or the department can seize and then sell my movable property or my immovable property. That property will be sold and then they can recover the money. Okay, then the proper officer can prepare a certificate and send it to the collector of the district. Collector of the district will help us in recovering that amount. Or a fine can be imposed, or a court order can be passed, or a recovery can be done through a surety, that is through the guarantor the recovery can be done. These are the different manners in which the money can be recovered from you if you yourself are not paying the amount to the department within a time period of 3 months from the date of issue of the order. Okay, but here there was one of the instruction. Okay, there was one instruction given by the CBIC. Okay, one instruction was given by the CBIC to the GST officers that please don't directly start with the recovery. Okay, first try till you succeed. First try to recover the amount by using the other provisions. If you are not at all able to recover it by any of the other provisions, then only go for recovery. Otherwise, just because you have got the powers to do the recovery, please don't start with the recovery. Okay, then after that, section number 80, important section. Section number 80 talks about payment of tax and other dues in installment. Okay, now listen, whenever a notice is issued on you in which tax is there, interest is there, penalty, etc. is there, and you are required to pay it. Okay, so you agree to pay it. You agree to pay it to the department. Okay, but you tell to the department, sir, I do not have the money to pay the full amount in one go. So, sir, can you please allow me installment facility for payment of this dues? So the commissioner can give the powers to the proper officer, and it can give the permission to collect that amount in installment, but maximum, how many installments? Maximum 24 monthly installments. Okay, so you have to pay the amount maximum within 24 monthly installments, and that will be a tax also, interest also, everything taken together will be divided by maximum how many months? By maximum 24 months. Okay, but if at all there is delay in payment of one installment also, then the further installment facility will be withdrawn, and then you will be required to pay the tax immediately. Okay, so you have to be very, very careful if you're taking this installment facility, that you have to pay that amount, you have to pay that dues sincerely. Yes, there are some more cases where installment facility is not allowed. Okay, if that person has already defaulted for payment of any amount for which recovery is going on, okay, means already there is some default done and already recovery is going on, then in such cases that person should not be allowed the installment facility. Okay, or that person was denied this installment facility in the last year. Okay, because of some XYZ reasons, that person was denied the installment facility in the previous year. Yes, in such cases now also you will not get any installment facility. And the last one, when the total amount due is less than rupees 25,000. If it is less than 25,000, then the department says, what? For this amount also, do you want 24 monthly installments? Even if you say yes, then still the department is not going to give it to. Yes. So basically, in all the other cases where the amount of tax due is more than or equal to 25,000 rupees, and we have never defaulted in payment of tax to the government, but now we need the installment facility, so you can go and apply to the commissioner, and the commissioner will allow you to pay the amounts in maximum how many installments? In maximum 24 monthly installments. Yes, okay. Then the next one talks about section number 81. 81 talks about transfer of property to be void. Okay, now let's say recovery proceedings have been started against a particular person. That is, his assets will be sold, his movable property, immovable property, etc. will be seized. So what will the person try to do? He will try to transfer that property immediately before starting the recovery proceedings. Okay, maybe I will give it to my related person, or I will give it to my spouse, etc. Why will I transfer it immediately to my spouse or my children or my parents, etc.? Because I want to get rid of this liability. Okay, because I don't want them to seize my property, so I am just selling it to my related persons for inadequate consideration, maybe for zero value, maybe I am showing it as if I have gifted it to them. So the department is telling that such a transfer will be totally considered as void. Why such a transfer will be considered as void? Because what was the purpose? Why did you transfer this property to your related person? You transferred this property to your related person because you did not want to pay the liability out of this asset. So, but what if you have transferred the asset for adequate consideration? If you have transferred the asset for adequate consideration, then no issues, right? Then no issues. Then means it is a genuine transfer, right? And whenever there is any GST due, okay, whenever there is any GST due, it is going to have the first charge on the property. Okay, you must have heard about first charge on the property, first mortgage on the property, second mortgage on the property. So GST dues are going to have first priority at the time of insolvency, liquidation, etc. Yes, then the next last two sections, that is section number 83 and 84. 83 talks about provisional attachment to the property. Okay, provisional attachment, that is when the department is of the opinion that maybe this person will sell off the assets and then the department will not be able to recover the money. Then the commissioner can by order in writing attach provisionally any property including the bank account. What do you mean by provisional attachment? Provisional attachment means owner is still that person, okay, possession is also with that person, but that person cannot deal with those assets. Okay, that person cannot deal into those assets, that person cannot sell that asset without taking the permission from the department. But whenever the commissioner is doing this provisional attachment, it will have a validity of only a period of 1 year. Okay, only a period of 1 year. That is, if you want to, by doing the provisional attachment, means now the department is safe that at least this person will not sell that property. So whatever order, etc., the department needs to pass, everything should be done within a time period of 1 year at a time. right? And the last one is section number 84, where they are talking about continuation and validation of certain recovery proceedings. Now let's say recovery proceedings were going on against you, okay, against a particular person. They were trying to recover the assets, okay, but now then you took the case into appeal. Okay, if you are taking the case into appeal, and let's say by taking into appeal, if the dues are enhanced, then in that case, can we say now more amount will be recovered from you? So they are telling that, so here what are they telling, that without the service of any fresh notice, the proceedings, the recovery will be continued from the earlier stage itself. Means whenever the dues are enhanced, you need not issue a separate demand notice for that. Okay, and similarly, whenever the dues are reduced, okay, then the department will recover as per this revised order. Okay, this is what mainly we had to study in the section number 84. Manageable till here, everyone. Simple chapter. Yes, in half an hour we have tried to revise this entire chapter. What is important here is section number 74A is specifically important. Within that also 74A subsection 11 is specifically again important. Yes, then how to do the recovery of tax, that is important. Do the selective section so that you will be safe. Yes, okay, so with this we are done with our demand and recovery chapter. Let's go to the next one now. Okay, let's start with the next chapter, that is liability to pay in certain cases. Okay, very simple chapter, very small chapter. Sometimes you get question from this particular chapter, but it is simple. Okay, now what are we going to study in this chapter? That is different circumstances. Let's say whenever there is a amalgamation of two or more companies happening, whenever there is a liquidation of company happening, whenever there is a demerger happening, whenever there is a change in constitution of a partnership firm happening, whenever there is a partition of HUF happening, then in such cases, who will be liable to pay the GST dues? Okay, that we are going to study in this chapter. Different circumstances have been stated here. So here, let's start with the first one. Whenever there is a transfer of business happening, okay, whenever there is a transfer of business happening, or whenever there is a change in ownership from one person to another person happening, or whenever there is any sale of business by way of gift or any such thing happening, then in such cases, who will be responsible to pay the GST dues? Okay, so now can we say there will be a particular date when this event has happened? So whatever the liability arises, okay, whatever is the GST liability which arises after that event, that is a new liability. So for that, the new person will be responsible. That is not an issue. But what about the old liabilities? Can we say for the old period, the liabilities can arise in the new period? For the earlier financial years, we can receive the notices in the new year, that is after the event has happened. Yes, so for that liability, who is responsible? So they are telling that whatever was the liability before transfer of business, see, after transfer of business, only the new person will be liable, that is the transferee will be liable for that. Okay, but what about the old liability? For the old liability, both of them will be jointly and severally liable, that is the transferor as well as the transferee will be jointly and severally liable. Okay, even if it was the old period liability, then too the transferee is also liable. Okay, please be careful about this. Okay, another point, in case of agent and principal. In case of agent and principal, do you recollect our schedule 1 para number 3, where the agent was issuing the invoice in his own name, then that was considered as a deemed supply. So any transaction that was taking place between principal and agent, even that was considered as a supply on which the GST was payable. So in that case, can we say normally the supplier is liable to pay the GST? Whoever is doing the supply, that person will be liable to pay the GST. Let's say if the agent is the supplier, and if agent is not paying the taxes, then they are telling that agent as well as principal will be jointly and severally liable to pay the tax on such goods. Okay, so whenever agent and principal are coming into picture, both will be jointly and severally liable. Okay, then after that, in case of amalgamation or merger of two or more companies, okay, whenever two or more companies are getting merged or whenever they are getting amalgamated, now first of all there will be an effective date. Okay, there will be an effective date from which they want to do their amalgamation. Okay, but later, let's say NCLT approved their amalgamation on a later date. Okay, NCLT's approval came on a later date, but the effective date was the earlier date, and NCLT has approved it with retrospective effect from this date. So now here, what are they telling us here is, see, after the NCLT has approved it, after that the amalgamation and the merger will become effective. But what about this period? What about this period? Our company had already considered as if the amalgamation has happened, but we were still waiting for the NCLT's approval. Now, during this period, if there is any supply of goods or services between these two companies, okay, means intra the company, that is within these two companies, if there was any supply of goods or services between each other during this period, then they cannot say that no, we have supplied to the same person, we two companies are the same person, because now we have got amalgamated, so there will be no GST. No, you cannot say it this way. For this period, if there is any supply happening between these two companies, then it will be considered as if it is an individual supply done by respective companies, and that respective company will be paying the tax on it. Okay, let's say for example, A and B company, A company and B company are coming together and forming AB. Now, during this period, if there is any supply between AB, then it will not be considered as one company, because amalgamation is going to be effective, okay, only after the NCLT's approval. So if there was any supply done from A to B or B to A, then it will be included in respective company's turnover, and respective company will be liable to pay the tax on it. Okay, please try a question. There is a question in our RTP of May 26 exams. Please try a question on that. It can come in your examinations. Yes, then after that, going to the next one, that is in case of liquidation. That is whenever a company is getting liquidated, maybe because of a court or a tribunal's order, etc. Then in such cases, first of all, a liquidator is going to be appointed, right? A liquidator gets appointed. As soon as the liquidator comes into picture, within 30 days of his appointment, okay, within 30 days of his appointment, he will go and inform it to the commissioner. Okay, he will go and inform it to the commissioner that sir, I have been appointed as a liquidator. If there are any GST dues of this registered person, please tell me, so that I can keep that much amount aside for paying the GST dues. So the commissioner will determine whatever is the tax liability due from such company, and it will inform it to the liquidator within 3 months. Okay, so first the liquidator will inform to the commissioner and within 30 days, and then the commissioner will further inform it to the liquidator within 3 months that so and so is the liability due. Okay, and you must have studied in different laws that tax dues are priority. So whenever the liquidator is going to sell off the assets of the company, on priority basis, he will keep some amount aside for paying the GST liability. Okay, acha, in case of public company, in case of public company, if the amount is insufficient, if the assets are insufficient, then no problem, then like there will be no dues that will be paid personally by the directors of the company. But if it is a private company, if a private company is getting liquidated here, okay, and if the assets of the private company is falling short to pay the GST liabilities, then the directors of the company will be jointly and severally liable to pay that GST liability. Okay, but this is applicable only in case of a private company and not in case of a public company. Okay, so in a private company, if the assets of the company are insufficient to pay the GST dues, then all the directors of the company will be jointly and severally liable for that liability. But if some director proves that, sir, this liability was not due to my mistake, it was not due to my misfeasance, it was not due to my fraud, it was not due to my negligence, etc., then the commissioner may exempt that director from contributing for the liability. Yes. So this is what we studied for directors of a private limited company. Acha, but what if a private limited company gets converted into a public company? Then the directors will not be jointly and severally liable from the date of conversion. Okay, so whatever was the liability till conversion, for that period they will be liable jointly and severally, but after that they will not be liable. Acha, but what if there is a personal liability on the directors of the company? Means some director of the company is held personally liable, not because of the company's mistake, but because of the director's mistake, then the director will have to pay that amount from his own personal assets. Yes, okay. Then after that, similarly, in case of a partnership firm or in case of a LLP, in case of partnership firm or in case of LLP, whenever there is a retirement happening, okay, whenever there is a retirement happening, at that time, whoever is the retiring partner, that person is required to inform to the commissioner that he is going to retire, and he has to inform it within 1 month from the date of his retirement that he is going to retire. So once he intimates it, then his liability gets restricted till the date of retirement. Okay, then he will not be liable for any liabilities which are arising after the date of retirement. But if he does not inform, then his liability will continue till the day he goes and informs it to the commissioner. Okay, so this, in case of retirement, the retiring partner has to be very careful. He will have to inform it to the department that he has retired from the firm within a time period of 1 month from the date of his retirement. Okay, then similarly in case of guardians, trustees, etc. Example, in case of a minor, generally a guardian acts on behalf of a minor, or in case of a trust, there is a trustee who acts on behalf of a trust. So when till the time their contract is going on, till the time I am a guardian, till the time I am a trustee, till that time I will be responsible for all the liabilities. But as soon as the contract of the guardian or the trustee gets over, then the main person will be responsible and not the guardian or the trustee. That is given here. Okay, then after that, liability of court of wards, etc. Now generally in case of insolvencies, or generally in some cases, there is an official trustee or there is an official receiver who is appointed to manage the assets of a particular person. Let's say there is a court order on a particular person, and court says that you cannot deal with your assets, but only your official assignee or only a manager will be appointed, only he can deal. So if there is any tax liability arising in case of this person, then that tax liability has to be met by that official assignee or the official receiver, because he is handling my assets, right? Acha, then in some special cases, who is going to be liable? Now let's talk about a deceased person. Okay, if there was a person who has deceased individual, okay, sole proprietor, let's say for example, and that sole proprietor has passed away now, and if his business is going to be continued ahead, then what about the old liabilities? So old liabilities will be paid by the person who is going to continue his business. But what if his business is going to be discontinued because that person has passed away? Then can we say that sole proprietor's assets would have gone to his legal hire, or his assets would have gone to his legal representative? So whatever was the old liability of that sole proprietor, that will be paid out of the assets which were inherited by the legal representative, but only up to the extent of the estate inherited. Okay, what if there is more liability and less assets? Then the legal hire or the legal representative will not be personally liable. The liability will be restricted to the amount of assets inherited. Okay, similarly in case of partition of HUF or partition of AOP, let's say HUF is there, HUF is conducting some businesses, it was registered under GST and there is some GST liability, and that HUF has now partitioned. Okay, there is a partition of HUF that has happened. Then in that case they are telling that till the date of partition, whatever is the liability that is arising, all the members including the Karta, everyone will be jointly and severally liable for that. Similarly, that applies for the AOP also. Members of AOP will be jointly and severally liable. Okay, similarly in case of dissolution of firm, if the firm is going to get dissolved, obviously there will be no new liability. But what about the old liabilities? For the old liabilities, all the partners who were there in that firm till the date of dissolution will be jointly and severally liable. Okay, then what if the guardianship or the trusteeship is terminated? Do you recollect we had studied about this guardianship and trusteeship? So once the guardianship or the trusteeship is terminated, once that contract gets over, then that main person will be liable. Example, when a minor gets converted into a major, the guardianship comes to an end. So as soon as he gets converted into a major, that major person will be liable for all the liabilities, be it for the past liabilities, be it for the new liabilities, he will be liable. Yes. Okay. Then after that, what if the business is discontinued by a partnership firm or a AOP or by a HUF? Okay. Now let's say, for example, in case of HUF, there was a HUF which was conducting a business. Okay. Now what they have done is, instead of doing the partition of the HUF, what they have done is they have discontinued the business. Means the entity is still registered under GST, but they have stopped their business. Then in that case, whatever was the liability till the date of discontinuation, means they have kept their HUF alive. They have not surrendered the PAN of the HUF, but they have stopped the business. Okay, so whatever was their liability till the date of discontinuation, for that liability, all the members, including the Karta, will be jointly and severally liable. Yes. Acha, what if there is the admission in firm happening, admission of a partner? We studied about retirement. What if there is the admission in a partnership firm happening? Then in that case, all the partners, okay, the new partner plus the old partners, all of them will be jointly and severally liable for all the liabilities. The new partner who is coming in, he cannot say that I was not a partner in the past, so I will not be liable. No, he cannot say that, because the law says that section number 94 subsection 2 says that in case of admission, the new partner, whenever you are coming, please do proper due diligence. Okay, if you are not doing a proper due diligence, then in that case, for the old liabilities and plus for the new liabilities, you will be jointly and severally liable. Manageable till here? Yes, so in this 15 minutes hardly, we have revised the entire chapter of liability to pay. In this specifically, this liability to pay in case of amalgamation, demerger, this is important. Then retirement of a partner is important. Okay, and this partition and discontinuation of business, this point is important. Please pay important attention to these two sections. Yes, manageable till here, everyone? Done. Okay, so then let's start with the revision of the next chapter, that is appeals and revision. Yes, again we are going to study two parts in the chapter. One is going to be different level of appeals, and another provision is going to be one particular section which is going to talk about the revision. Yes, very simple chapter, important from exam point of view, and it has amendments also. We are going to cover all your amendments for the May 26 exams in this particular video. Okay, now listen, in the previous chapters we had seen the hierarchy. Do you recollect what are the hierarchy for passing the orders under GST? So at the lowest level you have got the superintendents, above the superintendent you have got the deputy commissioner or the assistant commissioner, above that you had got the joint commissioner or the additional commissioner, above that you had got the commissioner, and above that you had got the chief commissioner. Right, these were the authorities under your GST. Now here, when the order is passed by the lowest level of authority, that is when the order is passed by the superintendent, or when the order is passed by the second level, that is deputy commissioner or assistant commissioner. Okay, so when the order is passed by these two lowest level, then there is a possibility that the taxpayer, the registered person, is aggrieved by that order. Right, so this aggrieved person, this registered taxpayer, can go and file an appeal to the next level of authority if he is not satisfied with the order passed by them. Okay, now the authorities who are passing the order, okay, the authorities who are passing the order, those people are called as the adjudicating authorities. Okay, adjudicating authority. So just now I told you that if the order is passed by deputy commissioner or assistant commissioner or the superintendent, basically the lowest person and the second person in the hierarchy, if orders are passed by these people, then we can go and file an appeal to an officer not below the rank of joint commissioner but of appeals wing. Okay, he is not the normal joint commissioner, he is the joint commissioner of appeals. So we can go and file an appeal before the appellate authority. Who is the appellate authority? Appellate authority is the joint commissioner of appeals, at least of that level. Okay, but if the order was passed, if the basic order was passed by the additional commissioner or by the joint commissioner, that is by higher level authority, then we can go and file an appeal to the commissioner of appeals. Okay, so the person who was making the decision, the person who was passing the order, that persons, those people will be called as the adjudicating authority. And against the adjudicating authority, we can go to the appellate authority. But did you understand who is the appellate authority for whom? Yes. So this is your first level of appeal, where we are going to the appellate authority. Okay, where we are going to the appellate authority. Now, who can go, within how much time we can go, etc., that we will study here in section number 107. So either the registered taxpayer, means against whom the order was passed, either that person is aggrieved, so he can go and file an appeal before the appellate authority. Ma'am, who is the appellate authority? So appellate authority can be Joint Commissioner of Appeals, or it can be the Commissioner of Appeals. We can go and file an appeal to them within a time period of 3 months. Okay, within a time period of 3 months from the date when the order was communicated, when the adjudicating authority's order was communicated to us. From that time period, we can go and file an appeal within a time period of 3 months, and this delay can be condoned by another period of 1 more month. Okay. Acha, now this was when the taxpayer is aggrieved, then he was going and filing an appeal. Sometimes there can be a possibility that even the commissioner, okay, even the commissioner can think that the orders which are passed by the adjudicating authority, that is not proper, that is not in the interest of the revenue. So the commissioner, either on his own motion, or when someone is coming and telling it to the commissioner that, sir, the order which were passed by the adjudicating authority, that is not proper. Okay, we need to satisfy the legality of that particular order. If that order is not proper, so the commissioner can also direct any of his subordinate officer, and the commissioner can say that, please, let's go and file the appeal, okay, against the order passed by the adjudicating authority. Means basically higher level of authority is going against the lower level of authority, because the order which was passed, the commissioner was of the opinion that the order which was passed was not proper. So the commissioner can also tell any of its subordinate officer that, let's go and file an appeal to the appellate authority, and the time period given to the commissioner to file an appeal is equal to 6 months, plus the delay can be condoned by another 1 month. So when the taxpayer is going, he has got a time period of 3 months plus 1 month. If the department is going, then the time period is going to be 6 months plus 1 month for going and filing an appeal. Before whom? For going and filing an appeal before the appellate authority. Okay, now this appeal, at this level, the appeal can be filed manually also, or the appeal can be filed electronically also. Okay, both the ways are allowed at the first level. When we go to the next level of appeal, only electronic appeals are allowed. But at the first level, that is at the appellate authority level, the appeal can be filed manually also, or the appeal can be filed electronically also. Okay, now when you are filing the appeal, we have to pay the appeal fees. Okay, that is normal appeal fees that we have to pay. Now apart from appeal fee, the taxpayer is also required to pay something called as pre-deposit. Okay, but pre-deposit is applicable only when the appeal is filed by the taxpayer, not by the department. Okay, so ma'am, how much amount of pre-deposit, etc., that we will study it separately, because the provisions are going to be common for the other level of appeals also. Okay, so now when the taxpayer was not happy with the order of adjudicating authority, we were going to the appellate authority and we were filing the appeal. Okay, or if the commissioner is of the opinion that the order which was passed by the adjudicating authority is not proper, then the commissioner was telling to any of his subordinate officers to go and file an appeal. Time period for that was 6 months plus 1 month, right? So this is how the appeal goes to the appellate authority. Now once the appeal goes to the appellate authority, then the appellate authority will now start with the hearing, etc. It will call both the parties. Okay, it will give, it has to follow the principles of natural justice, right? Then after that, it will give opportunity to both the parties to present their problems, to present their issues, to present their stand. All these things will be done, and then the order will be passed by the appellate authority. The order which is passed by the appellate authority, they can either confirm the order, means they will confirm the order passed by the earlier authority, or they can modify the order, or they can cancel it. Okay, but the appellate authority cannot refer back the case. It cannot refer back the case to the adjudicating authority saying that whatever order you had passed was nonsense, please pass it again. No, it cannot say that. Okay, so there has to be some or the order that needs to be passed by the appellate authority here compulsory. Okay, then if the appellate authority is of the opinion that maybe there is some tax short paid, tax not paid, ITC wrongly availed, ITC wrongly utilized, or there is some refund which has been erroneously taken, then in that case the appellate authority can even proceed ahead and it can issue a notice under section number 74A. Means it will tell the department basically to issue the show cause notice under section 74A. Okay, now the person who had filed the appeal, the taxpayer, the aggrieved taxpayer or the department, whoever had filed the appeal, they have also got the rights to withdraw this particular appeal. Okay, either before issuing the show cause notice or before the appeal order was passed. Means basically before the appeal was finalized, before that we have got the rights that we can still withdraw our appeal. Okay, then whatever order is passed by the the appellate authority, that order should be a speaking order. Means it should be a very detailed order, that what was the conclusion taken out by the adjudicating authority and why this conclusion, etc. Everything should be written in the appellate authority's order. And to dispose of this appeal, the appellate authority is given an advisory time limit of 1 year for completion of the appeal. Okay, it is an advisory time limit. It is not a compulsory time limit. So appellate authority can take some more time also, but normally it should try to complete the appeal within a time period of 1 year. Yes, and once the appellate authority passes the order, the copy of the order will be distributed to all of these parties. Okay, this was the first level of appeal where we were going against the order of adjudicating authority to the appellate authority. Okay, two types of adjudicating authority were there. Lowest one was the superintendent, deputy commissioner or the assistant commissioner. Against his order, we will go to the JC of appeals. And against the order passed by the joint commissioner or the additional commissioner, we will go to the commissioner of appeals. Okay, when the department goes, they have got a time period of 6 months plus 1 month. When the taxpayer was going, he was getting a time period of 3 months plus 1 month for going. Right, then we discussed about the pre-deposit. What did we study about the pre-deposit? Whenever the taxpayer is going and filing an appeal, whenever that aggrieved person is going and filing the appeal, he is required to pay some mandatory pre-deposit. Okay, without paying that mandatory pre-deposit, he is not allowed to file any appeal. Okay, he is not allowed to file any appeal before the appellate authority. Yes, okay. Now another provision which is coming here is pertaining to revision. Okay, revision is given under section 108. Now there is a possibility that whenever the orders are passed by these authorities, okay, same two level of authorities, that is either by the superintendent, DC or the assistant commissioner, or when the orders are passed by the additional commissioner or the joint commissioner, whenever they have passed any orders, then in that case there is a revisional authority. Okay, there is a revisional authority who can revise the orders passed. Means instead of going for an appeal, the revisional authority can revise the orders which were passed by the lower level of authorities. Okay, ma'am, when will the revisional authority do that? So whenever either the revisional authority can do it suo moto, or whenever he has received a request from the department that the order which is passed by these authorities is not proper. Okay, and we need to change this particular order, we need to change the conclusion of these particular orders, then the revisional authority will take up the case for doing the revision. Okay, it will take up the case for doing the revision. Okay, and generally revision is done, first of all, revision is done by the department only. So generally revision will be done when the earlier orders which were passed by this department, this was in the interest of the taxpayer. Okay, if it was in the favor of the taxpayer, then department was aggrieved with it. So instead of going for an appeal, or if the department does not go for an appeal, then the revisional authority can take up that order for doing the revision. Yes, now who is the revisional authority? Who is going to do this revision? So when the order is passed by the lowest level of officers, then the revision can be done by the additional commissioner or joint commissioner. Did you notice the difference here? Here we are not going to the appeal wing. Okay, appeal wing officers are not coming at all. Basically the next level of authority is coming, that is the additional commissioner or the joint commissioner. But when the orders themselves was passed by the additional commissioner or joint commissioner, then the revision can be done only by the commissioner or the principal commissioner. I hope I am very clear till here. Yes, so whenever they are of the opinion that the order which was passed by the subordinate officers, that was erroneous, okay, or that was illegal or improper, or it had not considered some material facts, etc., then in such cases they can take up the case for the purpose of doing the revision. Yes, this is what we have studied. Now there are certain restrictions. There are 4 restrictions in case of this revision. What are the 4 restrictions? Let's try to understand this. Now, if there is a particular order which has already been into appeal, okay, let's say the aggrieved taxpayer had already gone and filed an appeal, okay, within 3 months plus 1 month in the previous level, then in that case, if that particular matter Okay, if that particular matter is already under appeal, then that matter cannot be revised. Okay, the priority is going to be given to appeal. If the matter is already taken into appeal, then you cannot go for revision. Okay, what if one particular matter is into appeal, then can other matters be revised? Yes. Okay, so if the entire order is into appeal, then no revision can be done. If entire order is not into appeal, but one or two matters from that order, okay, if that is into appeal, then for rest of the matters we can do the revision. Okay, when can we take up a particular matter for revision? So the revision can be done only after 6 months, but before 3 years. Okay, after 6 months from the communication of that order by the subordinate officer, only after 6 months. Why 6 months? Because they have given you the time to go and file the appeal. So as soon as the appeal time period expires, then we can take up that particular matter for revision, but revision should be done maximum within a time period of 3 years. 3 years from the date when the order was passed by the subordinate officer. So after 6 months, but before the expiry of 3 years, that is in the last 2.5 years. In the last 2.5 years, the revision can be done. Okay. Now, if a particular matter has been taken up for revision, it cannot be taken for second time revision. Okay. So if revision has been already done at a particular stage, then that matter cannot be taken again for the purpose of revision. Okay, and another thing is, if that order itself is a revisional order, that is once the revisional authority has passed its order, after that again the same order cannot be taken up for revision. Yes, these are some restrictions in case of revision. I hope I am very clear. Yes, so if you go for an appeal, then you can go to the appellate authority. If you are not going for the appeal, then the revision can be done by the revisional authority. Right? Now, please try to understand here. Now, if the order was passed by the appellate authority, or if the revision order was passed by the revisional authority. Okay, basically first level is over. If the order was passed by the adjudicating authority, then either it can go for an appeal before the appellate authority, or when the order was passed by the adjudicating authority and it was taken up for revision by the revisional authority. Now if we are not happy with the order passed by these authorities, then we can go and file an appeal before the GST 80. Okay, we can go and file an appeal before the GST 80. This is your second level of appeal that is coming. GST 80. Okay, GST 80. 80 stands for appellate tribunal. Okay, here it was appellate authority. Now we are going to the appellate tribunal. This is just like your court. Now, in GST 80, there are two types of benches. Okay, one is something called as principal bench and another one is something called as state bench. Okay, please try to understand. In GST 80, there are two different types of authorities called as principal bench and state bench. Okay, if one of the matters pertains to place of supply, okay, if one of the matter pertains to place of supply, then your case will, whenever you're going and filing an appeal, your case will always go to the principal bench, and for all the other cases, your case is going to go to the state bench. Okay, so when it is a place of supply matter, the case will be handled by the principal bench of GST 80. In all the other cases, the matter will be handled by the state bench of GST 80. Right? Now, who can go and file an appeal? Again, appeal can be filed by whom? Here we are studying appeal to the appellate tribunal. The appeal can be filed by whom? So, the appeal can be filed by the aggrieved person, that is by the taxpayer. Whenever the taxpayer is going and filing an appeal, against whose order? Against the appellate authority's order or against the revisional authority's order. Okay. If we want to go and file an appeal, we can go and file an appeal to the GST 80. GST 80 within a time period of 3 months, plus which can be condoned by another period of 3 more months. And please remember, whenever we are going and filing an appeal at the second level, then the appeal can be filed only electronically. Okay, only electronically. Okay, so if the taxpayer is aggrieved and he is going and filing an appeal to the GST 80, it can be filed within 3 months plus 3 months. Or when the department is not happy, with the decision given by the appellate authority or by the revisional authority, they can go within a time period of 6 months, plus delay can be condoned by another period of 3 months. Okay, so condonation period remains the same, 3 months and 3 months, but the time limit is now here 3 months plus 6 months. Okay, this is the time period within which we can go and file an appeal. Okay, again, when the taxpayer is going and filing an appeal, pre-deposit is mandatory. Ma'am, how much pre-deposit, etc., that we will study it separately, but this is how the appeal is required to be filed. Now, whoever is filing the appeal, let's say in the first case, if the aggrieved person, that is the taxpayer, is filing the appeal, then the other party, okay, other party to the appeal, that is the department will be asked to submit memorandum of cross objections. Okay, just like in court, na, the one who starts the case, that person will present his case, and the other party is required to file the memorandum of cross objection. Okay, so whoever is filing, let's say here the department is filing the appeal, so the taxpayer will be told to file the memorandum of cross objection. Even that memorandum of cross objection will be filed electronically, and that has to be filed within a time period of 45 days, plus this time period can be further condoned by another 45 days. Yes, okay. Then when we are going and filing an appeal to the appellate tribunal, there is some fees applicable. Okay, there is some fees applicable that we are required to pay to the appellate tribunal for filing an appeal. So for whatever amount of tax is there in dispute, okay, whatever is your disputed amount, for every 1 lakh rupees 1000 is going to be the appeal fees. Okay, for every 1 lakh rupees 1000 rupees is the appeal fees, but minimum is going to be 5000 and maximum is going to be rupees 25,000. And suppose if the appeal does not involve any dispute relating to the amount of tax, okay, maybe the dispute was relating to HSN, or maybe the dispute was relating to the rate of tax, etc., then in such a case, or maybe the dispute is relating to some availability of the ITC, etc., then in such cases you are required to pay a flat fee of rupees 5,000 for filing an appeal before the GST 80. I hope I am very clear with this, everyone. Yes, so this is how we go and file the appeal before the appellate tribunal. Right? Can we withdraw this appeal? Yes, you can definitely withdraw this appeal. This appeal withdrawal can be done within a time period of 15 days. Means whenever you have filed the appeal, from that day, within 15 days, you can withdraw that particular appeal. Okay, now listen, whenever the case goes to the GST 80, okay, whenever the case goes to the GST 80, I told you there are two benches. What are the two benches there? The two benches are the principal bench and the state bench. When the matter pertains to place of supply, it will go to the principal bench. When the matter pertains to anti-profiteering, okay, anti-profiteering cases, then the matter will go to the principal bench. In all the other cases, it will go to the state bench. Okay, now generally what are they telling us here is, suppose if whenever you're going for an appeal and the amount of dispute, means the tax dispute, interest, penalty, everything taken together, if that does not exceed rupees 50 lakh, then your case can be heard by a single member bench also. Means a single member, a judicial member can from your GST 80 can hear your case. Means multiple members are not required, because they are assuming that if the amount of tax involved, or when the amount of dispute is up to rupees 50 lakhs, then this is a small case. And if this is a small case, then in such a case, the case can be handled by a single member bench, and in all the other cases your case will be handled by two member bench, that is one judicial member and one technical member. Okay, but then there was an amendment. Here. First amendment here is, when you're calculating this limit of 50 lakh rupees, it is cumulatively for all the issues and all tax period covered under that particular appeal. Let's say you're going for appeal for multiple years, then you have to do a total of it, and then you have to check rupees 50 lakhs. Okay, and it is not for a single issue, it is for all the issues which are covered in a particular appeal for all the number of years for which you are going. For that you have to check this rupees 50 lakhs. Okay, another amendment point which came up here was, now in respect of the same taxable person within a state, if the same issue for the same tax period or different tax period has already been heard by two member bench, means let's say I am a registered person who wants to go and file an appeal, and in my case, for some earlier tax period, when I had gone for an appeal, my appeal was heard by two member bench. Okay, if my appeal was heard by two member bench, and now I am going for appeal for some different year, but for the same issue. Okay, but for the same issue I am going, but for a different year. Okay, maybe that issue has arisen again in some future years, and again if I am going and filing an appeal, then if earlier my case was heard by 2-member bench, then now also my case is going to be heard by a 2-member bench itself. Okay, even if the amount involved is up to rupees 50 lakhs, doesn't matter. But if in my case for the earlier tax period for the same issue, if the case was heard by 2-member bench, then now also it is going to be heard by 2-member bench all itself. Yes, this is what we have already studied. Okay, then next thing that they are telling is, whenever the case goes before the appellate tribunal will be bound. The appellate tribunal will have to follow the code of civil procedure. Okay, it is not bound by the code of civil procedure. It has some other powers also, but it will have to follow the provisions of code of civil procedure while dealing with an particular appeal, right? Acha, and now whatever cases goes before the appellate tribunal, it will be considered as judicial proceedings. As if it is a court proceeding going on, it will be considered as that. And then finally, when the case comes in the hands of the GST 80 will give opportunity to both the parties. It will ask for documents, extra information, whatever is required, and then it will give the final appeal order. Okay, or then it will give the final appeal a decision. And to GST 80 also we have given an advisory time limit of 1 year to complete that particular appeal, just like we had given it at the earlier level. Same way here also they will be given a time period of 1 year, advisory time period of 1 year to complete the appeal. Yes, and here the GST 80 can either confirm the order, they can modify the order, or they can even refer back the case. Okay, they can even refer back the case to the appellate authority or to the revisional authority to reconsider that particular case. Yes, I hope I am very, very clear till here. And yes, please remember, when the case goes to the GST 80, okay, GST 80 is the last authority to take the decision on question of facts. Because now after GST 80, when we go to High Court and when we go to the Supreme Court, they are going to discuss only about the matters which involve the question of law. So for question of fact, GST 80 is the last authority who can take a decision. Okay, another point here, can the GST 80 accept additional evidences? So they are telling that whenever in certain cases the GST 80 or the appellate authority, means the appellate authority or the appellate tribunal, can accept additional evidences only in 4 cases. Okay, what are those 4 cases? Let's try to understand. Let's say, for example, if the first adjudicating authority had refused to admit any evidence, means you were presenting the evidence before him but they did not take the evidence, then the AA or the AT, okay, the AA or the GST 80 can accept the additional evidence. Okay, or when the earlier authorities, either the adjudicating authority or the appellate authority, they had asked for some evidence but you could not produce it due to some sufficient cause. Okay, next, third point is, when they did not ask for the evidence but you wanted to submit that evidence but you were prevented from submitting it, means you were not allowed, or you were, you could not reach the department or you could not reach the authorities on time and you could not submit it. And the last one, when the earlier authorities passed the order, they passed the order in hurry, means they did not give the proper opportunity to the assessee. Then in all these cases, okay, then in all these 4 cases, the appellate authority or the GST 80, they can accept the additional evidences. Okay, so can we say it is good for the taxpayer that they can still present some additional evidences before the authority? But whenever the AA or the GST 80 is admitting the evidence, additional evidence, then they have to give the opportunity to the department also, that we are accepting this, and why are we accepting this, and all those things we will ask and we will tell to the department that we are informing them that we are admitting some additional evidence. Yes, and once this is done, then the decision will be given. Then the decision will be given by the GST 80. Yes, acha, suppose if suppose if there are some mistakes, okay, so suppose if there are some errors in the order passed by the GST 80, then either the GST 80 will come to know about the mistake suo moto, or someone can bring it to the record of the GST 80 that there is a mistake in the order passed by it, and this rectification of mistake can be done within a time period of 3 months from the date of the order. Means whenever the GST 80 is passing any order, from that day within 3 months it can do the rectification. And now if because of rectification, if my tax liability is increasing, then first we will have to give a reasonable opportunity of being heard to the taxpayer, and only then we can increase the tax liability. I hope I'm very clear with this. Yes, and another point was about the pre-deposit. Yes, I had told you at the first level also pre-deposit was required to be paid by the taxpayer. At the second level in GST 80 also the taxpayer is required to pay certain amount of pre-deposit. Let's see how much amount of pre-deposit these people are required to pay. Yes, now see how much pre-deposit was required at the first level. Okay, so when we went to the appellate authority for filing the appeal, at that time we were required to pay certain pre-deposit. Okay, only the taxpayer, not the department. Okay, how much pre-deposit is required to be paid? Please try to understand. Earlier the provisions were different for different level of appeals. Now they have made it common, and now it is very simple. So now how much appeal is required? So whenever a taxpayer is going and filing an appeal before the appellate authority, then in that case, whatever is the amount which we have admitted, okay, whatever is the tax, interest, fine, fee, penalty, whatever we have admitted, we have to pay 100% of it, because the department is telling that if you have agreed to this, then pay full amount. Okay, pay full 100% of whatever is agreed, and then whatever amount of tax, only the tax portion, whatever is there in dispute, means whatever you are not agreeing, please pay 10% of that. Okay, so whatever amount, whatever total dues you have agreed, pay 100% of that. Whatever tax amount you have not agreed, or whatever tax amount is there into dispute, pay 10% of that, subject to a maximum of rupees 20 crore. Okay, maximum rupees 20 crore, and when we talk about IGST, it will be rupees 40 crore. Okay, this is the amount of pre-deposit that you are required to pay before you go and file the appeal before the appellate authority. If you do not pay this pre-deposit, your appeal will not be accepted and your recovery proceedings can get started. Okay, paying the pre-deposit means there is going to be a stay on your recovery proceedings. Okay, and suppose if there is a demand order against which you are agreed and that has only penalty, means there is no tax, no interest, no late fees, nothing, but there is only penalty demand within that particular order, then you will have to pay 10% of that penalty before filing any particular appeal. Yes, this is the amount of pre-deposit that you are required to pay for the first level of appeal. Ma'am, what will happen to this pre-deposit? So this pre-deposit, see, suppose if you win the case, see, whatever you had agreed, that to anyway was payable. So this amount will be adjusted against your tax liability. And this 10% extra that you are paying in dispute. Now imagine if you win the case, okay, if the taxpayer wins the case, then you will get this pre-deposit refund. Okay, you will get this as a refund from the department, and we will study later. If there is a delay in giving you the refund, then you will get the interest also on that. Okay, and suppose if you lose the case, then anyway this amount, whatever 10% you have paid here as pre-deposit, that will be adjusted against your tax liability, and the balance tax you will be required to pay to the department now. Yes, this was the pre-deposit that you were required to pay at the first level. Now similarly, when you go for an appeal at the second level, that is before the GST 80, at that time also the taxpayer, not the department, the taxpayer is also required to pay certain pre-deposit when you go and file an appeal before the GST 80. Again, how much? So 100% of whatever you are admitting before him. Okay, whatever amount you are admitting before the GST 80, please pay that much. Okay, another one. Now, whatever amount is there in dispute, whatever tax amount is there in dispute, pay 10% of that, and again restricted to rupees 20 crore or 40 crore in case of IGST, and this will be in addition. This will be in addition. Suppose the same amount was disputed at the first level also, same amount is disputed at the second level also, you will have to pay again. Okay, you will have to pay again in addition to the amount deposited before the earlier level. And same way, if it is only a penalty order, then please pay 10% of that. Okay, in addition to whatever you had paid at the earlier level. Okay, and in all the cases for departmental appeal, there will be no pre-deposit that is required to be paid, because when department is going and filing an appeal, why will the department pay the pre-deposit? Okay, in our book I have given you the examples for pre-deposit. These are your amended examples. Please check it out once, please read it out once, so that you will be very, very confident about it. Okay, then I had told you about the interest in case of pre-deposit. See, suppose if the pre-deposit that you had paid, after paying that, let's say for example, if you have lost the case, okay, if you have lost the case, then that pre-deposit will be adjusted against your tax liability. But if you are winning the case, okay, if you are winning the case and there is some pre-deposit that you should be getting as a refund, then in that case, along with that pre-deposit, they will also give you interest, and that too at the rate of 9%. Okay, we had seen in provisional assessment, when provisional assessment was getting finalized into final assessment and you had paid something extra, then in that case you were getting a refund after applying for refund within 60 days and all those things, and interest you were getting at the rate of 6%. Here you are getting the interest at the rate of 9%, and that too from when? The time when you had paid this amount, the time when you had paid this pre-deposit till the time you get the refund. Okay, so right from the time when I had paid this pre-deposit, from that time you will get it as the interest portion till the time you're getting this amount as refund. So as such there is no big loss here, because you're getting the amount back along with interest, and that too at the rate of 9%. Yes, so this is what we are studying under section 115, and then going on to 116. This is very, very simple, that whenever you want to appear before the GST officers or before the appellate authority or before the appellate tribunal in relation to any GST proceedings, then either you can appear or your authorized representative can also appear. Ma'am, who is the authorized representative? So your relative can be there, your employee can be there, any chartered accountant, cost accountant, company secretary, GST practitioner, or any advocate. These people can represent you on your behalf. Okay, now let's say if there is someone who is representing you on your behalf and that person was already an indirect tax gazetted officer. Okay, let's say one of my relative is going, but he was already serving as an indirect tax gazetted officer. Now he is retired. Okay, now he is retired. Then after his retirement, there is to be a cooling period. There should be a cooling period of at least 1 year. Okay, if that gazetted officer had served for 2 years in the department, and now if he is retired, then he can act as my authorized representative only after a cooling period of 1 year from the date of his removal or retirement or resignation. Yes, acha. Who cannot act as your authorized representative? Any person who has been dismissed from the government service, or any person who was convicted of any particular offense, or any person who was guilty of any misconduct, or any person who during his period of insolvency, means he is adjudged as an insolvent. So during his period of insolvency, only during that period of insolvency, that person is disqualified for getting appointed as an authorized representative. I hope I am very, very clear with this. Yes, so till here basically my common provisions till GST 80 gets completed. Now if you are, GST 80 was the last authority to give the decision in case of question of facts. Okay, now if there is any question of law involved, okay, then in that case you can go and file an appeal before the High Court. Okay, another point which I want to tell you, one important point which I want to tell you is, see, when the order was passed by the adjudicating authority, okay, at that time you went and you filed the appeal before the appellate authority, that is the JC of appeals or the commissioner of appeals. Okay, or the department took up the case for the purpose of revision and the order was passed by the revisional authority. Now, if you are not satisfied by these people, then you can go to the GST 80. In GST 80 also there were two benches. What were the two benches? One was your principal bench and the other one was your state bench. Okay, principal bench means that place of supply matters and anti-profiteering matters. Now, when the case goes to the principal bench, then after that we can directly go to the Supreme Court. Okay, but when the case is with the state bench, then first it will go to the High Court, then only it will go to the Supreme Court. Yes, I hope I am very, very clear till here. So this is done. This is done. Now let's try to understand about the appeal to be filed before the High Court. So whenever we are not satisfied with the decision given by the state bench of GST 80, can you see this? State bench of the tribunal. I'll highlight this if you want to see. Whenever the decision was given by the state bench of the tribunal and we are not satisfied, either the taxpayer or the department is not satisfied with that, then we can go and file an appeal before the High Court, provided it involves a substantial question of law. Okay, and this appeal has to be filed within a time period of 180 days plus the delay can be condoned. Okay, means there is no time period for condonation given here, but within 180 days plus the condone period, we can go and file an appeal before the High Court, provided it involves a question of law. And then finally the decision will be given by the High Court, and there is no time limit within which the High Court should be giving the decision. Manageable till here? Yes. Now after that, if the decision given, either you are not satisfied by the principal bench of GST 80. If you are not satisfied with the principal bench of GST 80, then the matter can go to whom? Then the matter can go to the Supreme Court, or when the order was passed by the High Court, and if High Court tells you that okay, you can take the matter before the Supreme Court. Okay, means not only when you are aggrieved, only you being aggrieved is not sufficient. You are also aggrieved, plus the High Court also certifies that okay, this is a fit case which can go to the Supreme Court, then the matter can go to the Supreme Court, and there is no time limit for filing the appeal before the Supreme Court. There is no time limit for disposal of case by the Supreme Court, and finally the decision will be given by the Supreme Court. Manageable till here? Yes. Okay, so this is how the appeals are done. Now, whenever we are going to High Court and Supreme Court also, whatever is the amount, okay, whatever was the amount determined by the lower level of authorities, that is by the principal bench or by the state bench, whatever amount they had determined, you have to pay that entire amount. Okay, you have to pay that entire amount, only then your case will go to the High Court and Supreme Court. Yes. Now, okay, so till here basically my High Court and Supreme Court appeals is done. Okay, now what they have done is, as per section number 120, they have put some restrictions on the department. Okay, the restrictions have been put on the department that you cannot go for appeal in certain cases. Okay, that is when the department is aggrieved by the orders passed, then the department cannot go and file an appeal before the GST 80, before the High Court or before the Supreme Court, unless these monetary limits are exceeded. So unless the monetary limits of 20 lakhs is exceeded, they cannot go and file an appeal before the GST 80. Unless 1 crore rupees limit has been exceeded, they cannot go and file an appeal before the High Court. And similarly, unless 2 crore limit has been exceeded, they cannot go and file an appeal before the Supreme Court. This restriction is there only on the GST department. Okay, GST department cannot go and file an appeal unless these monetary limits are exceeded. Okay, because what was happening was, every time whenever the decision was going in the favor of the assessee, the department was going and filing the next level of appeal. Okay, even if the merits of the case were not there, still the department was going and filing the appeal. So what did the law do? The law has put a monetary limit only for the GST officers, that they can go and file an appeal only when these monetary limits have been exceeded. Okay, when I say monetary limit, it includes everything, tax, interest, everything is included here. Okay, if it is only a penalty order, then the amount of penalty. If it was only an interest order, only the amount of interest. Okay, so whatever is the due amount, only if these are exceeded, only then the department can go and file the appeal. Okay, but obviously there are certain exceptions. What are the exceptions here? Now, whatever, suppose if any provision of the law is ultra vires the Indian Constitution, or if any rules or regulations are ultra vires the main act, or when any of the orders, notification, instruction that is ultra vires the GST Act, or when the matter relates to this valuation, classification, refunds, place of supply, and that is recurring in nature, and it is important to take the matter into appeal. Okay, or when some bad comments have been passed against the government or its officers, or in the opinion of the CBIC, it is necessary to take it for the appeal, that is miscellaneous cases, then even if irrespective of the monetary limits, the department can go and file the appeal. Okay, now listen. So these are the exceptional cases where even if the monetary limits are not met, still we can go and file the appeal. Okay, still we can go and file the appeal. Now, in all the other cases, the department can go and file the appeal only when these monetary limits are exceeded. Okay, if the monetary limits are not exceeded, then the department is totally prohibited from filing the appeal. Okay, that does not mean that they have accepted it. Okay, it's just that they are not able to file the appeal because of this particular section number. Okay, and next year when the limits gets exceeded, then they can proceed for the appeal. Okay, now for this particular year, if the limits did not get exceeded, they were prohibited from filing the appeal, but that does not mean they are prohibited for life. Okay, every time when a new appeal comes into picture, they will have to check the monetary limits. Manageable till here. Okay, but please remember, these limits are applicable only on the department. Assessee cannot be prohibited from filing the appeal because that is his right. Okay, that is his right, that he can go and file an appeal even if the monetary limits are not exceeded. And then the last section is section number 121, where they are talking about the non-appealable decisions. There are 4 orders. Okay, there are 4 orders against which appeal can never be filed. What are the 4 orders? First one, whenever my file is transferred from one officer to another. Okay, whenever the commissioner is transferring the case from one officer to another officer, means my jurisdictional officer is changed by the commissioner, then I cannot go and file any appeal against it. Okay, or whenever they have done any seizure of books of accounts or any register or any documents, so against the seizure order, the appeal cannot be filed. Whenever prosecution order has been passed, that is imprisonment and that's fine, etc., that order has been passed, against that also no appeal can be done. And whenever I requested for payment of tax in installment, but the department denied my request to pay the tax in installment, against that denial, appeal cannot be filed by me. So these are the 4 orders against which appeal can never be filed. I hope I am very, very clear with this. Yes, so and whatever we have studied here, we have studied all the provisions of your appeals and revision. Yes, I hope the overview of the chapter, you could revise the chapter. Yes, the level of appeal. First, the order will be passed by the adjudicating authority. Then you went to the appellate authority, then you went to the GST 80, then you went to the High Court, and then you went to the Supreme Court. This was the hierarchy there. Then in between we studied about one of the provisions of revision. Please remember that provision specifically. Yes, I hope I am very, very clear till here, everyone, and the chapter was manageable for you. So approximately in 45 minutes we could revise this appeals and revision. Yes, please do read the chapter once and then it will be sufficient. Yes. Done. Thank you so much. Let's go to the next chapter after this. Okay, so let's start with the next chapter, that is Offences and Penalties and Ethical Aspects under GST. We'll divide it into 2 parts. First part is going to be offences and penalties, and last part of the chapter is going to be the ethics. Okay, in ethics we are not going to study anything new because it is a compilation of some provisions coming from the other chapter. But offences and penalties, yes, we are going to study something new here. Okay, now there are many offences and penalties which have been mentioned here. Obviously, we need not remember each of the penalty, but I have selected a few important penalties, punishments, etc. that we need to study compulsorily, because if you get a question from here, it is going to be a direct question and very, very scoring. Yes, can we start, everyone? Okay. So now starting with the first section, that is section number 122. Okay, so in section number 122, in multiple subsections, they have given you multiple scenarios penalty. That is, if some defaults have been done or if some offences have been done, then so and so penalty will be applicable. That we are going to study in section 122. But before we levy the penalty under section 122, first of all, show cause notice should be issued. Yes, the department is required to issue the show cause notice on you, and the department should ask you why we should not levy the penalty on you. So now the question arises, who is the proper authority? Who is the proper authority to issue the show cause notice? Now same proper authority who was there in your section number 74A. Okay, this is a new amendment actually, that earlier the proper officers who were allowed to issue the show cause notice was not clearly defined, but now they have defined that if the amount of tax is within so and so limits, then these are the proper officers who can issue the show cause notice. These officers and these limits remain the same for section number 74A also, and plus they remain the same for section number 122 also. Okay, so a quick revision of this. If the monetary limit of CGST, can you see this on the board? I'll just zoom it. If the monetary limit of CGST does not exceed rupees 10 lakh, or IGST if it does not exceed rupees 20 lakh, or both of it taken together if it does not exceed rupees 20 lakh, then in such case the proper officer will be the lowest level of officer, that is superintendent of the central tax. Similarly, when it goes above 10 lakh but does not exceed rupees 1 crore, or if it goes above 20 lakh and does not exceed 2 crore in case of IGST, then the proper officer is going to be the deputy commissioner or the assistant commissioner, right? And above 1 crore or above 2 crore, or if total like ICGST, IGST, everything is due, etc., then in that case the highest limit, that is rupees 2 crore. If it goes above these limits, then the proper officer is going to be the joint commissioner or additional commissioner or the joint commissioner for the purpose of issuing the show cause notice under section 74A also plus section number 122 also. Right, I hope this much is manageable. This table you will see, or you must have already seen in your section number 74A also. Same amendment was done for the purpose of section 122 also. Okay, now the first penalty section which is coming, that is section number 122 subsection 1. So in 122.1 they are telling that if you are doing 21 offences, okay, or if you are doing any one offence out of these 21 offences, then you will be liable to a penalty. Ma'am, how much is the amount of penalty? So under the CGST law, they say that penalty amount will be rupees 10,000 or the amount of tax involved in that offence. Okay, maybe the tax involved, maybe the ITC involved, whatever is the tax involved in that offence, or rupees 10,000, whichever is higher, that will be the amount of penalty. And suppose if it is under the IGST law, then it will be the tax involved or rupees 20,000, whichever is higher. Yes. Now, how many offences you have done? Any of these offences, any of the 21 offences. I have listed all those offences here. So, if there is any offence related to invoice, maybe you have done the supply but not issued an invoice, or if you have issued the invoice but not done the supply, that kind of a thing. Okay, or if you have issued an invoice using someone else's registration number, or if you have done any offence relating to tax evasion, relating to TDS, relating to TCS, or any offences related to ITC, that is maybe you have availed the ITC without actually receiving the goods or services, or in case of input service distributor, you have not properly distributed the credit. Do you recollect ISD concept? Yes, or if there is any offence related to refund, you have fraudulently obtained some refund, or if you have done any offences relating to some records, books of accounts, documents, etc., you have not maintained it properly, you have not furnished it whenever they had asked you to furnish, or if there is any offence relating to registration, or if there is any offence relating to transportation of goods or warehousing of goods, or if there are any other offences. Okay, total in all, please don't remember these offences name, just remember here, if you have done any of the offences which falls under section 122.1, then you will be liable to so and so amount of penalty. Yes, this is the first offence under section 122.1. Okay, similarly, section number 122.1a talks about the penalty on such a person who helps you to do that transaction and who is also retaining some benefit. Okay, let's say there is a third party who is helping you to do this particular transaction and he is also keeping some monetary benefit out of it. Then that person who is retaining that benefit, even he will be liable for the penalty. How much is the amount of penalty? 100% of the tax. Okay, whatever tax you have evaded or whatever more ITC you have taken, whatever is the tax involved in that transaction, 100% of that tax amount will be the amount of penalty. But this will be applicable on whom? This will be applicable on such a person who is retaining that benefit. Similarly, if there is some contravention done by the e-commerce operator, okay, if you can recollect, e-commerce operator where TCS under section 52 is applicable. Yes, means it is not falling under section 9(5), so TCS under section 52 was applicable. So if he is doing any such default, okay, like he was required to furnish the details in GSTR 8, if he is not furnishing the correct details in GSTR 8, or in some cases he was not allowed to do the interstate supply. The main supplier, when he was supplying through e-commerce operator, they were not allowed to do the interstate supply. But if the eco still allows that person to do the interstate supply, if such type of contraventions have been done by the e-commerce operator, then see the penalty that is applicable. Again, your 100% of the tax involved, whatever is the tax involved, or rupees 10,000, whichever is higher. Can we say this is same as section number 122(1)? Tax involved or rupees 10,000, whichever is higher, and in case of IGST it will be 20,000. It will be 20,000 or the tax involved, whichever is higher. Okay, so 3 sections we have done: 122(1), 21 offences, 122(1)(a), the person who was retaining that benefit, and then after that we did section number 122(1)(b), which was applicable on the e-commerce operator. Yes, okay. Then after that, next one, this section is a little important: penalty under section 122(2). Okay, penalty under section 122(2) is just similar to, the case is similar to section number 74A. Okay, when was section 74A applicable? 74A was applicable when there was any tax not paid, tax short paid, or any erroneous refund, or ITC wrongly availed, or ITC wrongly utilized. If any of these circumstances happened, then the officer have got the right to issue the show cause notice under section 74A. If he issues the show cause notice under section 74A, then we will have to reply to that notice. If we do not reply, etc., and if we don't pay the tax, etc., then penalty under section 74A will become applicable. Okay, but if the officer is not levying the penalty under section 74A, then for the same circumstances, it can levy the penalty under section 122(2). Can you see? Same circumstances are coming up here: tax not paid, tax short paid, erroneous refund, ITC wrongly availed, or same circumstances have been given here. And for that, check what is the amount of penalty. So if it is done for other than fraud, means it was not like we did not intend to do a fraud and we are able to prove this to the GST department, then see what is the amount. It is 10,000 or 10% of the tax. Okay, it is not 10,000 or the tax involved. It is not 10,000 or 100% of the tax involved. It is 10,000 or 10% of the tax involved, whichever is higher. Okay, in case of IGST, it will be 20,000 or 10% of the tax due, whichever is higher. But if this was done for the reason of fraud, willful misstatement, suppression of facts, etc., then in that case, it will be 10,000 or 100% of the tax. Can you see this? Tax due is nothing but full tax, 100% of the tax due, whichever is higher. So non-fraud cases, it will be 10%. Fraud cases, it will be 100%. Compare it with 10,000 or 20,000 as the case may be, whichever is higher. This is the amount of penalty leviable. Okay, so if there is any case of tax short paid, tax not paid, erroneous refund, ITC wrongly availed or utilized, then in that case, either the penalty under section 122 will become applicable, or they will issue the show cause notice under section 74A. Yes. Okay, so these were till year. Okay, whatever sections we have done till year, this you have to remember it compulsorily. Then after that, going to the next one, that is new section, section 122B. Do you recollect when we were doing miscellaneous provisions chapter, miscellaneous provisions, there was a new concept called as track and trace mechanism, which the government was going to implement on certain goods. So whenever the government implements this track and trace mechanism, and if you do not fulfill the requirements of that particular section, then this is the amount of penalty applicable, that is rupees 1 lakh or 10% of the tax, whichever is higher. 1 lakh or 10% of the tax amount involved, whichever is higher. Okay, as of now, they have not notified that on which goods you are required to do this track and trace mechanism. But whenever they notify that unique identification, that you were required to stick a QR code or something on the goods, etc., so that the government can trace that from where to where the goods are going and whether the tax has been paid on it or not. So in such cases, if you do not fulfill those requirements, if you do not fulfill that section, we had studied that in section number 148A, if you do not fulfill that particular section, then in such cases, penalty will be applicable. What is the amount of penalty? 1 lakh rupee or 10% of the tax payable, whichever is higher. Manageable till here. Okay, then after that, going ahead, yes. Okay, Next one, next section that we need to do is section number 129. Okay, I think 3 more sections are very, very important here. 3 to 4 sections are very, very important from now. Okay, let's do this, everyone. If you get questions, there are very high chances that you will get question from this area only. Okay, now see what are they telling. Section number 129 talks about what? It talks about detention, seizure and release of goods and conveyances in transit. Okay, now let's say if there is a particular transporter, okay, if let's say I am there, okay, if I am transporting my goods, with the help of a transporter, or if I have stored my goods in a particular warehouse and that transportation or storage of goods in the warehouse is happening in contravention of the law. Okay, that transportation, I am transporting those goods, okay, or if we are storing those goods, okay, and these procedures are done in contravention of the GST law. Okay, example, when you are transporting the goods, you know, there are certain requirements that you have to fulfill. Yes, example, when you are transporting the goods should be accompanied with certain documents like delivery challan or the invoice, e-way bill, etc. Okay, so if you do not have those, okay, then in such cases means you are doing the transportation, but that is in contravention of the law. Okay, then in such cases, suppose if when the goods are in transit, okay, when the goods are in transit and the proper officer stops the vehicle, the proper officer asks the transporter about the documents, etc., and he is not able to satisfy to the proper officer about the documentation of the goods, whether tax has been paid on these goods or not, he is not able to satisfy this to the officer. Then in that case, the proper officer has the right to detain or to seize those goods. Okay, to detain those goods or to seize those goods. Now, once they have detained or seized those goods, after that, if you want to get those goods released, okay, after that, if you want to get those goods released, then you will have to pay some amount of penalty, and that penalty is given under section 129. Okay, now see here. When the owner comes forward for payment of penalty, let's say my goods were getting transported from one place to another and the transporter was transporting my goods. During transportation, the goods were detained or the goods were seized. Okay, then if I want to get my goods released, then I am required to pay some amount of penalty. So owner of the goods is coming forward, and if he is paying the penalty, check what is the amount of penalty applicable. If the goods are taxable goods, okay, if the goods are taxable goods, then the penalty will be 200% of the tax payable. Okay, whatever, CGST 200%, IGST also 200% because it is a percentage. Okay, so whatever is the amount of tax payable, you just calculate 200%, that is the amount of penalty that you are required to pay. Okay, but if those goods are exempted goods, okay, if those goods are exempted goods, then in that case, the penalty will be lower of the following, that is 2% of the value of the goods, because in exempted goods, there will be no tax payable. So 2% of the value of the goods or rupees 25,000, whichever is lower. Similarly, in case of IGST law, it is going to be 4% of the value of the goods or rupees 50,000, whichever is lower. Okay, this is the penalty applicable when the owner of the goods comes forward. If he pays this amount of penalty, then he can take his goods back. Okay, but what if the owner does not come forward? If the owner does not come forward, but can we say that here the transporter is in trouble because his vehicle will also be detained, his vehicle will also be seized. So what will the transporter think? The transporter will think that I will pay the penalty. Okay, I will pay the penalty and I will get my vehicle also released and I will get the goods also released. Okay. So if the owner does not come forward, then the transporter or the warehouse operator will come ahead and they will pay the amount of penalty. Check what is the amount of penalty applicable here. In case of taxable goods, it is higher of 50% of the value of the goods or 200% of tax payable, whichever is higher. And here, in case of IGST law, again on value we will have to double the percentage, that is 100% of the value of the goods or 200% of the tax payable, whichever is higher. Okay, and in case of exempted goods, okay, instead of this, see, above it was 2% of the value or 25,000, whichever is lower. Here it will be 5% of the value or 25,000, whichever is lower. Here it will be 10% of the value or rupees 50,000, whichever is lower. Okay, so in this second table, the transporter or the warehouse operator is coming ahead and he is paying the amount of penalty, and he is getting his own conveyance also released, and he is getting the goods also released. Okay, now maybe the question will arise in your mind, ma'am, why should the transporter come ahead and he will pay the amount of penalty? So if the transporter comes ahead, here first benefit is he will get his own conveyance back, and second benefit is he will also get the possession of the goods back. So later he can sell those goods and recover this amount of penalty. Okay, that is one way of thinking. But there will be some transporters. There can be some transporters who will say that I am not at all interested in his goods, but I just need my conveyance back. If he says that I just need my conveyance back, then either he can pay this amount of penalty, or he can pay rupees 1 lakh under CGST or 2 lakhs under IGST, whichever is lower. Okay, either he can pay the penalty as per the second table. Okay, as per the second table, this amount, or rupees 1 lakh or 2 lakh, whichever is lower, he can pay that lower amount. And if he pays something lower, okay, then in that case he can just get his conveyance release. Then in that case he will not get his goods back. Am I clear with this, everyone? Yes. So if the owner is coming ahead, okay, if the owner of the goods comes ahead, then in such cases, the owner will get the goods and the transporter will get his conveyance. In the second case, when the owner does not come forward and the transporter pays as per this table, then he will get his conveyance also, plus he will get the goods also. But if the transporter says, I just want my conveyance, I am not at all interested in the goods, then whatever was the penalty as per the second table, or rupees 1 lakh or 2 lakh, as the case may be, whichever is lower, pay this amount, and done. You can get your conveyance released. Yes, the goods are still lying with the department. If no one comes ahead to get the goods, then the goods will belong to the department. Yes, I hope I am very, very clear till here, everyone. Section number 129 that was. Okay, next, going on to the next section, that is section number 130, which talks about confiscation of goods or conveyances and levy of penalty. Now here they are telling that in 5 specific circumstances, your goods or conveyances carrying such goods can be confiscated. That is, transfer of title will directly go to the government. Okay, what are the 5 such scenarios? Now let's say if you are doing any supply of any goods, if you are doing any supply of goods, or if you are receiving any goods which is in contravention of the provision of the law, and your main intention is to evade the payment of tax. Okay, or if you do not account for any goods on which he is liable to pay the tax, you are not recording those transactions in your books of accounts at all. Okay, or if you have done some taxable supply without applying for registration, or if you have done any other contraventions of this act with the intention to evade the payment of tax, or if you are using someone else's conveyance, okay, truck, etc., for carriage of goods in contravention of the provisions, and that was done without the knowledge of the transporter. Okay, you are hiring someone else's vehicle and you are using his vehicle for doing the contravention under the GST law. Okay, then if you have done any of these cases, then whatever goods were there and whatever conveyance was used for these goods, okay, goods or the conveyances will be liable for confiscation. It will be liable for confiscation means the government will confiscate and immediately the ownership will go to the government. Yes, okay. So first thing is he will be liable, that goods or the conveyance will be liable to confiscation, and the person will be liable to pay the penalty under section 122. Okay, that 122 subsection 1, that penalty will be applicable on you if you have done any of these 5 contraventions. Yes, now listen, now again the person will go to the department and say, sir, please can I get my goods or the conveyance released here? So if he goes to the department, if he goes to the officer and says that, sir, I am ready to pay some amount, but can you please release the goods? Please release the goods and the conveyance. So department gives them an option that you can pay the amount of tax, you can pay some other charges like penalty, etc., whatever is demanded by the department, and plus you will have to pay something called as redemption fine. Okay, plus you will have to pay something called as redemption fine. tax you have to pay. If you want to take the goods back, please pay the tax on it. Whatever interest is due, pay that interest on it. Whatever penalty we have asked for you under section 122, please pay that. Along with that, you will have to pay something called as redemption fine. Okay, ma'am, how much is this amount of redemption fine that you have to pay? So redemption fine is whatever is the market value of those goods minus the tax payable on those goods. Okay, whatever is the market value of those goods minus the tax payable. Why minus the tax payable? Because tax anyway that person is going to pay separately, and when we say market value MRP, that already includes the taxes. So taxes we have already taken on those goods. We told them to pay the tax now. So tax we have told them. So fine, redemption fine is equal to market value minus the tax payable. If you pay this much, then in that case you can get your goods on the conveyances released. Are you clear with this? Yes. Okay, now see here everyone, one restriction that they have put here is, how I'll highlight this, however the total amount, this line I am reading, okay, however the total amount of redemption fine and penalty, that should be at least equivalent to 100% of the tax payable. So tax you have to pay it separately, okay, interest you have to pay it separately, redemption fine and penalty should be at least equivalent to 100% of the tax payable. Okay, this you have to pay if you want to get your goods released. Yes, now if you pay this much, your goods as well as conveyance will get released. Acha, but now suppose if the owner does not come forward and he is not ready to pay the redemption fine, but the transporter comes to the department and says, sir, my vehicle was used by this person without my knowledge. I did not know that he is going to do the contravention of the GST law and he is going to use the vehicle. So the department tells to that transporter that okay, you can get your conveyance released, okay, and you can pay whatever was the tax evaded. Please pay 100% of the tax on it and you can get your conveyance, only your conveyance released. See, if the owner is coming forward and if he is paying the tax, interest, penalty, redemption fine, then goods as well as conveyance both will be released. Okay, but if the owner is not coming ahead to pay the redemption fine, but the transporter needs his vehicle, if the transporter needs his vehicle, he can pay 100% of the tax due and he can get his conveyance released. I hope I am clear till here everyone. Yes, these were the major important points of section number 130. Okay, so 129 will be applicable when the goods were in transit. At that time the proper officer intercepted the vehicle and at that time they came to know that transportation is happening in contravention of the GST law. That was your section number 129. Okay, and in section number 130 you have done any of these 5 offences. Okay, and if during these by doing any of these 5 offences, your goods or the conveyances will be liable for confiscation. Now if you want to get it released, please pay this redemption fine etc. and you can get it released. Manageable till here? Yes. Okay, then going on to the next section, that is section number 132. Okay, let's do section number 132. This is the second last section. Okay, second last section 132, and then we'll do one of the section on compounding. Just that much is sufficient. Okay, now what is the section number 132 talking about? 132 talks about punishment, prosecution, punishment, etc. That is, now we are going above penalty. Now we are going above penalty. See, tax was payable, interest is payable, penalty is payable, that we have already studied. Now we are going to next level, that is where prosecution is done and fine and imprisonment can become applicable. So in which cases, like under GST also, arrest etc. can happen. In which cases arrest etc. can be done? Let's try to understand that. Okay, so now see what are they telling? Cases where prosecution can be initiated. Can you see some clauses are given here on the board? Everyone, first one, clause A, 132.1, clause A, that is if you have done any supply but without invoice. Okay, so can we say this is a bogus supply? The next one, if you have issued any invoice, this is very, very important. If you have issued any invoice without doing the supply. So can we say here we are talking about bogus invoice? You have issued any invoice, but actually there is no supply behind that. So this is the case of bogus invoice, clause B. Then if you have wrongfully or fraudulently availed any ITC by doing any fraud, etc. or if tax has been collected but not paid to the government beyond 3 months, or if there is any tax evasion or fraudulent refund has been availed, or if you have purposely given some false information or records with an intention to evade the taxes, or if you are dealing in some goods which are liable for confiscation, you are dealing in some services in contravention of the GST law, or if you are helping to do any of the above offences. Okay, in such cases, these cases will fall under the case of prosecution, where punishment can be applicable, where fine, imprisonment will become applicable on you. Okay, clause A, clause B, clause C, clause D, clause E, clause F. Then G was omitted, H, I, J was removed, K was removed, and then L is there. Okay, so these are the clauses under which prosecution will become applicable. Now, ma'am, how much imprisonment, etc. is applicable? Acha, ma'am, what about other cases which we are not studying? What about other contraventions that we are not studying? Other contraventions that we are not studying, those are liable to tax, those are liable to interest, those are liable to penalty, but those are not liable for prosecution. Yes? Okay. Let's say, for example, you forgot to file the GST returns. If you forgot to file the GST returns, it is nowhere covered here. Okay, if it is not covered here, then that cannot lead to imprisonment, fine, etc. Okay. Now see what is the punishment given to you here. Now, if you have done any offense, okay, where tax is evaded, or ITC has been wrongly availed or utilized, or refund has been wrongly taken. Okay, tax evasion means tax was payable, you did not pay it, or ITC was not available but you have wrongly availed it, or after availing you have wrongly utilized it, or you have taken some fraudulent refund. Okay, then in such cases, if the amount involved, your AI stands for amount involved, if it is more than rupees 5 crore, okay, if it is more than rupees 5 crore, then punishment will be applicable. Minimum imprisonment 6 months, maximum imprisonment 5 years. Okay, this is the punishment applicable, plus fine will be applicable. So, imprisonment plus fine is applicable here. Okay, and in this case itself, if the amount involved is more than 2 crore but up to 5 crore, little less, then in that case 6 months to 3 years plus fine. Okay, so basically, did you notice here, imprisonment is applicable only when the amount involved is more than rupees 2 crore. Yes, only if it is more than rupees 2 crore, then only imprisonment will come, otherwise imprisonment will not come. Okay, there is only one exceptional circumstance which we will study here, but otherwise in entire GST, imprisonment is applicable only when the amount involved is more than rupees 2 crore. Okay, so in this case, when the amount involved is more than 2 crore but up to 5 crore, 6 months to 3 years plus fine is applicable. But when the amount involved is more than 5 crore, then imprisonment minimum 6 months to maximum 5 years plus fine will be applicable. Okay, this is one particular punishment that is applicable. Another punishment is in case of bogus invoices. That is, you have issued an invoice but there is no supply. Remember clause B that we had studied here? Yes, bogus invoices. For bogus invoices, when the amount involved is more than 1 crore, amount involved is more than 1 crore but up to 2 crore, then also imprisonment is applicable. Just now I told you that in GST imprisonment is applicable only when the amount involved is more than rupees 2 crore. But bogus invoice is one such exception that even if the amount involved is more than 1 crore, then also imprisonment is applicable. That is 6 months to 1 year plus fine. Okay, acha ma'am, what if it goes above? What if it goes above the normal 6 months to 3 years and 6 months to 5 years will be applicable? Okay, so in case of bogus invoices, it starts from more than 1 crore to 2 crore. Imprisonment is 6 months to 1 year plus fine. If it goes above 2 crore and up to 5 crore, then 6 months to 3 years plus fine. And if it goes above 5 crore, then it will be 6 months to 5 years plus fine. That is the same one. Right? Okay, then after that the next one, that is falsification of information or records with an intention to evade the tax or abating the commission of said offence, that is helping, etc. Then in such cases imprisonment is up to 6 months, or fine can be levied, or both can be levied. Means it's not imprisonment and fine, it is imprisonment or fine or both. Okay, and that to a small imprisonment up to 6 months. right? So these are the imprisonments that are applicable on that person. And if you have repeated, if you are a repeated offender, if this offense you have repeated it again, then irrespective of the amount, imprisonment is up to 5 years plus fine. Okay, see, this is a serious one now, that you were warned earlier, you had done this offense earlier, and now you are repeating it. So now for the second time you need not check how much is the amount involved. If you have done it for the second time, then imprisonment will be applicable up to 5 years. Again, minimum 6 months time period, minimum 6 months time period will be there. Okay, 6 months to 5 years plus fine will be applicable. Manageable till here. Yes, so I'll repeat here. Normally arrests under GST can be done only when the amount involved is more than rupees 2 crore. Okay, but in case of bogus invoices, arrest is done even when the amount involved is more than rupees 1 crore. Okay, further slabs will remain the same. Further slabs means when it is more than 2 crore but up to 5 crore. Okay, then it will be 6 months to 3 years plus fine. And when it is more than 5 crore, it will be 6 months to 5 years plus fine. Manageable till here? Yes, those things are written here. Okay, now see, whenever any offense is given, okay, whenever there is any offense done under the GST law, you have to classify whether that offense is a cognizable offense or whether it is a non-cognizable offense. Now, when will you call any offense as a cognizable offense? When you have done any offenses of clause A, clause B, clause C, clause D. Remember clause A was bogus supply. Clause A was bogus supply, means you have done a supply but it is without invoice. Clause B was bogus invoice, that is you have issued the invoice but without supply. Clause C was fraudulent availment of ITC, and clause D was tax collected but not paid beyond 3 months. If you have done any of these 4 offences and if the amount involved is more than 5 crore, big, when the amount involved is more than 5 crore, then you will call such offences cognizable and non-bailable. Okay, cognizable and non-bailable. What do you mean by the word cognizable? Cognizable means serious offense, and for this serious offense, arrest warrant. Okay, arrest warrant is not required. Means the police officer can directly come and arrest that particular person just after telling him the reasons for arrest. No need to show him the arrest warrant. So arrest warrant is not required. And non-bailable here means normally that person cannot be released on bail, and if that person has to be released on bail, we will have to take the permission of the magistrate to release that person on bail. Okay, so if you have done any offense of those 4 clauses and if the amount involved is more than rupees 5 crore. Okay, and all the other cases, that is for those 4 clauses when the amount does not exceed 5 crore, or for all the rest of the clauses, it will always be considered as less serious, that is non-cognizable and bailable. Non-cognizable means to arrest that particular person, arrest warrant is mandatory, and bailable means that person can be released on bail. Easily that person can be released on bail. Are you clear with this? Yes, so here 4 clauses, you should be falling under any of those 4 clauses, and the amount involved should be more than rupees 5 crore. Manageable till here? Yes, so I hope you are clear with the arrest provisions, everyone. Yes, this is what we had studied here. Specific arrest, please remember, for bogus invoices, even when the amount involved is more than 1 crore, arrest will be applicable in case of bogus invoices. In case of false information and records and abating the commission of the said offence, in that the punishment was very lenient, that is imprisonment up to 6 months or fine, or both can be made applicable. If you are doing some offence repeatedly, then for the second and subsequent offence, without checking any limit, the imprisonment will be up to 6 months, minimum 6 months and up to 5 years. Yes, and when will you call any offense? See, now listen. See, for arrest, you have to check this table. Okay, for arrest provisions, you have to check this table. And for cognizable and non-cognizable, you will have to check these provisions. Don't mix both of it. Yes? Okay, fine. And then the last section that we need to do here is section number 138. What is section number 138 talking about? Section 138 talks about compounding of offenses. Okay, do you recollect when we were doing section number 129 and 130? Okay, confiscation, seizure, detention, etc. When we were doing those sections, we were paying some amount, redemption, fine, etc. and we were getting our goods or the conveyances back. Okay, similarly here, here, if prosecution is done on you, okay, if prosecution is done on you, then in such cases, you can request to the department that, sir, I don't want to go to the jail, I don't want to pay any amount of fine, sir, what is the way out for this? Yes? So, your prosecution was already made applicable on you as per the above table that we had studied, and now you can go to the commissioner, okay, commissioner, and you can tell, sir, please give me some relief, I don't want to go to the jail, I don't want to pay this fine, etc. So the commissioner will, take your application, and the commissioner will take the information from your jurisdictional officer, etc. and they will tell you that first pay the tax, okay, pay the interest, pay the penalty that is applicable. If you pay all these things, then only first of all you can go for compounding. Okay, tax, interest and penalty, pay all these three things, then only you can go for compounding. Okay, once your application is taken for compounding, and if it is accepted, then in that case, the department will tell you something called as, to pay something called as compounding fees. Okay, apart from tax, apart from interest, apart from penalty, okay, it is telling you to pay something called as compounding fee. If you pay this compounding fee, then you will be released from the prosecution, means no fine or imprisonment will be applicable on you. Okay, but now there are certain exceptions here. Now, first of all, if already compounding was done for you, okay, for all the offences, if already compounding was done once for you, please do not come for compounding again. We can give you this benefit only once. Okay, that is one thing. Secondly, for bogus invoices, clause B, for bogus invoices, please don't come for compounding, because this is a very strict offense that you have done. So please don't come for compounding. If you have done the offense of bogus invoices, go and face the prosecution, right? And the next one is, if you are already convicted by a court, okay, if judgment has been already declared by the court, then in that case, now nothing can be done. Okay, now nothing can be done. And any other cases as may be prescribed. So basically 3 cases where compounding cannot be done ever. Okay, please don't forget about bogus. Bogus compounding can never be done. Okay, otherwise, if compounding has been done earlier, again second time compounding cannot be done. And if you have already been convicted by the court has already passed the orders for fine, imprisonment, etc., then now nothing can be done. Okay, chalo, now let's assume that they decided to give you the benefit of compounding. You have paid the tax, interest, penalty, etc., and now you are ready to pay the compounding fee. How much is the compounding fee that you are required to pay? So for clause A, C, D, E, a clause B is missing. Why is clause B missing? Because for clause B you cannot go for compounding. Okay, so for clause A, C, D, E, if the amount involved is more than 5 crore, then you have to pay in the range of 50% to 75% of the tax involved. See, tax, interest, penalty you have already paid. Okay, what we are studying here is the compounding amount that you are required to pay. So if the amount involved is more than 5 crore, pay between 50, they will tell you how much, but it will range between 50% to 75% of the tax involved. In other cases, 40% to 60% of the tax involved. Okay, then for other offences, that is FHI, clause FHI, it will be 25% of the tax involved. Okay, in all the cases, it will be 25% of the tax involved. And for clause L, it will be 25%. Again, same, 25% of the tax involved there. Yes, so basically for clause A, C, D, E, it is going to range between 50% to 75% when the amount involved is more than 5 crore. In other cases, it will be between 40% to 60% of the tax involved. Okay, then for clause F, H, I and L, we can take all of these together. It will be 25% of the tax involved. Manageable till here. You pay this much. By paying this, what benefit do you get? By paying this, you will be relieved from the prosecution. That is, imprisonment and fine will not become applicable on you. Manageable till here, everyone. Simple till here. Yes. Okay. So this was one thing which I wanted to tell you here in section number 138. Yes. So with this, my offences and penalties part is done. Okay. we have done majority of the penalties, all the important ones we have covered here. Whatever we have done, yes, whatever we have done in the last 30-35 minutes, please do this much. Okay, I know you can put 30 to 35 minutes, and if you read it once, it is sufficient. Yes, and then going on to the ethics part, this is not very important because you have already done all these things somewhere in the GST syllabus earlier. Now, do you recollect when we were claiming the amount of ITC at the time of taking the registration, means from unregistered to registered, or when we were getting voluntarily registered, or when we were switching to the regular tax paying status, or we were coming into the tax paying status? At that time we were taking some old ITC inputs which were purchased during the last 1 year, etc. Do you recollect that point that we had done into ITC? So at that time, do you recollect they were required to give a declaration in form ITC 01? Yes, about the taxes, about the stock details and the ITC that they are going to avail, etc. And there we had studied, already we have studied this point, that whenever the amount of ITC involved exceeds rupees 2 lakh, then that declaration needs to be certified by a chartered accountant or by a cost accountant. So what is the CA or the cost accountant going to do? The chartered accountant is required to examine. See, when he is going to sign that declaration, he will also have to check the books of accounts now, that whatever declaration is giving in form ITC 01, that is correct. Okay, so basically your ethics is from the point of view of this chartered accountant. Okay, then similarly, do you recollect in case of when we were apportioning the ITC, in case of merger, demerger, amalgamation, etc., when there was a transfer of assets as well as liability? Remember, we were apportioning the ITC in the ratio of assets transferred. So there also the chartered accountant was required to give a declaration that along with transfer of assets, do you recollect this? Along with transfer of assets, there is a transfer of liabilities also. So the role of chartered accountant was coming there also, right? That was required to be given in form GST ITC 02. Then whenever this you will study in the refunds chapter, refunds under GST, that whenever the applicant is claiming a refund of more than rupees 2 lakh, then the chartered accountant was required to give a declaration that there is no unjust enrichment. Remember, means the benefit has not been passed on to any other person, and this is the person who has borne the burden of the tax, and that's why he is claiming the refund. So here also CA certification was required. Okay, next one is again reversal of ITC. Reversal of ITC, do you recollect when you were coming into the non-tax paying status, means you were exiting from the tax paying status, or you were switching to the composition scheme, etc. Then whatever inputs you had in your stock, you had to reverse the ITC on that. If you have full details maintained with you, you will normally reverse the ITC. If you do not have the details maintained with you, you will reverse the ITC on the basis of market value, market price of those goods. So at that time, when you are doing the reversal on the basis of market price, then you will have to get it certified from a practicing chartered accountant that so and so inputs are having so and so amount of market value, and you are doing the reversal on that basis. So there the role of chartered accountant and the cost accountant came into picture. And the last place where the case of where the CA provision came into picture was the audit report. Audit report under section number 66. Do you recollect special audit? When the nature and complexity of the case was such that it requires the interference of the chartered accountant. Commissioner was appointing a chartered accountant or a cost accountant to do that audit. Remember that? So CA was doing that special audit, and whenever he is doing that special audit, he has to do it independently. That should be unbiased. He should be giving unbiased opinion. He should be exercising professional judgment and all those things. Yes, so this is also ethics. You need not study it separately if you have heard this particular lecture. Okay, so they have just compiled all the provisions where the role of chartered accountant was coming into picture. Yes, manageable till here. So this was all about your offences and penalties under GST and ethics under GST. Yes, so approximately in 45 minutes we have revised majority of the chapter. At least do this much, you will be safe. Yes, okay, so let's go ahead everyone. Okay, so let's start with the next chapter, that is miscellaneous provisions. In this chapter, basically, I have put literally the miscellaneous provisions, yes, which does not fit under any of the earlier chapters. I have put all the provisions here. Now, we are not doing all the sections from this particular chapter. We'll do a selected ones. So I'll go to the first section in this chapter, that is section number 148A, which was a newly inserted section, which is talking about the track and trace mechanism for certain goods. This was inserted with effect from 1st October 2025. So basically, this section is not made fully operational till now, because this mechanism which the government has introduced, this is applicable for certain goods, and for which goods, that is yet to be notified. Yes, so what is the government telling? That if you are dealing into such goods, okay, if you are dealing into some notified goods, then for you this track and trace mechanism will be applicable. What the government will tell is, the government will give you a system on which you are required to affix, okay, on which you are required to affix a unique identification marking. Just like maybe just like a QR code it can be there, or maybe just like a FASTag thing it will be there, or maybe some device, small device will be there, which you will have to affix on your goods, okay, on your goods or on your machinery, etc. And that particular device can fetch the information. Okay, just like we have got our FASTag is there, which is affixed on the vehicles, etc., or QR is there, or you know, the QR which is generated from which after generating our e-invoice, etc. So by affixing that on a piece of paper, etc., we can fetch information from that, right? So similarly here, the government is going to provide you a system for enabling affixation of unique identification marking and for electronic storage and access of information contained therein. Means on whichever goods or whichever machinery that marking is affixed, by scanning that or from that particular device, we can fetch the information about those particular goods. Maybe they will impose this on some goods, you know, on which tax evasion is generally done. Example, tobacco or high value goods, etc. Maybe they will notify those category of goods for which this track and trace mechanism is applicable. And then they will prescribe the unique identification marking for such goods, including the information to be recorded. Means, let's say for example, if they are telling every manufacturer of tobacco to affix some unique identification marking, so we will come to know the entire supply chain, from whom to whom it is getting sold, or is the tax being paid on that or not. Or maybe they will affix that particular thing on the machinery, and then they will collect the data, how much quantity of goods have been produced from this machinery, so that there is no tax evasion that is happening. So all this system will be provided by the government, which is to be followed by every person who will be dealing in those notified goods. Okay, but which goods, from when it will be applicable, etc., that is not yet prescribed till now. Okay, so that was one section. You just need to understand it once, that much is sufficient. Don't put too much of efforts behind it. Okay, another section that we need to do here is section number 158. So now this talks about disclosure of information by a public servant. Okay, now see, whatever returns, etc., we submit, whatever GST statements, etc., we submit. Example, GSTR1, GSTR3B, or any documents we submit, any evidences, etc., we submit, any records that we submit during any GST proceedings, etc. Whatever we submit, by default that is treated as confidential. Means GST department cannot simply make it public. Okay, whatever returns, etc., we submit, whatever details we give to them, that is normally considered as confidential. But there are certain exceptions. Okay, what are the exceptions here? In which circumstances can it be disclosed? So whenever any prosecution is done under any law, in that case it can be disclosed, or to carry out the objectives of the act, in that case they can disclose. Whenever the law needs to do any recovery against me, recovery from me, in that case they can disclose any information. Whenever some other department of the government asks for the information, then the GST department can disclose it. Whenever some other law asks it, then they can disclose it. Okay, whenever it is required to be disclosed in public interest, at that time they can disclose it. Okay, so normally conclusion here is, whatever information we give to them, they have to keep it confidential. By default they have to keep it confidential, but in some exceptional circumstances they can even disclose it. Okay, that was told in section number 158. Then going to the next section, that is section number 161. 161 talks about rectification of errors which is apparent from record. Okay, now whenever any particular authority, okay, under GST, whenever they are issuing any order, whenever they are passing any decision, whenever they are issuing any notice, whenever they are issuing any recovery certificate, etc., and if there is some mistake which is apparent from record, if there is no change of opinion, but by looking at that order we can identify that this is a clerical mistake that has happened, then rectification can be done. Either it can be done by that particular authority suo moto, or when someone tells to that GST officer that sir, there is a mistake. Okay, then in that case they can do the rectification. So when someone is bringing this notice, okay, either the department is doing suo moto or some GST officer is telling to the other officer that there is a mistake in your order, notice, etc., then they will do the rectification within a time period of 6 months. Means whenever that notice, etc., was issued, within 6 months it has to be notified. Or whenever the taxpayer is bringing it to the notice of the department that sir, there is a mistake, they have to bring it to their notice within a time period of 3 months, but rectification has to be completed within a time period of 6 months. So when the department has come to know on its own or from some other GST officer, they will rectify it within a time period of 6 months. But when I am going and telling it to the department, sir, there is a mistake, then I can go and tell within a time period of 3 months, but they will have to do the rectification within a total time period of 6 months from the date of passing of that particular order. Okay, and because of this rectification, if there is any increase in tax liability, we already know, then we have to give a reasonable opportunity of being heard before doing the rectification, right? Acha. Then the last two sections, that is section 170 and 171. 170 talks about rounding off of taxes. Rounding off of taxes, here they are telling that whatever is your tax, interest, penalty, fine, or any other sum, or if there is any refund or any other amount due, okay, under the law, then in such case rounding off has to be done. Okay, now when you're preparing the tax invoice, okay, while preparing the tax invoice, you write the value and then you calculate the tax. At that time, even if you don't do the rounding off, that is absolutely okay. But while you are paying this amount to the government, okay, while you are paying this amount to the government, at that time round off is required to be done. Okay, so in invoice you can write it in decimals, there is no restriction, but when you are paying this amount to the government, at that time you have to do the round off. How to do the round off? So whenever, see, when the tax amount is in whole numbers, no decimal, then you have to pay exactly the same amount. Example, if the tax amount is 1001, then pay 1001. Okay, but if there is some paisa involved, okay, then in such case, example, if it is 1001.20, for example, if it is this much, okay, then in that case, because this is less than 0.5, please round it off to the lower side. Means now the tax payable will be 1001. Okay, but if it is 1001.50 paise or 1001.90 paise, means it is 50 paise and above, then please round it off to the higher side, that is it will go to 1002 rupees. This is how you are required to do the round off while paying that amount, to the government. Manageable till here? Yes, and the last section, that is your anti-profiteering, that is section number 171. So now they are telling that whenever the government reduces any rates of taxes on goods and services, the government expects the businessmen to pass on this benefit to the ultimate customers. Okay, example, whenever any particular tax rate on any goods have been reduced, then can we say even the MRP of the product should go down? Yes, because MRP includes the taxes. So if the tax rate is going down, then the MRP should also come down. You should pass on that benefit to the ultimate customer. But if you're not passing on that benefit to the ultimate customer, means you are doing profiteering. Means whatever tax rate reduction has happened, you are not passing on that benefit to the customer. You're keeping that amount in your pocket. Okay, but you should not be doing it. And to hear such cases, the cases were going to the principal bench of the GST 80. Do you recollect that? Principal bench of GST 80 will hear such cases of anti-profiteering, and then it will instruct that particular company to reduce the prices and to pass on the benefit to the customers. Yes, so what is the work of the principal bench of the GST 80 here? It will determine whether reduction of tax benefit has been passed on to the customers or not. Then it will identify the taxpayers to whom the benefit was not passed on. Okay, it will order reduction in the prices. It will tell that company to return that amount to the recipient along with interest at the rate of 18%. See, if it was a B2B supply, okay, then we can identify the recipient. Na? So whatever benefit we did not pass on to the customer, we will now pass it on to our customer along with interest. Okay, if it was a B2C supply, then it is not possible to pass on that benefit to the customer now, later. So that amount should be transferred to the consumer welfare fund. Then on such companies who are indulged in such bad practices, we will impose penalty on them. On that penalty will be 10% of such profited amount. Profited amount means the amount which we did not pass it on to our customers, 10% of that will be levied as penalty. And still if they are not following the provisions, then that can even lead to cancellation of registration, and then they will furnish a report. The authority will furnish a performance report to the GST Council by 10th of the month succeeding every quarter. On every quarterly basis, by 10th of the next month, they will have to submit a report to the GST Council that this reduction was done by the GST department, this rate reduction was done by the GST department, so and so companies implemented the rate reduction, so and so companies did not implement, and we have taken so and so actions against these companies. Okay, this is the work of whom? This is the work of the principal bench of the GST 80. Yes, at least this much we can recollect. Yes, remember that in case of anti-profiteering, the amount of penalty applicable, is equal to 10% of the profited amount. I hope I am clear till here, everyone. Yes, so these provisions, at least these provisions you just completed in the miscellaneous provisions chapter, and that much should be sufficient. Yes, if you have time, if your attempt is later, etc., then you can just read the chapter once. But if your exams are now immediately, then in such cases, even if you do these many provisions, it will be sufficient. Yes, okay, so let's wind up this chapter and let's go to the next one. Okay, so let's start with the last chapter in this theory series about import and export under GST. So basically, this chapter is going to contain provisions relating to import and provisions relating to export, which we have studied at multiple places in multiple chapters, and here we are going to just combine and compile all of those together and we are going to study it. Yes, so now whatever section numbers etc. we are going to do in this chapter, that is going to come from the IGST law, because import and export, we know it is considered as an interstate supply in most of the cases. Right? Okay, so now first of all, under imports, okay, under imports, what have we studied? So the meaning of import is first of all bringing the goods into India. Do you recollect? Import of goods, bringing of goods into India will be considered as import. Similarly, whenever a SEZ, okay, whenever there is any supply of goods or services done to a SEZ unit or to a SEZ developer, even that is considered as done in the course of interstate trade or commerce, and on that also IGST is applicable. Okay, so whenever we are importing the goods, the importer is liable to pay two taxes. You must be remembering. Yes, importer will be liable to pay two taxes. One is the customs duty and another one is your IGST. Similarly, when we are importing any services, on that also, on that customs duty is not applicable, but GST will be applicable and the importer will be required to pay the same under reverse charge mechanism. Okay, OIDR services etc. we had studied about that we will discuss it specifically. Okay, so now let's discuss it one by one. First, we are talking about import of goods. Okay, so whenever you are importing any goods into India or you are bringing any goods into India, that is considered as import, and that is always considered as a interstate supply, right? That is always considered as interstate supply. So whenever the goods are coming in, can we say customs duty will be applicable? Your basic customs duty, social welfare surcharge, in some cases safeguard duty, anti-dumping duty, etc. Those will be applicable. Right, that is one duty that is applicable, and along with that even IGST is applicable whenever you are importing any goods. Right, but we had studied in one of the chapters earlier that whenever you are importing any intangible goods like your specified actionable claims, do you recollect? Whenever you are importing online money gaming or betting, gambling, etc. from the other country, that is kind of intangible. So on that customs duty is not applicable, but still IGST will be applicable. This is what we had studied. Now the next most important thing that we need to study here is on what value IGST will be applicable whenever you are importing any goods. Okay, so let's say whenever I am importing any goods, can we say we are required to file something called as bill of entry? Yes, we are required to file something called as bill of entry. So whenever you are importing the goods, you will be filing the bill of entry. In that bill of entry, you will be disclosing certain value, right? Some value of the goods will be disclosed. On that value, on that assessable value, you will be paying the customs duty. Yes, you will be paying the customs duty on some assessable value. So whatever is your assessable value, okay, whatever is your assessable value as per section number 14 of the Customs Act, means this valuation you are doing as per the customs law, on that you will be paying all the custom duty, okay, excluding IGST and GST compensations. Means you will be paying your basic custom duty, social welfare surcharge, anti-dumping duty, safeguard duty, whatever is applicable under the customs law, you will be paying that. So whatever is this value, that is value as per customs law plus the customs duties, all the types of customs duty, add up all that together. On this value you are required to pay. Okay, on this value you are required to pay the IGST. Okay, let's say the value as per customs law is, for example, 1 crore rupee. And on that you are paying different types of customs duty. Okay, multiple types of customs duty you are paying. Let's say, for example, okay, just for example I am taking, let's say that comes to 20 lakh. Okay, so the value becomes 1 crore 20 lakh rupees. On this 1 crore 20 lakh rupees, GST will be applicable. Yes, if GST compensation cess is applicable, then even that will be applicable on this same value. Okay, so basically whenever at the time of import customs duty is applicable, so first calculate the customs duty, add the total value, then calculate the IGST. Okay, more about this you will do when you do the customs valuation part. Yes, another point is, now let's say you must have heard about it. If you have not yet revised the customs, then you must have heard about it, that whenever you are importing the goods, either you can immediately clear the goods for home consumption, or you can deposit the goods in the custom bonded warehouse and later you can clear the goods for home consumption. Right, now see, whenever you are importing the goods and keeping it in the warehouse, when you're keeping it in the warehouse, at that time you are not required to pay the customs duty also, at that time you are not required to pay the IGST also. So ma'am, what is it, tax free? No, it is not tax free, but the tax is required to be paid when you later clear the goods for home consumption. Right, now listen, can we say tax will be paid later when you clear the goods for home consumption? Now that tax will be paid on what value? Okay, so customs duty will be paid on the value which will be done at the time of depositing the goods in the warehouse. Okay, see, when you are depositing the goods in the warehouse, you will be first filing an into bond bill of entry, and then later when you are clearing it for home consumption, you will be filing an ex bond bill of entry. So at the time of filing the into bond bill of entry, that is at the time of depositing the goods into the warehouse, you are required to do the valuation, because in that into bond bill of entry also you have to write the value. So on that value itself you are required to pay the custom duty, but at the later date, and after adding that value plus the customs duty, on that value you will calculate the IGST as we just now did above. Okay, the only difference here is when you are depositing the goods in the warehouse, as of now you will do the valuation, you will just do the valuation, you will show it in the into bond bill of entry, but the tax on that, the customs duty on that, the IGST on that will be paid at a later date when you are filing the ex bond bill of entry and when you are clearing the goods for home consumption. Right, acha, now do you recollect, we had studied this in the supply chapter, that whenever you are depositing the goods in the warehouse, can you even sell the warehouse goods? Means while the goods are kept in the warehouse, can you sell it to someone else by transfer of title? So answer is yes. Okay, without physical movement of goods, the goods can be sold while the goods are kept in the warehouse, and that transaction was not considered as a supply. Okay, so now let's say I had deposited the goods in the warehouse, but now after depositing the goods in the warehouse, I have sold it to you. Okay, so when I am selling it to you, on that transaction there is no GST applicable. But can we say later when you will clear those goods from the warehouse, at that time you will be liable to pay the customs duty also, plus you will be liable to pay the GST also. So when the other person other than the importer is clearing the goods from the warehouse, on what value is he required to pay the GST? So See, for the purpose of customs, he will again do the valuation as per section number 14. On that, he will calculate his basic custom duty, social welfare surcharge, etc. Okay, so now on what value is the GST required to be paid? So IGST will be paid either on the transaction value. Transaction value means at what price did I sell it to you in the warehouse, that transaction value, or the normal valuation, that is section 14 customs duty customs valuation plus all the customs duty, whichever is higher. So either you directly take the transaction value or you take the value as per section 14 and add all the customs duty. Out of these two, whichever is higher, on this value you are required to pay the IGST. This is on which goods? This is whenever you are clearing the warehoused goods. Yes. Acha, what if the goods are sold multiple times? What if the goods are sold multiple times in the warehouse? Means I sold it to you, then you sold it to someone else. Then here the valuation method will remain the same, but here in this transaction value you will take the latest transaction value. Let's say A sold it to B sold it to C sold it to D finally. So when at what price did C sell it to D, that will be taken as the transaction value. Manageable till here? Yes. Okay. Then after that, the next one, that is in case of high seas sales. Have you heard about high seas sales? That is when the goods were, you were importing the goods left the other country. Okay. And the goods have not yet reached India. Means the goods are in waters. Okay. The goods are in high seas. Okay. At that time, now I have sold, the original importer has sold the goods to someone else. So even this transaction was not considered as a supply. Right? Even this was not considered as a supply. Acha, now I have sold it to you. Okay, I have sold it to you by way of transfer of title. So now you are the person who will be required to pay the customs duty and the IGST on that. Right? So in this case, please remember, in case of high seas sale, whatever is the transaction price, okay, whatever is the assessable value of imported goods for levying the customs duty and IGST, that is determined on the basis of price paid by the last high seas sale buyer who files the bill of entry for home consumption. Now let's say I have sold it to you, okay, and you did not sell it to anyone else. So the transaction value, can I say you would have purchased it from me? Yes, and let's say I have sold it to you for 1 crore rupees. So can I say value of goods for you is going to be rupees 1 crore. That 1 crore you are going to disclose in the bill of entry. So on that 1 crore, customs duty is also applicable and your IGST will also be applicable. Okay, so your why here? Because for high seas sale they are telling that the value for the purpose of charging custom duty on imported goods is the value at the time of importation, and importation gets completed only once the bill of entry is filed. Can we say while filing the bill of entry you will be writing the transaction value in the bill of entry? Because you have not imported it, I had imported it. So for you the value is going to be 1 crore. So whatever value you are writing in your bill of entry, that will be the value. Okay, so assessable value for customs duty also and assessable value for IGST also is going to remain the same. That is whatever is the latest transaction value. Okay, let's say I was the importer, I sold it to you, you sold it to someone else, and later it went ahead. So whatever is the price paid by the last high seas sale buyer, last buyer, on that value customs duty will be applicable, and on that value your IGST will also be applicable. Right? Okay, then the next provision, that is talking about third country shipment. That is, I am sitting in India, I am purchasing some goods from US and I am selling it to UK. Okay, the goods have not at all touched into India. So we have studied this. Even this is not considered as a supply. We have already studied this in schedule number 3. If the goods are not touching India, then customs duty is also not applicable, plus IGST is also not applicable. Okay, then if there are any goods which are imported by SEZ, if there are any goods which are imported from SEZ, again they are telling, if SEZ is importing it for authorized operations, that is maybe for the purpose of doing further export only, then again it is exempted from whole of IGST, because SEZ is also considered as what? It is considered as if SEZ is situated outside India. So SEZ is also outside India and it is importing the goods also from outside India. So can we say mainly the transaction is happening outside India only? So they are telling it is totally exempted from IGST. Okay, similarly, when the goods are imported by the EOU, export oriented unit whose main work is to do export only. So when the goods are imported by EOU, that will be liable for customs duty. Okay, but when the goods are imported by 100% EOU, on that customs duty is not applicable, and IGST is also not applicable, subject to fulfillment of certain conditions. So basically full exemptions have been given to whom? Full exemptions have been given to 100% EOU. Okay, then the next one, that is import as baggage. Okay, what do you mean by import as baggage? That is whenever you are importing something, let's say you're coming from some other country and you're bringing your baggage also along with you, and plus you have done the shopping also from the other country, those goods also you're bringing into India. So that is considered as baggage, and that is taxable under customs law separately. You will study a different provision for that. Yes, you will study baggage provisions for that. So on baggage, IGST is never applicable, but customs duty will be applicable. Yes. Okay. And now I don't know if you have read it or not, but ICAI has issued a revised corrigendum, and ICAI is telling that on baggage, earlier what was the rate applicable? Earlier the rate applicable was 35% plus social welfare surcharge at the rate of 10%. Now amendment has been done and social welfare surcharge is removed. So now basically baggage is taxable at a flat rate of 35%. Okay, it is taxable now at the rate of flat 35%. Right, and plus there were certain specific items under baggage which were earlier taxable at the rate of 100%, like your firearms, cartridges more than 100, etc., 50, 100, etc., different numbers were there. Earlier those were taxable at 100%. Now it is taxable at the rate of 70%. Okay, so May 26 and onwards this amendment has been done. Okay, anyway, this I will be covering up separately when we do the customs provisions. Yes. Okay. Anyway, on baggage, what is the conclusion here? Customs duty is applicable, but IGST is not applicable. Yes. Then another one. Now here going on to the next part, that is import of services. Just now we discussed about import of goods. Now we are talking about import of services. So import of services is taxable. We have already studied in the supply chapter. Do you recollect 7.1b? Section number 7.1b, that is import of services. In the course of import of services for a consideration, whether or not in the course or furtherance of business, it will still be considered as supply, means it will be taxable. And similarly, if there is any importation of service happening from your establishment outside India or from a related person from outside India, even if it is for no consideration, but it is in the course or furtherance of business, then too it will be considered as a supply. And generally whenever there is any importation of service happening, the importer is required to pay the tax under reverse charge mechanism. Okay, acha. But in case of OIDR, there was an exception. Do you recollect about Netflix example that I have been given? That if OIDR services are imported by a NTOR, non-taxable online recipient, we are importing Netflix services, then obviously the unregistered person will not go and pay the tax. So in that case, the tax is applicable and under forward charge mechanism, that is Netflix. That is Netflix will have to get itself registered in India and it will have to pay the tax in India. Right? This is what we had already studied. And similarly, when 9.5 services were provided, 9.5 e-commerce operator services were provided, and if the eco was located outside India, so in 9.5 we know that eco was liable to pay the tax. So even if the eco is situated outside India, it will have to appoint an either eco, if it is having an office here in India, pay the tax in India. If you do not have an office, appoint a representative and then pay the tax in India. Okay, and for online money gaming also, we had studied in the place of supply chapter that for online money gaming, whenever we are importing online money gaming from a person located outside India, always FCM is applicable. Always FCM is applicable. That is, that person will have to get itself registered here in India for the purpose of paying the taxes. Yes, about eco I have just now told you. Manageable till here. Yes, and then about the registration provisions, they are telling us that whenever you are importer of goods, okay, you are not supplying the goods, but you are an importer of the goods, then in that case, you will be like compulsory registration is not applicable for you. Once your threshold limits gets exceeded, then you can get registered in India, okay, under GST. Okay, then similarly, what about import of exempted goods? If you are importing exempted goods and you are dealing only in exempt category of goods, means you are going to import exempted goods and you are supplying exempted goods, then again you are not liable for any compulsory registration. Then what about importer of services? So importer of services will have to pay the tax under reverse charge mechanism. So if he has to pay the tax under reverse charge mechanism, then registration provisions will be compulsorily applicable, right? Okay, and then what about the IGST paid on imported goods? So whatever taxes you are paying, whatever IGST you are paying at the time of import, that will be available to you as input tax credit. Okay, you will just get the credit of IGST, yeah? Not about the basic customs duty, social welfare. No. We are talking only about the ITC of GST. Okay, and similarly, what about the ITC of IGST paid on importation of services? Now, whenever you are importing any services, you have to pay the tax under reverse charge mechanism. First, pay the tax by cash, right? By using the electronic cash ledger, pay the tax, and immediately you can take the credit of the same. Manageable till here. Okay, so this was all about what? This was all about your imports. Okay, this was all about your imports. Now going on to the next one, that is exports. Now what do you mean by exports? Two things are covered under exports. One is export means sending the goods from India to the other country. Okay, that is taking the goods outside the country, that is coming under export. That is your physical export, that is actual exports. And the second one is any supplies done to SEZ. Okay, any supplies, if you are supplying something to SEZ, even that is considered as zero rated supply. Why? Because SEZ is considered, even if it is situated in India, but for the purpose of tax purpose, it is considered as if it is situated outside India. Yes. So in case of exports, what are they doing is, there are basically two options given under export. That is, whenever you are exporting any goods or services outside India, first option is they will tell you to pay the GST. Okay, on that, at the time of export, the exporter in India, okay, because the importer is outside India, you cannot collect IGST from him. So the exporter will have to pay the GST on that, and after paying the GST, later he can take the refund of the same. Okay, that we will study in the refunds under GST chapter. And alternatively, second option that is available is, let's say if I am exporting some goods or services, then I can simply sign the bond or the LUT. I can submit the bond or the LUT, letter of undertaking, without paying any taxes. I can export my goods or services. So these are the two options available under export. Yes, and physical exports, when you are actually exporting some goods or services outside India to a person outside India, that will also be considered as an export. That is also considered as a zero rated supply. I hope now you understand why it is called as a zero rated supply, because either you first pay the tax and then take the refund, or you don't pay the tax at all. So it is considered as zero rated supply. And please don't forget, zero rated supply is a part of taxable supply. Okay, it is not a part of exempt supply, it is a part of taxable supply. So basically you don't pay any taxes on your supply, but you are still eligible for the ITC on the same. Okay, but in case of exempt, what happens is you don't pay any tax on your output and you are not eligible to take the ITC also. But in case of exports, you don't pay any tax on your output, but you are still eligible to take the ITC. That's the reason it is considered as a taxable supply. Okay, so physical exports, actual exports done outside India is considered as zero rated, and plus any supply done to SEZ is also considered as zero rated. Manageable till here? Yes. Okay, now see, two options under zero rated, this we have already studied. Either you sign the bond or the LUT, and without payment of any taxes you can export, or alternatively you pay the tax first and then you take the refund from the government. Okay, this is what we have studied. Acha, yes, one very important point to be noted here is, see, whenever we import goods, at that time customs duty is applicable. Okay, and when you are exporting certain goods, okay, whenever you are exporting certain goods, on that export duty under customs is also applicable. Okay, there are certain goods which the government does not want you to export. Okay, on those goods the government will levy export duty under customs. So if you are exporting such goods on which export duty is applicable under customs, on that you are required to pay the IGST also, and you will not get any refund of the same. Okay, you will not get any GST benefit also on the same, because those are those goods on which the government wants to collect the taxes anyhow. That's why the government was collecting the export duty also, and the government is going to collect the GST also. Manageable till here. Okay, then here they have given you in your book, you can just read it once if you want. What is the difference between exempt supply and zero rated supply? So basically exempt supply means your nil rated supply, fully exempt by way of a notification, or non-taxable supply. Those three things were coming under exempt supply. But what do you mean by zero rated? Zero rated means export of goods and services or any supply done to SEZ unit or SEZ developer. Right, those are covered under zero rated. And very important here is, in case of exempt supply, on output there is no tax, so ITC is also not available on the inputs. Okay, but in case of zero rated, even if there is no tax on the outward supply, still ITC will be available. That is, on your inward supply, ITC will be available. That is the major difference. Okay, that is the major difference here. Okay, another point, when you are doing any zero rated supply, okay, even if you do for a taxable goods or even if you do for exempt goods, okay, it will always be considered as a taxable supply only. Okay, let's say this particular product is there. Normally on this the rate of GST is 0%, let's say for example. So normally this is nil rated. But if you are exporting this, it will still be considered as a taxable supply and not a nil rated supply. Please try to understand. So in case of zero rated, you will always issue a tax invoice. Whereas in case of exempt supply, you can never issue a tax invoice. You will have to issue a bill of supply only. Manageable till here? Yes. Okay. Then going to the last part. Check what is the last part here. Last part here is talking about export of goods or services. So whenever you are exporting any goods, okay, see there are multiple type of exports given here. Okay, normally what did I tell you for exports is, you have got two options. Either you first pay the IGST and then take the refund of the same, or alternatively you simply sign the bond or LUT and you need not pay any tax on that exports. Okay, now see the different types of export of goods that is given here. Can you see three types are given here? First one is your physical export, that is when you are actually exporting the goods outside India. That is, a customer is sitting outside India and you are exporting the goods to that particular person. Okay, so on that same, both the options will be available. That is, pay the IGST, take the refund, or don't pay the IGST and sign the bond or LUT. Okay, another type of export that is coming up here is deemed exports. Okay, means it is not actually an export, but it is deemed as an export. I'll tell you 4 transactions. Okay, 4 transactions are specifically deemed as exports. What are those 4 transactions? Okay, now let's say for example, you are this particular person. Okay, you are supplying your goods to an exporter. Okay, means this person is the one who is actually going to export the goods outside India, and then he is going to export the goods outside India. Can we say this transaction is actual export? Okay, there is an exporter who is going to send the goods outside India. This transaction is physical export. Okay, but I am not talking about the second transaction. I am talking about this first transaction. Can we say both of them are situated in India only? Yes. Now here they are telling that this person is supplying. First of all, this provision is applicable only for goods and not for services. Okay, now this person, let's call this person as A, B, and this C is the customer who is sitting outside India. Okay, now A is supplying some goods to B, and those goods are manufactured in India only. Okay, A is supplying some goods to B and those goods are manufactured here in India, and then B is going to sell the goods to C outside India. So can we say this supply will be considered as physical exports? So B will get the benefit of both the options. Okay, now here they are telling that when A is supplying these goods to B, which are ultimately going to get exported outside India, then even this transaction, the transaction between A to B, will be considered as deemed exports. Okay, this will be considered as deemed exports. Means it is going to be deemed as if it is an export, even though both of them are situated in India only. Okay, even if both are situated in India and B is going to pay the consideration to A in Indian currency only. Okay, higher chances is B will pay to A in Indian currency, or he may pay in convertible foreign currency, it doesn't matter. But even if both are situated here in India, still this transaction will be considered as deemed exports. Okay, ma'am, which transactions will be considered as deemed exports? Only these four. Okay, only these four will be considered as deemed exports. Now, when A is supplying the goods to B and B is going to export those goods outside India, A is supplying it to B against an advanced authorization. Okay, advanced authorization is one of the schemes under FTP, which we will study under FTP. Means B is going to get some benefit by doing this export to C. Okay, for that purpose, B decided to do the export to C. But if B wants to export to C, can we say B will also have to purchase it? So B is purchasing it from A under which scheme? Under the advanced authorization scheme. So therefore this transaction will be considered as deemed export. Okay, so here basically B is supplying it to C under advanced authorization scheme, then the earlier transaction will be considered as deemed export. Okay, similarly when A is supplying to B some capital goods, not normal goods but capital goods is being supplied to B under a scheme of FTP called as EPCG scheme, that is Export Promotion Capital Goods Scheme. B is supplying it to C, B is supplying it to C, B is going to export it to C under the EPCG scheme. For that B is purchasing it from A. Okay, so this transaction will be considered as deemed export transaction. Next one, similarly, if B is a EOU, okay, if B is the export oriented unit, that is A is supplying it to a EOU, means B is obviously going to export it. So this transaction between A and B will be considered as deemed export. And the last one, a very specific transaction, that is if A is a bank or PSU. Okay, if A is a bank or PSU and it is supplying gold, okay, means A is supplying gold to B and B is going to export it outside India. But A should be whom? A should be a bank or a PSU and B is further exporting it to C under advanced authorization. Then this transaction, the preceding transaction, that is between A and B, will be considered as deemed export. I hope I am very clear till here. Yes, this will be considered as what? This will be considered as deemed export. This A and B transaction will be considered as deemed export even if both of them are situated in India. Okay, now ma'am, how does the taxability happen? See, I am not talking about B and C transaction because B and C will be considered as physical export. I am talking about the A and B transaction that is considered as deemed export. So the transaction between A and B is considered as a regular transaction. Okay, it is a regular transaction, it is not a zero rated transaction. So on that tax will be applicable. Okay, on that tax will be applicable, but after paying the tax, your LUT and bond option is not available. Huh? In case of deemed export, LUT or bond option is not available at all for deemed export. So basically, when A is supplying it to B, tax will be charged. Okay, tax will be charged. That tax can be either paid by A from his own pocket or A can collect it from B and then pay it to the government. But tax has to be paid once to the government and later either A or B. Okay, whoever has borne the burden of the tax, either A or B can take the refund of the same. Okay, but bond or LUT option is not available in case of deemed export. Okay, so if A has borne the burden of tax from his pocket, he will pay the tax and later take the refund. If A has collected it from B and then paid it to the government, means B has borne the burden of the tax. So B will go and take the refund of tax from the government, but refund will be available in case of deemed exports. Am I clear till here? Yes, and the last type of export talks about your merchant export. Okay, very nice concept. Now, merchant export means, let's say there is a person called as manufacturer exporter. Okay, manufacturer exporter. Then there will be a person called as exporter, and then there is a customer who is sitting outside India. Okay, exporter is going to export the goods to the customer outside India. Exporter is going to export the goods to the customer outside India. This transaction is considered as physical export. We are not talking about this transaction at all. Okay, now this manufacturer exporter means he has got an expertise in manufacturing goods, make in India. Okay, what this person is going to do? Okay, now both of these are manufacturer exporter and the exporter. Both of them are situated in India only. Now, manufacturer exporter is going to do the manufacturing in India, and then he will be supplying the goods to the exporter, which the exporter is going to export it outside India. So here they are telling that this transaction will be considered as merchant export. Okay, this transaction will be considered as merchant export, and it comes with too many terms and conditions. That is here this manufacturer exporter, when he will manufacture the goods, he will issue the invoice to the exporter, and exporter will invoice it to the customer. But the delivery of the goods will be done by manufacturer exporter directly to the customs port. Means exporter will not take the delivery of the goods. Manufacturer exporter will manufacture the goods and directly deliver at the customs port from where it is going to be exported. Okay, acha, now listen. Manufacturer exporter is selling the goods to the merchant exporter. Right? Billing will be done. Payment will be done by the merchant exporter only, but delivery of the goods is directly done at the customs port, and there is a particular time period within which it should be exported from the port also. Okay, now ma'am, what about the GST provisions on this? Okay, now please try to understand here what about the GST provisions on this particular transaction. See, when the merchant exporter is selling it to the customer outside India, that is a physical export. So here both the options will be available. Physical export, the pay the GST, take the refund, or the bond LUT option. Now here what are they telling, that when the manufacturer exporter is exporting it to the merchant exporter, this will be taxable at a very low rate, that is 0.1%. Okay, total IGST of 0.1%, that is 0.1%, or if it is a CGST SGST transaction, then 0.05 plus 0.05. Okay, now this transaction is not considered as a export. Okay, this is not considered as an export. Okay, even if you call it as a merchant export, but this is normally taxable under GST. So when the manufacturer exporter is going to invoice the merchant exporter, on that he is going to charge 0.1% of GST. Okay, he will charge 0.1% of GST. And later when the merchant exporter is supplying it to the customer outside India, that is considered as a physical export. Okay, so can we say output tax payable? Output tax payable by this manufacturer exporter will be only 0.1% of the value. Yes, acha. For doing this manufacturing, can we say even he would have taken some inputs? Yes, and those inputs would be obviously at normal rates, na 5%, 18%, 28%, 40%, whatever. He would have purchased the inputs at a very high rate, but he is supplying the goods at 0.1%. So can we say here the concept of inverted duty structure will become applicable? That is, my inputs are coming at a very high rate, but my output is going at a very low rate. So here can we say manufacturer exporter will always be having some balance available in his electronic credit ledger, because his inputs are taxable at a very high rate. So in such cases, manufacturer exporter will be allowed to take the refund under inverted duty structure, because his output is taxable only at the rate of 0.1% and his inputs are coming at the normal rate. So he will always be having some refund to be taken, and that refund will be allowed to him under inverted duty structure. I hope I am very, very clear with this. Yes, now listen, please try to understand here, normally when we say under physical exports, both the option is available, but here for the purpose of merchant exporter, they are telling whenever the merchant exporter is exporting the goods outside India, here he can do it only under LUT or bond. Means merchant exporter need not pay any tax on his outward supply. Okay, on his outward supply he need not pay any tax. Simply by signing the LUT or bond, he can export the goods outside India. Are you clear with this? Yes, acha. Now think from this merchant exporter point of view. Can we say he is receiving his input at 0.1%, so he can take the ITC of the same. Okay, but can we say on his output there is no tax? So he will always have this ITC kept in his electronic credit ledger, so he can take the refund of this 0.1%. I am talking from this merchant exporter. See now, his purchases is coming at the rate of 0.1%, but his output is 0. So he will have this credit available with himself. He can take a refund of this credit. No problem in that. Okay, and this manufacturer exporter can also take the refund of his input tax credit. Yes, acha. Now the question, ma'am, why this is taxed at 0.1%? Why such a lower rate? Instead, they could have made it at 0%. Are Baba, if they would have made this as 0%, then can we say this would have become an exempt supply? And if this would have become an exempt supply, then no credit of ITC would have been available. So that's why they have just levied a nominal percentage of 0.1%. So now can we say if it is taxable at 0.1%, output is taxable? If output is taxable, then there will be no restriction on taking the ITC also. Manageable till here, everyone? Yes, done. We are done with export of goods. 3 type of export of goods are there. We have discussed about that. And the next one is export of services. So export of services we have already studied. Do you recollect the definition of export of services, which we had done it in the place of supply chapter? Export of services means exporter is situated in India. Okay, location of supplier is in India, location of recipient is outside India, place of supply is outside India, the consideration is received in freely convertible foreign exchange or INR whenever permitted by the RBI, and these two people should not be merely establishment of distinct persons. Do you recollect that? Then the transaction will be considered as export of service. And on export of services, normal your IGST will be applicable. You can pay the IGST and then you can take the refund of the same, or bond LUT option is still available. Right? Now 2 circulars which we need to do in case of export of services. Let's first do this. Those 2 persons. Let's say the exporter who is situated here in India and the customer who is situated outside India. One of the condition was these 2 people should not be merely establishment of distinct persons. Ma'am, what do you mean by that? Now, let's say the exporter is registered here in India under the Companies Act. Let's say under the Companies Act. Okay. And this person who is there outside India, let's say he is a related person of this exporter, but he has registered himself under that country's law. Okay. Let's say US. Let's say that person is situated outside India, and as per US company law, that person has registered himself there. Then these people cannot be considered as distinct persons. They are not merely establishment of distinct persons, means they are considered as 2 separate entities. They will be considered as 2 unrelated entities. And if this person is exporting something to the other person, it will be considered as normal export. Okay, but if this person is my related person and he is not registered as per the other country's law, okay, means he is just a branch of mine who is not establishing his entity outside India, or who is not registering his entity outside India, means he is my part only. And if he is my part only, then this transaction cannot be considered as export transaction. So you will not get the benefit of export. You will not get the benefit of export means you, after paying the GST, you will not get the refund of the same. Okay, that is your second circular that is coming up here. And then going to the next one, that is about subcontracting. Okay, subcontracting. Now listen, please try to understand this. Let's say I am situated here in India. Okay, and I am exporting certain services to a person situated to Mr. B. To B who is situated in US. Let's say we have decided for a consideration of 1 lakh US dollars. Okay, export of services. Acha. For this purpose, I needed help of some technology person. So I took the help from a US person. Only. Okay, I have given this work on subcontracting to a person in US. Let's say Mr. C. So basically, I wanted to provide some service to Mr. B. For that, I am taking help from Mr. C, and C is also situated in US. And for this, I am required to pay. Let's say 20,000 US dollars to Mr. C of US. Okay, now in this case, what is going to happen? Okay, what did I tell to Mr. B is, see, you are going to pay me 1 lakh US dollars. I have to pay 20,000 US dollars in US itself. So you give me a net amount of 80,000 US dollars and you pay 20,000 to Mr. C in US itself. Is this permitted or this is not permitted? Such type of financial transaction, yes, it is permitted. Okay, such net settlements, etc. are permitted. No problem in that. But what is the impact of GST on this? Okay, impact of GST is, please do not set off the transactions for the purpose of GST. That is, the transaction between me and Mr. B. Okay, this will be considered as export of services, that too for the entire 1 lakh US dollars. Okay, and secondly, can I say I have imported the services from Mr. C of US? So on this, I will have to pay the tax separately under reverse charge mechanism. Importation of services was liable for GST. So on this 20,000, I will have to pay the tax separately, and then I can take the credit of the same. Okay, so for financial settlement, if you want to set off the transactions, you can set off. But for the purpose of GST, these will be considered as two separate transactions. Manageable till here? Yes, so my circulars are done here, and then they have given you some common points for export of goods and services. That is, whenever you are supplying anything to SEZ or SEZ unit or SEZ developer, it is always considered as interstate supply. Okay, and even if you and the SEZ are situated within the same state, doesn't matter, it will always be considered as interstate supply. We have done one of the circulars related to that SEZ immovable property in place of supply chapter, that is getting repeated here. Okay, another one is if you are doing any transaction with EOU. Okay, if you are doing any transaction with EOU, then it is considered as deemed export. Do you recollect third point in that deemed export? Any supplies done to EOU will be considered as deemed exports, and on deemed exports, the tax is payable. And then either the supplier or the recipient can take the refund of the same. Then for merchant exports, we have already discussed it. Direct exports, we know two options are available, that is physical exports and bond LUT. And in case of Nepal and Bhutan, please try to understand, Nepal and Bhutan is situated outside India, so you can export the goods, but the consideration can be received in Indian currency also, because India has got a rupee trade deal with Nepal and Bhutan. So in such cases, even if you receive the consideration in Indian rupees, still it will be considered as an export. Manageable till here? Yes, so this was all about your import and export under GST. Yes, done. So with this we are done with the revision of all the small chapters. Yes, I know these small chapters, by the time you finish off the returns chapter under GST, after that you are anyway tired, because by this time you have covered your supply chapter, charge chapter, exemptions chapter, ITC chapter, registration, returns, all these big chapters you have completed by the time you reach returns chapter, right? I'll just show you the index. By the time you reach here, right? See this here it is written. By the time you reach this returns chapter, you're already tired, right? So what I have done is that was the entire purpose of doing this revision with you. The other chapters, okay, that is from job work, assessment and audit, advanced ruling, inspection, demands and recovery, liability, appeals and revision, offences and penalty, ethical aspects, miscellaneous provisions, and import and export under GST. Till here, basically your 10 chapters. Okay, 10 chapters. I know that students face issue here at the end moment, they tend to leave these chapters, but you don't have to do this. Yes, and that's why in this span of 4-5 hours, I've tried to revise all these chapters in an efficient manner. Please use this revision, and even before the exam you can use it. You can maybe listen it at 1.5x speed, etc. But please don't leave these chapters, because the question which comes from this chapter are going to be direct questions. Yes. Okay, I hope you liked this revision video. If you liked and if this was helpful for you, please like the video, share it with your friends, and do comment. It motivates me also and it makes me feel happier. Yes, thank you so much.